Okay.
Wonderful.
Okay, so here's what I'm going to do. After my presentation, just because I have never seen that before, I'm not going to shut it down because I know that sometimes when a presenter shuts it down, it shuts it down for everybody else. So I'm not going to do
No,
anything.
when you're done, I'll dismiss you. And if you'd like to come
Okay.
back in, you can. And everybody, I apologize for the little bit of a late start. Good morning and welcome to Traders Corner's summer special event. With the 4th of July just around the corner, we want to wish everyone a happy 4th. And on our panel today, we've handpicked 7 professional trading experts of the highest caliber. They've agreed to share their most consistent and profitable trading strategies with us today in a free online educational forum. In today's summit, we're going to learn a wide range of topics from how to accelerate your income to 6 or even 7 figures, trading only 2 hours a day, to how to use artificial intelligence in an automated strategy. So let's not waste any more time. Today's show is packed with great information. Our first presenter is a professional futures and equities trader with 20 plus years of trading experience in stocks and futures. She spent over a decade working in investment banking prior to becoming a full-time trader. She's the founder and CEO of TradeOutLoud.com, an international trading education and service company. She's an expert day trader, swing trader, and active investor with a precise approach to daily income style trading and wealth generation trading. Consistently delivering results in any market, here to present Accelerate Your Income to 6 or 7 figures, trading only 2 hours a day, is Anka Metcalf of Trade Out Loud. Welcome back to Traders Corner, Anka.
Thank you so much, Rob, for the presentation, and thank you for having me into this really super special 4th of July event. What better way to learn how to trade and literally declare your financial independence as well. So today's presentation is going to be about how you can get started trading, and I'm going to share with you a little bit of what I do. This is for generating income. So I'm day trading. So basically what I do is I go in the market and out of the market within minutes. So I'm going to share with you some trades that I did today, some trades that I did this week, and why not? I'm going to share the whole performance for this year, and you can find all the other performances on our website. So today's presentation is going to be about income generating, and we're talking about above average profits, and there's the catch to that. Trading only 2 hours a day. For example, today I was done literally in less than 15 minutes. I'm going to show you the trades a little bit later on. So thanks so much, Rob, for the presentation. I really don't think that I have much to add here other than the fact that I do specialize in high velocity moves for maximum gains and less trades. Now, let me ask you guys something. Would you rather be in 5 or 6 or 7 trades that you can take a day and make, for example, 5 to 7 or 10 points in trades? Or would you rather just go in one trade, have that deliver the maximum potential for you, and have the patience to wait for that setup? Or what is it going to be? So I'm all for just waiting for that one setup that can deliver rather than taking bits and pieces, 1 point here, 2 points there, 3 points here, losing some, winning some. And at the end of the day, and that's not even the problem at the end of the day, but when you're looking at the end of the month or at the end of the quarter or at the end of the year, guess what? Most of your profits have been already chewed up by the commissions, because in the futures market, you still have commissions and you still have to pay some commissions. All right. So I am the designer of an institutional proprietary trading system. And the reason why I'm saying is that I'm the designer is because, guys, I cannot take credit for technical analysis that has been around forever. And I do pay attention to price support resistance, but I do pay attention to confluence areas. So confluence areas are zones on the technical chart where you have 1 or 2 or 3 or 4, well, actually more than one. So you have 2 or 3 or more, the more the better, the merrier. Support zones or resistance areas at precise timings that are occurring in the market at specific price zones. We trade off specific price zones because, in fact, there are 4 specific price zones in which institutional traders scale in and out of trades. And of course, speaking of institutional traders, yes, algorithms respect those levels as well. And of course, chart synchronicity and divergency. And today was a perfect example. I have some charts ready for you guys where we had a very turbulent morning. So a lot of confusion was in the market. So for example, today NASDAQ was divergent and the S&P was divergent in comparison to the performance of Russell and the Dow. Russell and the Dow performed much better than NASDAQ and S&P. Right? So how do you select how to trade? We're going to talk about that a little bit later. So for those of you that want to get a hold of us, our website is TradeOutLoud.com, and you can find us on social media with the handle TradeOutLoud. Okay, so today we're going to talk about the basics that you think you know, but you really don't, and how to pre-plan for your trade before the New York trading session opens, just like I do. So I'm going to give you the step-by-step process of what I do every single morning. And whether you're trading stocks or futures, you can follow the same steps. The next thing that we're going to be discussing today is how to select your trade. This is the big thing, right? Because you don't want to trade something that is not moving. So for example, yesterday we had a trade in NASDAQ, which delivered 100 points. For those of you guys that don't know what 100 points in NASDAQ is, 1 point in NASDAQ is $20. So that's with one contract, $2,000 on that trade. Today, we made 10 points in RTY. 10 points in RTY. Do you guys know how much a point is? Well, that is $50. So you can imagine quick $500 in that as well. So one other thing that is very important is your time frame selection. What time frame do you need to focus on, especially when you're trading the open? Because yesterday my trade was based on the 15-minute chart, and today my base was based on the 1-minute chart. I'm going to show you how you can work those time frames up and the timings as well. So this presentation is for traders that really want to achieve above average gains. Power trading the futures market. Like I said, I specialize in the first 2 hours. I rarely am in a trade for 2-hour duration, so I like to keep those incisions very quick and brief, and I only trade basically for charts on a day-to-day basis. So I look at the futures stock indices, which is NASDAQ, the S&P 500, Dow, and Russell. So I have a very narrow selection criteria compared to stock trading. And don't think that I'm not loving stocks. I started my career in trading over 20 years ago in day trading. I dove from the investing field that I was trading, and I dove into day trading, which was a totally different animal, and you have to be super careful because you could definitely blow up your account if you don't know what you're doing, and you have to respect your rules because trading is a rule-based system. And I do this every single day. I have been doing it for over, I think, close to 10 years right now. I shifted towards futures day trading because I was day trading stocks. And yes, there's a lot more work going on when you're day trading stocks than when you're day trading futures, because your selection criteria is, let's say, 6,000 stocks. And then from those 6,000 stocks, you got to check and see which stocks are in a continuation pattern, which stocks are gapping up, which stocks are gapping down. You got to evaluate the indices and see what the sentiment is. You have to make sure that from those, let's say, watch list, you narrow down to, let's say 50 stocks, and then you narrow it down. And all this process is pre-market. So it's a little bit elaborate if you want to do it right by the book and respecting the rules of trading. So it's still a little bit labor intensive, and it could take about an hour and a half to 2 hours just before the market opens. With the futures market, my goodness, like if you wake me up at 4 o'clock in the morning and ask me what was the price the prior day, yes, you're only trading for charts, so you're always going to remember. So it becomes literally stress-free when you're only looking at 4 charts, and your analysis and your decision takes less than 10 minutes. So you could see that there's a huge difference from about 2 hours to about 5 to 10 minutes every single day. So bottom line, guys, why are we all here? Especially before the 4th of July. We want to declare our financial independence, and we love money, right? You're here because you want to make money. You want to either decide, you probably want to decide to take trading as, kind of like a side gig, or you want to go full throttle. You want to give up your job. You're tired of your 9 to 5. And you want to dive into trading. Well, in order to become a proficient trader, you need to have a lot of education, because you need to know exactly what you have to do in the market. But the one then the most important thing is that you need to love money. That's right. And repeat after me. You have to love money. So I love money. I admit out loud that I love money. I love to make money and I love to spend money. Now, here's the catch. If you are diving into a trade without knowing what you're doing and just gambling, literally, that's gambling, you don't love money because every risk in the market is a calculated risk. So we all desire financial freedom and we all want to make money, but are we capable of following the rules? But in reality, what is your account saying about you and about your performance and about your discipline and about your skill? So I think that now that we're heading into the long holiday weekend, it's really a great time to try to have that introspective look into your trading career and say, what have I done and how's that working for me? Where's my P&L? 6 months have gone by. I can't believe like we're in the middle of the year already. We still have 6 months. It's time to make a decision and it's time to make a difference. Because if you're doing the same thing over and over again, like Einstein was saying, that's the definition of insanity. You have to change something. However, if you're doing something, if you're on the right track and your performance is satisfactory, and it's actually growing your account, don't change a thing because what you're doing good, and maybe you just need some tweaks here and there, but you're on the right track. So here's the thing, in order to make more money, because we want to make more money, you have to become a master trader. You don't have to be, look, if you are trying and striving to be a break-even trader or to be an average trader, that's not going to cut it. You guys are competing with the best algorithms and the best traders in New York, on Wall Street, in Chicago, all over the world. So you have to become a master trader because you have to become as good as they are. And you need to gain confidence. Now, where's the confidence coming from? Confidence is coming from education, because when you're taking an educated decision, you're confident. So for example, if I see the price that is running into a confluence support, meaning let's say it's in an uptrend, right? So it has an trend line supporting it. It has, let's say, another moving average that is supporting it. It has, let's say, another minor support that is holding it and proving that it's, literally certifying that it's going to go higher. I am going to make a confident decision. So I am going to risk my allocated risk amount, my 1R into that decision. So that confidence comes from education. You have to be very accurate in your trading decisions, especially when you're day trading. When you're swing trading, you have a little bit of wiggle room, but when you're day trading, you have to be very precise. My entries are very sharp, or laser sharp, and to the tick. Now, you have to be that way in order to get the max returns on your investment, on your risk every single day. My risk is my risk is the pre-planned risk. For example, I never risk more than 1R on a trade. I never risk, for example, more than 1% on each and every single trade. I only take 3 to 4 trades in a day. So I have a rule-based system. And also you have to be disciplined. You have to be disciplined in order to follow your rules, right? Because sometimes we get caught in the moment and, we find ourselves, chasing something, chasing price. That's never a good idea. Because when you're chasing, what happens? Think about it. Just try to visualize chasing. When you're chasing something, you're behind something or someone or price, right? So you're always behind. The goal of trading is to be in sync with the momentum move, with the institutional power push, especially the one that is happening in the first hour of the morning. And then you have to be patient. Patience comes from education. If you're educated and in trading, you know what to look for, and you have so patience comes from within, because if you're seeing a pattern that does not meet your trading criteria and does not fit your trading plan, then you should not take it, and you should wait until there is a pattern that emerges from the technical structure of the chart that will enable you to apply your plan. So patience, there's a very strong correlation between patience and what's happening into the market and your market knowledge. And of course, control. You need to be in control at all times. And being in control, again, comes back from the education, having a well-rounded trading plan where you know exactly what you need to do. So for example, that planning needs to be for example, done to the very T, as knowing where your entry is, knowing where your stop is, knowing what the size you're going to be using based upon the difference between the entry and the stop, according to your account size, according to your risk per trade, and then knowing where the targets are. So all of this is pre-planning before the trade. So traders that say that they don't have the patience, then they just got it with, let's say, one contract or two contracts or 100 shares or 500 or 5,000, whatever their budget is, right? They are not respecting their plan and they're not respecting the market rules. So there's not going to be any kind of surprise if they're going to be run, excuse me, run down by the market. And of course, the more you have all this information and the more you have a really good rounded trading plan, your trading becomes stress-free. I've been trading stress-free literally my whole entire career because I was smart enough not to dive into trading and not to give up my job until I really gained the trading education that I needed to make it in trading. And again, you know, then if you're stress-free, you become happy, you become fulfilled, right? So you need to know when to trade and when to sit on your hands. There are certain market environments where they don't allow you, for example, to be extra risky on a trade. So for example, today, NASDAQ, like I said, I'm going to share some charts with you guys. For example, NASDAQ and S&P did not have any kind of performance today because they didn't have the proper structure. So you need to know how to trade and what to trade. You need to know how to handle any kind of market condition, because let's face it, if there is a market condition that is not appropriate for trading because of the parameters are not there, let's say the volume is not there, and keep in mind that the volume is going to continue to wind down as we're going into the long holiday weekend. Don't forget that on Monday we have a short trading day. The markets, the US markets are going to close at 12 o'clock or 1 o'clock. And then we have the 4th that is off. So many traders are not going to be trading on Monday, myself included. So I'm not trading thin markets because I want the institutional power push. So you need to know exactly how to handle any kind of market condition, when to get into a trade and when not to get into a trade. When the price action is choppy, when the price action is compacted, it's trading within inside a range, for example, in a heavy duty range, then don't trade it. Wait until it breaks out or breaks down. All right. So I promised some charts with you guys, and I'm going to show you exactly what we traded today. We traded today and we picked up Russell from 80. And we had a target all the way into the 94. We took profit at 90. So we got this sweet spot right here. You're never going to pick the tops, but you're going to get the core of the movement. So you can see how different, for example, Russell is in comparison to NASDAQ. NASDAQ is divergent because from the news that we had pre-market at 8:30, you can see here that we pretty much started to come into NASDAQ. Now it's popping up a little bit, but we started to come in. Look at the price action in Russell. Russell came in, just varied a little, never challenged a prior low within the structure of the chart and started igniting higher. So it was the only, and because the context was favorable for that, the daily chart was pointing out towards a continuation higher. In NASDAQ, it was trading within yesterday's parameters. So you can see here that once you have this kind of divergency between the price movement and the indices, trading becomes a lot more difficult. Trading is easy when you have all the indices just snapping higher or moving lower. That is called synchronicity. So they're all moving in sync. They're all chugging along higher, or they're all pushing lower. Whenever you have this kind of divergency, when you have one index that is lower and one index that is higher, and in fact, YM followed along the price action movement in RTY, right, and Russell, and you can see here we had perfect synchronicity in these two indices, and then we had the big slop, which was in the S&P 500, which was created, which had a lot of topping tails and so on and so forth. So S&P had a lot of fighting to do before it got into that explosive bullish above level, which is not even in the case right now. And then again here, I highlighted in the trading room that after a really massive move to the downside that we had in gold, and we were in two-digit negative in gold before the market opened. Gold was, not us. we've noticed a very strong rotational and squeeze pattern from the 06, 07 all the way to 16. So that's another 10 points right here. And these are velocity moves. All right, so just to give you a little bit of idea of the style that I'm trading and how focused I am on what to trade based on the macro analysis, and I do the macro analysis on all the indexes. I go from the highest time frame to the smallest time frame and then evaluate what kind of reaction we can have and which index is going to start moving. Because yesterday we had, like I said, we caught 100 points in NASDAQ. And that is when we didn't really have a lot of movement in the rest of the indices. So you can see how my selection criteria gears me towards the index that is going to be on move. And that is probably for 98% of the time. You're going to see that we're going to nail it because we have a very strict selection criteria that allows us to see what will be in play. Trading is a rule-based system. Like I said many times, it's a rule-based system. You have to do the analysis. You have to look for velocity zones on old time frames. You have to look for room to run because sometimes if you're taking a trade and you say, hey, I'm only going to trade the mini S&P because that's what the majority of futures traders do, just beginners, for example, a very astute trader will go towards the index that has the movement into it, right? So I wouldn't make any money. I would have not have made any money yesterday and today. I was just would be like a sitting duck in mini S&P where I had massive moves going on in NASDAQ and the Dow and Russell. So have a pool of indices that you can form your selection from. Don't have the tunnel vision and say, oh, I'm only, you know, like a zombie vision, say, oh my God, I'm only trading the mini S&P. All right. So finding highest trades is about learning how to analyze multi-time frames. So multi-time frames are going to show you what is going to be in play that day. We actually teach traders in our courses just to look at one candlestick on one chart and determine the bias for the day, bullish or bearish. So that's super simple to analyze if you have that information handy. And then all you have to do is wait for a setup so you can calculate your risk for the trade, and especially you can calculate your targets. Everything, by the way, is calculated pre-market, and all we have to do at the open is literally you know, just sit back, relax, and wait for one of the strategies to fall into place. I teach 10 trading strategies in my course, by the way, and most often we use just probably 2 or 3 strategies into our system that I'm going to be sharing with you today. So it's all about then fine and precise execution because the entry is not negotiable. We're getting in with confirmation, so we have strict criteria for selecting. We actually calculate the entry, and you don't have to be a math whiz. It's super easy to look at. You just put your cursor over, let's say, a group of candles or a candle, and you determine the precise entry that you need to have for your trade, and you're going to see that that is going to be the trigger point, which is going to ignite the move, and you're going to win more times than you lose. In fact, I do have a win ratio of over 80% that I'm going to share with you. I'm going to share with you my portfolio. And you need to have really good money management skills. So it's one thing, you know, to have a trade. And by the way, if you have a trade and it hits the stop, that's not a big deal, right? It's just a little trade in an ocean of trades, and it's only 1 hour down. It's not devastating. One of the things that I wanted to touch upon today is the fact that many traders come into the futures market not knowing how to position size. That for the life of them, they have no idea how to position size, or they never want to respect it, or they simply don't know how to do that. Well, stock traders, options traders, you know, most of them know. I would say in a proportion of about 60% know. Well, in the futures market is a disaster because only probably about 5% of the traders know how to position size. Now you have micros that are available and you can position size so much better, especially in cases where you have wider volatility and you have really wide stops. So the reality is that I'm trying to say here and, you know, just prove my point is that whatever your stop is, whether you have a 2-point stop or a 20-point stop, it really doesn't matter. It matters how much you can fit into your size, whether full size or micro. And if you have let's say an account small enough that cannot accommodate that, you should never take the trade. And then again, you should have a really good pre-planned management plan for your trades, knowing how to trail the trade. So once you hit target one, you know exactly what you need to do, whether you want to scale out a little bit or half or whatever the case may be, whatever makes you comfortable. I do have strict guiding rules in my system that I share with my traders every single time. And then you need to know, okay, so what am I going to do? So when I hit my target one, what am I going to do with my stop? Am I going to raise my stop? I'm going to leave my stop the same. So you need to know exactly what you need to do in advance. I have in my trading plan everything. So I know exactly when I hit target one and what to do with my stop. When I hit target two, I know exactly what I need to do. I know how to raise the stop. I know if I'm going to take profits or not. And I'm going to take diligent decision judging by the price action, because sometimes you're getting different price actions. Sometimes you're getting like, just price action galore when the price action is having a really easy follow through. And then it's easier to actually hold on to your whole entire position than scaling. But if you're having more of a chunky, choppy day, then it's really a great idea to take profits into targets. And again, patience to wait until there's a pattern that it's just so irresistible that you can't stand the thought of not taking it. So again, why are we all here? Because we want to make more money, and you cannot make more money without knowing what you need to do into the market. Whether you want to supplement your income, create income, or wealth, trading is literally a recession-proof skill, pandemic-proof. It has proven we thrived. In fact, 2020 was my best year ever in trading. I know it's sad, and some people say, "Oh my God, I lost my job. I did this and that." It's, you know what? I feel sorry, but again, for traders and for astute traders, it was a gold mine. It was my best performance ever, and I've been trading for over 20 years. And again, it's economic crisis-proof skill. And you only need to learn it once, guys. You only need to dedicate your time and your effort to learn it once. And it's just getting better and better, because you're just going to add on to your basis of your knowledge. And it's just like fine wine. It just gets better and better. Now, I want to share with you, for those of you guys in here that are only stock traders, you guys know who you are. And remember, I came from the stock trading field into the futures field, and I'm going to share with you the reason why. First of all, time and money efficiency with futures. That's what you get. So for example, this is the advantage of trading futures. So for example, let's say a trader wants to trade the Qs or the SPYs or whatever, whatever it is that you want to trade in major ETFs. So in this example, I'm using the Qs. And let's say the Qs are priced at $300. We chose some even prices. You need about $16,000 in buying power to buy 100 shares. And that is, you need to have a $30,000 account, because you guys know the day trading pattern rule. You need to have a $25,000 account, right? And if you lose a penny, then your whole day trading status out the door. So you need to start basically with $30,000 or more. So let's say on a $30,000, you're risking a buying power of $16,000. So that's kind of half, right? And if the price goes up 50 cents, you're going to make $50. And you guys know that prices in stocks do not accelerate as much. So for each cent, you're going to make $1. Now, if a trader wants to trade, for example, NASDAQ, I gave you that example with us. We traded NASDAQ for 100 points yesterday. And let's say NASDAQ is priced at 15,100, which is not far from truth. It's actually 15,111 right now. The trader needs about $17,000 in buying power to buy one contract. And if the price goes down 50 points, then guess what? You're going to make $1,000, and that is comparison to $50. And keep in mind, the risk is going to be the same. I repeat, the risk is going to be the same. So each point is 20 bucks. All right, so let's take a look here. I'm not going to talk about the strategy that we used here, but you can see here that we had a momentum for higher. It was in our trading plan to take this trade and was lined up perfectly. It was into a timing that was desirable for us, and we got in, let's say for this example, with 100 shares, you can see the buying power in effect, 15,400, and into the end of the day, so in a couple of hours from 1 o'clock to, well, actually 3 hours from 1 o'clock to 4 o'clock, we make $300. So keep it in mind, 1 o'clock to 3 o'clock, okay? Typically my moves are very quick, so I typically don't stay this long. This is a trend day that we analyze here, was the beginning of this year. And this was for example purposes, so we took it side by side so traders can see what's happening. Okay, now this is NASDAQ, same duration. This is the entry right here. It's still into 1 o'clock. You can see the pattern and the chart is very, very similar. In fact, it's a carbon copy of the prior, right? This is the Qs and this is NASDAQ futures. And from 1 o'clock into the close at 4 o'clock, we made $2,480. So I'm going to ask you right now, would you rather stay in the trade for 3 hours and make $300, which averages like $100 an hour? Or would you rather make $2,400? Okay, so here's another example. You have a very small account. Let's say you have a $7,000 account. That's considered anything that is below 10,000. It's really small account. So for example, this is the buying power and effect, $1,700. And you can see this is the entry right here. So from 1 o'clock, that's if you have a small account, into the end of the day trading micros. A micro is 10th the size. It's a full size contract. That's $246. It's still way more. So this example is striking because the power of the buying power in effect here is $1,700, and the buying power here in the Qs is 15,400. With 15,400, you're making $300, but in the futures market with $1,700, you're making $250. Okay, and the examples go on. This is the SPYs. These are the SPYs right here. This is the same entry here at 1 o'clock going into the close, $262 with 20,000. This is an example in ES. By the way, this is kind of messed up because I was already in the trade and I didn't have a really good example. But anyways, $3,600 on the day. This is a little swing from a prior day. And this is the micros, right? Again, with a very tiny baby account, you're using $1,100 in buying power and you're making $127. So I hope this example was very, very good for you. So we're all here to learn about financial independence, but let's focus a little bit about timing, right? So market timing, market opens at 9:30, right? And my focus is between 9:30 and 10:30. This is my market timing, 9:30, 10 o'clock, 10:30. So my decisions are coming very shortly from 9:30. In fact, today we took the trade at 9:32, okay? 10 o'clock and 10:30. And time frames that I focused on to 2 minute, 5 minute, and 15 minute. I focused on basically at the open. I have two major patterns depending on the trend. I have the pullback buy and the pullback sell with strict entry criteria, or breakouts and breakdowns. Like I said, depending upon the trade, my execution times are, and I have to add here, we do have a strategy that I'll be teaching in our course to execute trades at 9:32. Not every day you get to execute trades at 9:32. 9:35, 9:45, 10 o'clock, and 10:30. And this is measuring the setup. So you have to determine your entry, stop, target, risk, and position sizing. This is literally my trading plan in one slide about the entry and what I focused on. So pre-market game planning is all about the market rhythm and how the market breathes, inhales, and exhales. And we've noticed that today Russell was making higher highs and higher lows, where NASDAQ, after the data that came in at 8:30, just violated a prior overnight low and yesterday's low, so it started to dump a little bit more. And this was just probably an algo sell. Remember that tomorrow trading is going to be very difficult because it's calibration day. It's the last day of the month, so it's going to be a lot of chop into the market. But typically with trades, this is the pattern that you want to see. You want to see higher highs and higher lows. And typically if you catch a trade like we did at 9:30, you could be done at 9:45 or 10 o'clock. 9:45 is the first major reversal time in the market. Then you have the second reversal time in the market, which is at 10 o'clock. When you're getting a choppier market, this is NASDAQ right here. It actually came a little bit lower. It tends to take a little bit more time to calibrate, but surprise, surprise, right now NASDAQ is back very close to the highs from the New York trading session. Like I said in the trading room today, NASDAQ is not shortable and it should not be considered a short at this point because it's just having some institutional calibration. So what you need to pay attention to is you have to check your economic releases. You have to check earnings. Now earnings season is really winding down. I'm really looking forward to July because earnings season is going to start the second week of July. Always do your pre-market game plan and don't just wake up, pop up your platform and then just hit the buy button or the sell button. Do a really thorough game plan because that's where the edge is. Multiple time frame alignment, top-down analysis is a must. I don't care if you're a tick trader or a 1 minute trader, you need to analyze everything. Zoom into the technical execution chart because every time it's different. Sometimes patterns are forming on the 1 minute chart, sometimes are forming on the 5 minute, or sometimes even higher on the 30 minute, like was the case with gold today. Determine your key inflection points on the charts, determine your key trigger locations, and determine the relative strength and weakness in indices, just like you do with synchronicity and divergency that we noticed today. Earnings reports. So again, we're just about here in the 000 area, so you have to pay attention to earnings season when it starts. Again, so time frames and how I use them. I use the 1 minute chart from 9:30 to about 10 o'clock, and I use the 1 and 2 minute in correlation. And this is where I based my decision in Russell this morning. Yesterday, my decision came a little bit later, so came between actually was closer to 10:15 or so. So my decision was in correlation 5 with the 15. And you can see here the timing. And then on the 5 minute, get back to the 5 minute after 2 o'clock, after the doldrums are over. All right, in the Asian session and the London session, my focus is only on the 1H and the 4H charts. And then if you zoom into the London session, if you're residing anywhere in Europe, or even Australia or Asia and want to trade the European Open, you can dive into the 15 minute. That is the most appropriate. All right, so do you want to learn how to trade and find winning trades? Roll up your sleeves and we can learn, I can teach you how to do it. I've been doing this for over 20 years, super successfully. So we teach and trade live every single day, a highly successful technical system that trades in sync. We don't follow institutions, we trade in sync with them. We read where they, what their intention is. Because I have the same level of education as any institutional trader out there. I was trained by institutional traders, and that's where my edge is from. And we profit on the most volatile part of the day, the first 2 hours, and we profit from momentum moves at specific times, locations, and precise technical patterns, just like algos do. You can see the similarity. Our method overrides any kind of news event, artificial indicators, dark pools, earnings, etc. So trading is like learning how to drive. At the beginning, it can be super overwhelming because you have to keep track of the gas and mirrors so you don't crash. But once you get used to it all, you don't have to worry. All you have to worry about is getting to your destination because it becomes second nature. The same thing about trading. You have to keep track of your entry, right? That's your gas pedal, your stop, your brakes, right? Market conditions, your mirrors and stuff, and take profit and the stop out area, right? Once you get used to it all, it becomes instinctive in trading as well. Like you can wake me in the middle of the night, show me a chart, and I'm going to tell you if there's a setup or not, or if what the entry, what's the stop, and what the targets are. So it becomes so second nature. So wouldn't it be helpful if you could have someone teach you all this? Well, I can show you what I'm doing. I'm not teaching in the trading room, but you can learn from what I'm doing. I do run the futures trading room. I have been doing this since 2017. Our company has been around since 2010, and this is the newest program. Since I shifted, I got a lot of requests, like, because I gave up day trading stocks and I was just day trading futures, and my traders were like, oh, can you teach us how to do it? And can you have a room? It's like, okay. I really didn't want to do it because I only trade, like I say, 15 minutes, 20 minutes, and then I'm done. So I try to narrow it down into 2 hours. But we do have real-time precise trading. You're going to hear the full-blown market analysis and the active institutional levels and the algo levels on which the price is going to react within that day. You're going to be shocked that it's going to react 100% to what we say in the pre-market game plan. We do call exact entry stops targets. I do call them before it happens. I type it in the room, so you are going to have a lot of time to place in your order. It's not going to be like, oh my gosh, this is the entry, boom, you got to hit it now, or exit now, exit now. No, it's going to be like, it's super laid back. Real-time response to all your questions. You have the live screen share lectures and mentoring. Private feed for traders that continue outside of the trading room hours. And if you guys want to join, we're open Monday through Friday from 9 o'clock to 11:30. The membership is $299, and that's a really small price to pay for the performance that we literally have. All right, so I just want to show you very, very quickly right here, because my timing is up, so you guys know where to head. It's It's basically on our website. It is TradeOutLoud.com. This is our website, and you go under services. This is the trading room tab, and you scroll to the very bottom. And also at the very bottom, you guys can see that we do have the performance portfolio, because I don't believe in following someone without having a clear performance. And that's not only, and by the way, this is our, you also get access in the trading room to this Google Sheet, which is the performance portfolio plus, where you have all our trades, all the trades that were called with the entry, the stops, and the targets, and the comments on here. And you can see every single month. You could see it up to date. Today we had Russell. You can see it right here for 10 points. We had 100 points, and you can see here very, very few losses. What's very interesting is that this is my personal performance with my position size. I have a size of $5,000 that I risk for each and every single trade, and these are my results. You're going to see like the January, you're going to see February, all my results. March, only positive, May, and here's the June. And in fact, here's the June. Sorry, that's May. Here's June right here, and you can see here, this is my RTY trade. Okay, this is my RTY. I actually scaled out at 85, half at 85. I had 20 contracts. I scaled half at 85 and half at 90. That's why you see the result here like this. And again, with the NASDAQ trade where we made 100 points, I scaled as well into our target. So this is the performance, year-to-date performance. This is January. You can see here, January 4th, when the trading year opened, and this is where we are right now. So like I said, I use $5,000 on each of my trades, and right now my account is over 800,000. By the way, I am using an account that is $500,000, and I more than doubled it. So right now we're going towards tripling the account, and it's very normal to do that in futures if you know what you're doing and have the proper trading. So once again, if you guys are interested, like I said, I do run the trading room. If you guys want to join, head on to our website. This is our website, TradeOutLoud.com. Just hover here over services, hit the tab. We also have a one-day pass. We have a weekly pass. If you just want to test it out and say, hey, do I really want to make money, or do I want to like continue to wing it? So here's the one-day pass, 5-day pass. And by the way, next week we're only going to be open from Wednesday, Thursday, or Thursday and Friday or something like that, because it's the long holiday weekend. So it's not a great idea. But if you want to test it out tomorrow is going to be open, and then next week we're going to have a couple of days that are going to be open. So thanks so much, Rob, for having me here today. Really appreciate it, and hope to be back soon with you guys. Have a great 4th of July, everybody.
Thank you so much, Anka. Oh my God, that is so impressive. Trading just 2 hours or less and generating a 6 or 7 figure income sounds very attractive. Thank you so much for joining us, ladies and gentlemen. That was Mrs. Anka Metcalf of Trade Out Loud. And if you're interested in trading less than 2 hours a day and taking home 6 or 7 figure trading profits in the market, then look no further. You can find Anka at TradeOutLoud.com, or just click the link in the chat box. Great presentation, Anka. Please come back and see us again on Trader Corner. Thank you for taking the time out of your day to join us, and happy 4th, honey. Oh, ladies and gentlemen, I told you at the top of the show that we had a great lineup, and our next presenter is no exception. He has been serving the financial industry span for more than 14 years. His strongest suit is trading seasonality, and he applies his extensive knowledge of seasonality in every distinctive line of trade. Fascinated with the idea of the seasonal concept and extensive backtesting, he serves with an aim to create results with greater than 90% probability of success. He excels in the art of establishing solid risk patterns and high profit ratios. Here to present day trading using Heikin-Ashi candles is Dr. Keith Wade of Seasonal Trader Pro. Welcome back to Trader's Corner, Dr. Keith.
Excellent. Thank you very much. Can you hear me okay?
Loud and clear, and see your screen.
Awesome. Thank you very much, Rob. I appreciate it. Welcome, everybody, and happy pre-holiday, right? Everyone's probably getting ready for a long weekend, which is always fun what I like to do on those weekends when I'm either spending time with my family and riding our horses, or studying some charts. So we'll see what I do this weekend. But those of you that don't know me, a little bit about myself. I have my PhD in finance. I used to teach more than I do now, just because most of my stuff is trading. Most of my time spent is with family and trading. I've been trading though futures, forex, and stocks since 2006. I do live in North Carolina. We moved here about 3 years ago. Originally grew up in Michigan, spent a few years in Oregon and Bend in the high desert, and then decided to move our family closer to my in-laws in Florida. So it was a good place, with main requirement being horse property. And I am president of SeasonalTraderPro.com. So before we get started though, again, just always important to show you the risk here. You should never trade with money you can't afford to lose, not only from just a pure financial standpoint, but from a risk tolerance and from perspective of if you have money that you're trying to hold on to feed your family, and then you trade it, you're usually not going to have the mental stability to go through with the trade. So you might get into a trade and get out, where if you would have let it kept going, for example, then you would have potentially made more money. So it's really important to go over that and make sure you work with your financial advisors and do what's right. So today I am going to focus on Heikin-Ashi. A lot of the stuff I do is seasonality. Absolutely. I've been, again, looking at data for years and years, but today I'm going to focus on Heikin-Ashi candles, because one of the things that I love to be able to teach this to everyone is it doesn't matter if you're trading off the 1 minute chart or the monthly chart. Okay, you can use this technique. So my goal is always to give the audience something to think about, something to use, and then I do have a special offer at the end today. So one of the famous quotes that's out there that I think is really fits my trading, okay, and my personality, is if you can't explain it simply, you don't understand it well enough. And as you know, as you watch, probably some of you hundreds of presentations throughout the year, everyone does things differently. And what I realized for me, with my education background, teaching students, and then trading myself, if it's super complicated, it's probably not going to work. And so when you try to teach something, some will actually go out there and make it complicated to try to really justify their existence. And what I'm going to show you today is, again, a real simple system, but highly effective if you use it right. And with that, there's specific rules. So you'll be able to look at something and say, I wonder if Dr. Keith, would have taken this trade, and when he would have exited the trade. And if I'd taken the trade following my own rules, you would know exactly when I enter and when I exit. All right, question for all of you. Do you have specific trading rules? You can type in a yes or a no. Again, it's not to criticize. It's just to get a kind of a perspective on, how many of you have specific rules, okay? Some of you do, right? Some of you don't. It's very common, by the way, not to have rules. People just get in and then they just kind of hope that as it goes higher and they get out. And if it goes against them, then at times, what do? Well, then they just hope it comes back and not blow out an account, right? So you got to be very careful with that. But it looks like, quite a few of you have. You kind of, yeah, exactly, Ricky. And again, being honest with yourself is the start of trading, okay? If you're not honest with yourself, right, you're all in it for one reason, to make some money, and you have to be honest with yourself. That's great. All right, second question. Do you use Heikin-Ashi? Does anybody use Heikin-Ashi? Yes or no? Ricky. All right, so some do and some don't. Excellent. Some of this might be foreign to you, which again, it'll be super easy to understand by the end of this presentation. Others, even if you have used it, I'm going to show you again how I like to use it. Okay, excellent. So let me first, and I'm going to get to live charts, folks. I'm a live chart person, okay? But again, being the professor in me, I like to lay the framework first, then I'll get into some charts, okay? It's not going to be a lot, probably, I don't know, 10 or 15, 10 minutes maybe or so of chart or of PowerPoints, then we'll get to charts, okay? But the bottom line is, now Heikin-Ashi uses average price data to filter out market noise. And so when you see here, again, I'm not going to give you a bunch of math, okay? You're like, oh gosh, here it goes. No. But I just want to give you the idea of Heikin-Ashi. So why I like it so much is it looks at the open of the previous candle, okay? Then you can see the formula. It takes the high and low of the highest point of the current candle, and then it looks at the close of the previous candle here, okay? So it takes the open plus a high plus a low plus a close and divides that by the 4, okay? But what's great about it is, okay, it helps you stay into a trade. Meaning, you know, if you get in, if here's a chart, price is going up in your favor, you know, a lot of you, including myself in the past, you get one decline, you're out, okay? And maybe that was a nice win and you're happy, but then it keeps going, okay? And that's where I think traders really need to improve upon, okay? And that's something that I've worked out for years, because if you can beat the market on a particular trade, I think it's BS to say, okay, I'm going to get out at this point here because it's a 50% move, okay? And I'm just making these numbers up, right? Because whatever price is going to allow you to do, you should take advantage of it. That's why I don't like, personally, I don't like it. I mean, I'm familiar and I've used pivots and that to see if something's going to consolidate or not. But once I'm in a trade, as I'll show you, okay, I have one simple rule, and I'm going to try to stay into that trade as long as I can to maximize it. If it's a winner, if it's a loser, I have a stop. It hits the stop, I'm done, right? What I focus on, folks, is small losses. Okay, I'll get some small wins, right? Not every win's going to be big, but then I'll get some big wins, and that's what grows the account. Okay, let's just say these two balance. Okay, and you notice you don't see any large losses, right? You don't see any LLs because I just, you know, a loss is like buying toilet paper. You have to do it. It's going to be part of trading, but you don't want to hang on to those losses, right? So again, I look for small losses, holding on the bigger wins. Now, the Heikin-Ashi candlestick patterns are really unique from the standpoint of, when you see it green or blue, depending on, you know, which software. And what I use, folks, I use Thinkorswim. Okay, so what I'm going to show you today is all Thinkorswim. But when you look at it, when they're green or blue, depending on the color of the Heikin-Ashi candles, that's an uptrend. When they're red, that's a downtrend. Okay, but the more that they're colored, so in this case, this candle here is stronger than this candle here. Okay. But the premise is pretty simple. When you get into the trade, which again, I'm going to show you exactly how I enter into the trades in just a little while. When you enter into the trade, let's say right here, okay, as long as these continue to stay the same color, I'm going to stay into the trade, okay? You know, like right here, I don't care if, oh, you know, this is a 10-year support level or resistance level, I should say, okay? As long as it still tells me to stay into the trade, I'm staying into the trade. Why is that? Well, from my entry to my exit, okay, typically on those nice wins, I make about 80% of the move. Okay, what's the unknown here? Well, the unknown is when the move is going to end. Okay, so I'd rather make 80% of, let's say, $1,000 than get out with 30% of, you know, $150, right? And so again, this will all come together when we get to live charts here. So in my opinion, which looks better? So this is regular price data. This is Heikin-Ashi. And so what you can see here is with regular price data, you know, you get some more indecision points where you're like, okay, you know, back here, I got to get out here. It's going to turn around. I'm going to get out here. It's going to turn around. And maybe it will, maybe it won't. But you don't want to be overreactive. And again, it doesn't matter what time frame I'm looking at right now, whether it's a 1 minute, 233 tick, 5 minute, 1 hour, 4 hour daily. It's all looks the same from that standpoint. Then when you look at the Heikin-Ashi, it turns green. Okay, if you stay in till you get the red 1 or 2 bars there, okay, you have a easy decision making. And we all know part of trading, a big part of it, probably the largest part of trading, is the psychological, right? If you ever lose sleep over a trade, what does that mean? You're putting too much into one trade, right? Because if you really want to be successful in trading, you want it to be a marathon, not a sprint, okay? And it doesn't mean you can't make some really good money fairly quickly, but if as a swing trader, I get calls all the time, I'm not sure what to do, Dr. Keith, I'm in this trade and, I'm really struggling if I should get out or not. I'm not really following my rules. Like, well, if you're rolling over it in bed, you probably positioned your size too much, okay? So one more question for you all. Do you manage your trades? And what I mean by that is, do you have specific rules for your entries and exits? Yes or no? And again, this is more for reflection for all of you, because if you don't, at some point, more than likely to be successful, you're going to need that, okay? It doesn't mean you can't make some trades that work in your favor. It doesn't mean you can't go a month or 2 months of being fairly successful, but if you don't have an actual plan, because then how do you study it, right? How do you go back and look and revise and update if you don't have specific rules, okay? Excellent. Excellent, Crystal, that's great. So again, my objective, as I mentioned, is to have small losses. Big wins is my favorite, obviously, but small wins happen as well. And then these big wins is what grows my account, okay? So let's say these two balance out. You get a few big wins. Again, no matter what time frame you're talking about, that is what grows the account. But you need that plan of attack, okay? So one of the simple strategies that I'm going to show you when I get to live charts is I like to plot, as one example, a 9-period EMA. Okay, and what I like to do is go long when the LIQUIDITY RSI goes above 20 and the Heikin-Ashi candle is green. Go short when the LIQUIDITY goes below 80 and the Heikin-Ashi is red. And then manage the trades based on one of the indicators I'm going to show you, okay? And again, it doesn't matter what time frame. I'm going to go over different time frames, but it doesn't matter. Okay, so if you can do it on a 1 minute, you can do it on a 5 minute, you can do it on a 4 hour. What's the difference, right? The initial risk, right? Because the risk of a 1 minute chart, putting your stop, is going to be less ticks or points than a 5 or a 4, right? And again, I do the same strategy on stocks, futures, and Forex. I trade all 3 markets. So what I've created for Thinkorswim, again, this is just for Thinkorswim, toss. But again, even if you don't use Thinkorswim, I think what you're going to learn here on live charts today is well worth your time. But what I did is I created an open and close of actual price within the Heikin-Ashi. So I don't ever have to switch back and forth to say, okay, here's a Heikin-Ashi candle. Here's what price did from a Heikin-Ashi perspective, but what did the actual price movement happen to? Okay, so I've got that all programmed into one candle. And then these are my management right here. Basically, if I'm long, let's say you went long right here. Okay, I will stay into that trade until I get a red. Okay, and that makes it super easy from a psychological standpoint. But more importantly than just psychological, it's effective, especially staying into those trades on those bigger wins. So here's just an example. We had the LIQUIDITY, which is this white line, come above the green, which is the 20-80 lines here. Okay, so the 20 and 80 lines. Then, as soon as it goes above that EMA, which is the white line, you can enter into the trade. Okay, and then as you can see, each candle, again, this could be a 1 minute chart. I purposely, actually, I think I did kind of give it away based on here, but it doesn't matter what time frame for this purpose. But as you can see, no red dot yet at the time of this screenshot, right? So what that means is you'd still be in this trade. okay, you would still be in this trade. So let's look at some live charts now. I'll go over some examples. I'll get some examples that you want to look at as well today. Okay, I got plenty of time to do that. So I brought up Apple because everybody that trades stocks looks at Apple. So I'm like, all right, well, let's take a look at it. So again, this is Thinkorswim. Most of you are familiar with the platform. Okay. And what you can see here is this is a daily time frame right now. So see the daily chart. And so there's a couple ways that I can enter into the market. Okay. Here's my favorite way. My favorite way would be when we get a retracement, if this white line, let's say were to come, let me make one up here. Come below the green, then come back out. Okay, that's my number one. And then the entry then, once that Laguerre comes out, is when the green dot's there, the green Heikin-Ashi dot. Okay, these are what I call my green Heikin-Ashi dots, right? Real technical. Okay, and as long as then price goes above the period 9 period, right? Then that's a good entry. You can do it if it's not above, but if you want to be the most conservative, go with the direction of the trend, wait till it crosses back above. Okay, that would be my number one, and we'll see some of those in live charts. Okay, but my number two is once you're already in that trend like this, you see how we had the red dot, yellow, back to green. So when it goes back to green, that's a re-entry. Okay, that's a re-entry. And again, the rules are very simple. So let's say we entered there for fun. Okay, so let's say right here at the green dot at the open. Okay, the white bar is the open, the red bar is close of actual price. So it also shows you what actual price did, right? So if you entered here, okay, my stops are very simple. The swing point. So right here, and it's usually going to be the opposite color Heikin-Ashi for the most part, okay? That's my stop. So the first question you ask yourself as an individual, based on the open to the close of the stop, am I okay with that risk? If you're not, don't take the trade, right? What can you do? Well, you can go to a smaller time frame and do the same analysis, which we'll do that today. But that's the first question, okay? If you're going to lose sleep, don't take it. So let's assume we're okay with this, right? This is actually a pretty good risk reward here, okay? Now, what happens? Well, you stay into the trade till either your stop gets hit, right? We'll draw that line out there, or you get a red dot, okay? So you can see right now there's no red dot. We had a couple yellows here. What does that mean? Indecisive points, okay? What some traders will do, including myself at times, especially on a daily chart, when you get the yellow, okay, at the close of the yellow, you could take half off of your position. So let's say you did 200 shares of Apple, just as an example, right? You could take 100 off profit, okay? You still have your stop now. You can move to break even. So now it's in theory a risk-free trade, right? In theory, right? And then again, continue to stay into the trade until you get a red dot. Okay, so very, very simple rules, but Heikin-Ashi will allow you to stay in, right? So now you all know what day we're going to get out, right? I mean, you don't know the exact date, but you know the rules. When it paints a red dot, I like to do it when it opens up. If it opens up red on the daily, then I like to exit, okay? That would be my exit point, okay? So, some people say, well, heck, you hit a new high, you should get out, right? So people got out here. Maybe that's good, maybe it's not, but you could have said the same thing back here, right? So for me, once I'm in the trade, these dots, these Heikin-Ashi dots, they rule, okay? I'm staying in until I get that red dot, okay? Okay. Let's look at some other examples here. And I'll change time frames in just a minute, okay? Again, it doesn't matter what time frame from the standpoint, you can pick any time frame, it's the same exact rules, okay? All right, so let's just look at a couple past trades. This is Pepsi, okay? So it dipped below right here. You see how it dipped below? We had the Laguerre trigger, red dot, Okay, so that's an entry right there. Where's the exit point? See the green right here? Here's the exit. Okay, again, roughly the goal is about 80% of the entire move. Sometimes you'll get, even bigger percentage of that. If you back up here on Pepsi, you can look at this one, right? Laguerre triggered, wait for the green dot above the moving average. Look how long you're in this trade on the daily. See that? How many do you think you would have stayed in that long if you were following different rules? Okay. Because again, it gives you simple rules that are effective. I've had people text me at night, and it makes my evening. Dr. Keith, green dot, I'm staying into the trade. Because everyone has discussions with their husband, their wives, and so forth, right? And it just, because what you have to forget, folks, don't worry about getting in at the bottom and getting out at the exact top. That's not real trading. Okay, that's pure luck if it happens. So what we try to grab is the meat of the trade, roughly 80%. And the unknown, again, is we had no idea when we entered this trade when we were going to exit. But what we did know is, okay, here's my stop at the swing point. Am I okay with that risk? If I am, proceed. When's the exit point? Red dot. Okay? So you can complicate it as much as you want. You can put trailing stops in. Problem is then a lot of times you'll be in the trade and you'll get stopped out with a trail, maybe right here, for example, and then it goes up another, $20 almost before you get out. So I just kind of let the system work its way out there, okay? Sure, we can look at Meta. Somebody wants to look at Meta. That made a nice move recently too. So, again, take a look at the most recent one. Let me spread this out just to make it easier for everybody to see. The new reentry in this uptrend, the Laguerre didn't quite hit the green. So when it goes red back to green, that's my number 2 entry, right? I gave you 2 options, but yeah, you'd still be in that trade. Today's an indecisive point so far. You could decide, okay, I'm taking half off, move my stop to break even, and then if tomorrow it opens up red, I'm out. If it doesn't, I'm staying into the trade, okay? Yeah, we've had some nice runs lately, and the markets will do that, okay? Here's Tesla, okay? So here's a couple good examples with Tesla. Let's say you're taking this long. So you got the Laguerre trigger, green dot, okay? It closes above the moving average. Here's your stop loss. And then wait a minute, what happened? Right here, okay, small win, okay, small win. Then 2 bars later, it went back from red, yellow to green. That's another potential entry. You could have said, well, yeah, I like the risk there. I'm going to go long again. Okay, so you had 2 potential trades there, and then see the exit point right here, okay? But the bottom line is if this didn't work out, small losses. If it works out, you're going to get some small wins. I would call that a small win. But then when you get some of these, that's what builds the account up, okay? But everything's determined, right? I can sleep at night, okay? Again, off the daily, obviously, same exact. I'll go to smaller time frames in just a few minutes, yeah. Sure, let's take a look at, yeah, we can look at that. Let's see what that is. CPK. So this was a good short on CPK, right? And yeah, again, you can look at futures, Forex. I know most of you are stock traders. Again, it doesn't matter what instrument though, it's all the same process, okay? All right, so right here, the Laguerre triggered short, it crossed down past the 9 period, you would still be in this trade, yep. See that? And there's different formations you'll get used to with Heikin-Ashi. I call this the very technical flat top, okay? When you have these flat top, which means there's no wicks, okay, that's pretty bearish activity, all right? And when you have them here at the, with no wick bottom, that's a flat bottom, okay? So we got, you never knew you'd learn about flat tops and flat bottoms today, did you? Yeah, okay. But yeah, so again, the rules are simple. The whole goal is if you enter here, you know, here's your stop, here or here, depending on your risk, right? Sometimes on the long wicks, you don't want to take it all. You can go up the close of the regular price, your choice. If you're not okay with the risk, don't take the trade. If you are, now it's easy management, right? From a psychology standpoint. All right, I'm going to go to a 4-hour now. So I'm going to change my daily to a 4-hour, and we'll look at some 4-hour trades, okay? So by the way, if you took CPK short on the 4-hour, see the trigger right here. But you see how Heikin-Ashi keeps you into the trade, okay? You might have took half off right here, right? Break even stop, but then see right here is the exit point, okay? Again, just visually looking, that's about 80% of the move. Then you have a re-entry a couple bars later if you want it, right? Yeah, let's take a look at Harley. All right, so Harley had a recent long trigger on the 4-hour, right? This is the 4-hour chart. See the Laguerre triggered, green Heikin-Ashi dot above the moving average. So here's a quiz question for all of you. Remember, I'm a professor. What day would you have exited this trade? What do you think? That's right. You would still be in the trade, right? I don't see any red dots, right? Yeah, you're still in the trade. Okay, you're still in the trade. Yeah, one of the trades I recently took on the futures, okay, was cotton. Now I actually took that on the daily. That was a swing trade. Let me just show you. Okay, so look at cotton here. Why did I take it? Again, it also has a nice short pattern on the seasonal. Okay, but you had a Laguerre trigger. But again, see how easy it is once you're in the trade. If it works out, the logic is easy if you're staying in. Okay, we wait for the green dot in this case, right? Because I know I'm not going to get out at the bottom. I can pretty much promise you that. Okay, if the low ends up being, let's say 67.50, okay, I won't get out there, but I'm going to grab 80% of this move, right? So yeah. Sure, absolutely. I know we can take a look at the NQ futures, of course. Grabbed a nice long play here recently. Okay, again, this is a number 2 trade. The Laguerre didn't come all the way in. It went from yellow to green. Okay, this was right here. See the red? Small loss. Goes right back into green right here. And you can see the exit date right here. Okay, that's a very nice move in the futures, obviously. But the bottom line is, don't say, well, if you would have held on here, Dr. Keith, you idiot, which, you know, maybe I am. But if you would have held on here, it turned around, right? You can't think like that. Okay, you got to think about specific rules, exiting the trade when the rules are met. Because remember, there's 2 ways to get out on a loss. If your stop was hit, or if you get a red dot, right, for a long play. You know, you want small losses, folks, okay? Because you'll get these, okay? You will get these. That more than makes up for any losses. Yeah, one of my favorites to trade is on a Forex, US yen, okay? Still in this trade long. See the entry? Beautiful entry, right? See the rules? And by the way, look at all these flat bottoms. There is no reason for me to get out of this trade, right? Now, nice move up, retracement, nice move up, right? Textbook, isn't it? Yeah, it was a beautiful trade too. I missed that one. I didn't take it, but I took this one. Okay. Sure, let's go back to that 15-minute now. Let's go look some smaller time frames. See, like everyone loves AMD. Let's see what AMD did today or recently. Sorry about that. Okay. Okay, so the most recent we had the red back to in the number 2 trade with the red exit. And then we had the Laguerre trigger with the green exit right here. So again, 1, 2. Then you had the Laguerre trigger here. Red exit, that's more of a break even, small win. And now at this point, there's no trade, but are we getting close, right? Possibly, or possibly it's going to turn back around, right? Again, this is the 15-minute chart. Sure, we can look at the Qs. Let's see what the Qs are doing on the 15-minute. So the Qs had a nice short here. And now we're on the long side of it with some consolidation, right? We see the long, got to ask yourself, am I okay with the risk? You know, you okay putting your stop here or here? If you're not, don't take it. So far, so good. Yep. Back here. Boom. So again, what we want here is if we're wrong, we want small losses. We'll get some small wins. And then the ultimate goal is to get some of those big runners, right? That is how you build it, okay? Sure, yeah, we can go down to any time frame you want. So let's go to the 5-minute. And what's nice about it is when it starts consolidating, right? I only take, you wait for the trades with the Laguerre, and then in the direction of the trend, you can do the number 2s, right? So at this point now, we're just waiting to see if this Laguerre triggers and the price is above the 9 period. If it's not, you're not going to do anything, right? And that's the beauty. Yeah. Sure, Apple. Had the Laguerre trigger right here. Out right here. Yeah, no, I don't trade during lunch either, but either way, right? Either way, you're looking at it. You can look at like Tesla, same thing. Look at maybe the 1 minute. We get back to today. Okay, so you can see right here on Tesla, the number 2, yellow back to red, out right here, back in. Okay, so you're playing the game, right? You want small losses, small wins. And is this going to be a runner? It's already starting, but we don't know, right? But we do know as long as it stays red, we're staying into the trade, right? Yeah. Okay, let's take a look. I got a request here. For ABC. Yeah, we can take a look. Ah, yeah, that's a good one. So again, very simple rules, right? Laguerre triggered, dot, above the moving average, still in the trade. Okay? We don't know the day we're going to exit, but it's not because we don't have rules. It's because we do have rules, right? Let's try to maximize this win. Let's grab at least 80% of the entire move based on these rules. Okay? Remember, trading rules don't have to be difficult. They really don't. Okay. So what I'm offering today, folks, is pretty incredible. I just do it for you all today only. You're basically saving $500. If this is for Thinkorswim only, okay? But you're going to get the Heikin-Ashi indicators, the dots with the Heikin-Ashi candle with the open and close, and the Laguerre. Okay, basically throwing in the Laguerre for free with that. Okay, the Laguerre RSI with that. Okay, all for $3.99. So if it's something you're interested in, it's seasonaltraderpro.com, Traders Corner Special. Let me just bring it over here real quick, and then we got a few more minutes to take a look at a couple more things. But seasonaltraderpro.com, Traders Corner Special, and I'm sure Rob will put that in the chat box as well for us.
I'm trying to type it, but the type's not big enough for me to see.
Here, I'll put it in there for, no problem. I'll put that in there for you. I think you might have got it now. That way it's easier to, let's see, I think I put it in the chat for you. Did you see that in the chat?
Not yet, but I'm looking.
Oh, I think I can for the entire audience too there. Okay. Yeah, I think
I
I did.
I got it now. You can too, but I got it now.
Okay. So again, if it's something you're interested in, again, it also comes obviously with the purchase, the how to install, which is super easy, a demo and so forth. But seasonaltraderpro.com, product Traders Corner Special. You'll see it in the chat box there. Again, let me go back. I got a couple more minutes. I want to show a couple more examples on people are asking about futures. So let's take a look at, like, let's say you're looking at wheat. Okay. Wheat had a nice move to the upside here, right here. See the red dot. Okay, on the daily, if you're trading smaller time frames, like a 15-minute, you see this. You see how when you go to this, you know, as a real trader, you look at a chart for the day and you see all this, I call it Christmas lights, back and forth colors. What do? I go to something else, okay? Let's look for things that are moving easier for us, right? You can look at soybeans, go to a daily on soybeans. See your soybeans made that nice move there as well. Somebody's asking about Dish. So here, you know, here's an example where sometimes to me it's more logical. You got this massive downtrend, even though it's above the 9 period with a trigger. I'm not going to fight that. I'd wait for it to roll back over. Okay, so that's the only thing. Sometimes you got to look at it with some common sense. Remember what this is, right? That's not you and I moving the market. You know, these are institutions. So if you have a massive up or down trend, going against that can definitely be dangerous to your health, your financial health. So, all right. So with that, I'll turn it over back to Rob. And again, let me know if you have anything, folks. But I appreciate your time today.
Hey, awesome. Thank you, Dr. Keith. I do love your Heikin-Ashi bars, and I want to thank you for sharing your extensive knowledge and wisdom with our audience and making such a generous offer to our members. Ladies and gentlemen, that was Dr. Keith Wade of Seasonal Trader Pro, and you can learn more about Dr. Keith by going to the link he put in the chat box. And thanks again, Dr. Keith. Happy 4th to you, sir.
Thanks. Take care, everybody. Good luck.
Ladies and gentlemen, that brings us to our next presenter. He is the CEO of Trade the Pool, one of the largest prop firms in Tel Aviv, where he is the head of traders. He has over 15 years experience in day trading stocks and futures, and also develops technological tools for traders. He also happens to be a vegan. Here to present how to build a bulletproof risk system. It's an honor and my pleasure to introduce Mr. Michael Katz of Trade the Pool. Welcome back to Trader's Corner, Mike. Mr. Katz, are you with us? I see you in attendance. Oh, here comes the screen. Check your mute button, Mr. Mike. We can see you, but not hear you.
You should hear me as well.
There you go.
Let's go. Okay, how's it going, Rob?
I can't complain. How are you?
Terrific. Been a great few days in the market. So yeah, I like the volatility.
Oh, it's been making fortunes for some of us, if you know which way to go.
Exactly. So how you doing, everybody? Thanks for the introduction, Rob. And should I take it away?
Absolutely. Feel free.
Let's go. So guys, I'm Michael, as Rob mentioned. Just before we'll dive into everything I prepared for you today, let me get to know you just a little bit. So if you guys can just type in the chat box if you've been trading stocks, Forex, futures, just so I will know who is the audience for today. And also if you want to add some other stuff like how long you've been trading for, that would be also great to have and to see. So yeah, excited to see who we got here today. While you're doing that, let me start sharing my screen and basically talk just a little bit about just my background, so you will guys understand where I'm coming from. So as Rob mentioned, I'm the CEO of Trade the Pool. We are an online prop firm that fund retail traders, just like you guys, as I did for many, many years. And basically, we're focusing on stock trading. We have more than 12,000 symbols to trade on, long and short, even penny stocks. We'll touch that, talk a little bit about that at the end of the presentation. Besides that, I've been trading for 16 years now, mostly day trading stocks, but also doing future trading. I was the head of the traders in one of the prop firms in Tel Aviv, and developed some technical tools as well. For that prop firm that I worked with, I sold my semi-automatic system that I built for them, basically. So my story, before we'll dive into the risk management and the charts and everything, it starts here at $91,000. So imagine a few years ago, it's almost 4 years ago, I was the head of the traders in that prop firm in Tel Aviv, and it was just a normal Monday day. I came to the office and started to trade pre-market a company called Virgin Galactic. For those of you who are familiar with the symbol SPCE, owned by Richard Branson, one of the billionaires in Britain. I started like everything, like any other day, right? I found the right stock, lots of volume. For those of you who day trade stocks, then you're probably familiar with the same setups or the same idea, the same concept. You're looking for big movers, a lot of either gap up or gap down volume coming in, and you want to see volatility, right? So that's exactly what we had on SPCE on that July 20 or something like that, summertime. So basically, I'm started to trade. Everything went according to what I expected. It went up. I bought it. It went up, made a few thousands, but didn't sell my shares. I waited until it will go just a little bit higher. And for some reason, it started to drop down like crazy. And after roughly 2 hours into the trading session, I was already down $25,000. Since I was the head of the traders, obviously, I knew what I'm doing. And I used to have also trades that I would lose like 10,000 or 50,000, 15,000. And in most cases, I would have found a way to get out of that hole. But for some reason, in that moment, in that stock, everything went against me. I basically lost control of the trade. 25K after 2 hours, it was roughly 30,000 at the end of the day, 35,000 or something like that. We can actually see some of the screenshot that I sent to my friends because I couldn't believe that. So you can see 29, almost 29,000 during the session the first day. And since it was in a loss, I stayed for the next day as well, and the next day afterwards. So it's basically been a roller coaster of 3 days. And at the end of them, I'm losing 91,000, 91,500 K. And that was a massive loss, actually my biggest loss till today at least. And the problem was obviously not that I don't know exactly what I'm doing, because I've been trading for many years, was the head of the trader in a prop firm. I had risk management, I had great setups, everything you can possibly imagine and want as a trader, obviously consistency as well. But for some reason, it would just went majorly against me and just melting down no matter what I did. And obviously as a trader, and this is something we will talk about a lot today, as a trader, you're always going to average down your position. I know that if you just heard what I'm saying, in most cases, a lot of the traders around you or gurus on YouTube will tell you not to do. When you're trading, like a real trading, prop firm trading, you will average down your position in most cases. The difference will be that you still have those risk parameters or risk boundaries you will stick with, and even when you're averaging down, you still stay within that boundaries, right? So that's the concept, that's the idea. It's okay to average down as long as you lose that amount that you already know beforehand that you're willing to lose, and we'll talk about it later on. And in that case of that trade on SPCE, I didn't have that. I mean, technically I did. I knew how much I'm willing to lose. It was $20,000, but for some reason it kept going against me, and I just didn't click the mouse key to cover the trade on the first day. Imagine 2 hours and you're already down 25K. The risk manager came to me a day after, like the second day, knocked on my door, entered, asked me if I'm doing okay. I told him that I'm doing fine because I really believe that I can pull myself out of that, because I did many times before. And for some reason, it just kept going against me while I'm averaging down more and more. And that was a crazy moment for me as a trader. Imagine the pressure. All the traders around me, roughly 80 local traders looking at me, and just want to see if I can pull myself out. Can I do that? The pressure was really on me. Obviously the management as well, looking at me and saying, you got to bring back the money, basically. So I took 2 weeks off, came fresh to the trading after I did a lot of analysis, and we will talk about it as well today, what exactly I did in order to pull myself out. And it took me 6 months to cover that $91,000 loss. And it led me to basically this webinar, and obviously to where I'm at today as the CEO of a prop firm for traders worldwide. And this is exactly what I teach our traders as well, because I see that this is something that helped me, so I can share it with you. And obviously, one of the benefits that I have is not just bringing you guys my experience, but also lots of traders that we have in our company. So this is something that is great to have and share with you guys. Okay, now I see that your comments about the futures, Forex. Basically, the main reason I ask you, what are you trading? Obviously, to get to know you, but also to let you know that It doesn't matter if you trade in Forex, futures, equities. What I'm talking about today will cover all aspects, all assets, right? So you can easily take that to your trading. Adjust it as you want, but definitely take the basic or the fundamental here and use it for your advantage. So first thing that I learned in my 2 weeks of preparation and understanding or analyzing what I did wrong was that a good setup won't make you profitable. Again, I obviously knew that before. I've been doing it for a while, but once you have that break moment, you know, a major trade that goes against you and you lose X amount of money, and obviously it doesn't matter if it's 91 or 10K for some or 300,000 for others. That X amount of money or that major trade that, you know, just blow your mind. So a good setup won't make you profitable, and this is something that you probably won't hear a lot again on YouTube if you're watching a lot of the gurus and stuff like that, because in most cases a lot of the guys will just teach you, you know, you buy here at the breakout or the pullbacks or whatever it is, but this is not something that you want to put your full focus on. This is obviously something important, but before that you actually want to have a mechanism of risk. So what I'm about to share with you today is literally a manual to build yourself that bulletproof risk. So you can write it down and build it from that by the end of this webinar. So this is what you need to do in order to build that bulletproof system of risk. First thing you need to understand, obviously, is what are you willing to risk? Now, this is something pretty obvious, pretty simple in most cases. If you've been trading for a month or 2 months, you understand that you need to know how much you're willing to lose, how much you're willing to risk on that. Now, if you're doing day trading, you want to go with a daily loss. And if you're doing swing trading, you want to go with a weekly loss. So instead of defining per trade risk, you start with the bigger picture. The bigger picture for day traders will be a daily loss or a weekly loss for the swing traders. Now we have two basically rules we can use in order to define the risk. One is X percentage from our account, or the other one is the 3 days or 3 weeks rule. What it actually means? It's pretty simple. The percentage out of the account, let's say I have $100,000, or let's say $10,000, and now I need to define, and I'm a day trader, so I need to define X amount from that 10,000 that I'm willing to lose on any given day, not per trade, but a daily loss, a full daily loss. So let's say between 3 to 5, in most cases, between 3 to 5%, right? So 3 to 5% out of my account will be, let's say, $500 per day. If we're talking about the 3 days or 3 weeks rule, it will be basically what will happen in my mind, like mentally wise, if I would lose those 3 days in a row. So let's say I'm risking 500 on a daily, and I'm losing a strike of 3 days, 1,500. In that matter, would I lose it? Would I start going into like a snowball? And would I be able to make the right calls and, you know, mentally be free to take logical decisions, right? And really understand again the chart and not just jumping into a trade and trying to do like revenge trading. Try to, you know, modify that so it will fit to your personality, because trading is obviously very individual, very individualist. So you got to understand what will work for you. In that case, risk between 3 to 5% of your account will be a good way to start on a daily, again, daily loss. And the second thing, would I be able to continue to trade properly if I would lose 3 days in a row? If the answer is not, and you're not willing to lose 1,500 or your account, the capital that you have won't let you lose 1500, then lower your risk. That's fine. Find that moment or that point where you can actually say, you know what, if I'm losing 700 in 3 days in a row, I'm okay with that. Or 900 in 3 days in a row, I'm okay with that. So that will be 300 for each day, right? This is super important, guys. If you don't have it by now, that's just definition of the risk. You basically not trading, not letting you the opportunity to trade and become a consistent trader. As Michael just wrote, 10 years in trading, not successfully yet. So start by building that. How much I'm willing to lose from my account, daily loss, and would it be fit for that 3 days rule? If you swing trading, do the same thing. How much you're willing to lose from the account for the full week, like a full week that you're willing to lose. Again, let's say like 5%, right? You're risking $500 from that 10,000. And are you willing to lose 3? You have 3 weeks in a row that you are willing to lose. And if that's okay, when you basically ask yourself if that's okay, dollar risk. Find that niche, that point when you're feeling okay with it, and do that. That's the first start. Just define that risk. After you finish doing that, what are your best setups? So if you've been trading for at least 6 months, you have enough data to understand what are you doing good, right? If you're not using a trading journal, you got to start doing that. There is no, we're doing performance based, right? What we're doing as traders is basically performance based. So there is no athlete, no LeBron James, Lionel Messi that don't have stats behind him, that don't check the stats. You gotta have a trading journal. You can use today, you don't need to use an Excel sheet. Back in the days, this is what we did, just an Excel sheet and manually entered everything. Today, you have TraderSync or TraderView or TradeZilla, whatever. You can just import, export, or export, import your trades, and it will analyze it for you simply with a click of a button. You gotta have it. And then when you have it already in the system, now you need to know which one are the best ones you're trading. So share it with me a little bit. What exactly are you trading? Are you more of breakout traders, range, flags, pullbacks, reversals? How does your trading style looks like? Always interesting to see that. One of the most important things that I'm doing in my company is basically just going over all the profitable traders that we have and watch what they're doing. And funny to see, 72%. This is a great stats to just keep in your mind, in your head. 72% of our profitable traders trading reversals, for example. So now that you have that, you can basically say, okay, if in a prop firm, guys, most of the successful traders are trading reversals, maybe this is something you can, consider to start doing as well, especially in this type of market. The volatility is insane, so it just makes sense to trade reversals. Okay, see breakout pullbacks trend line. Got it. Can we trade options? You mean in TradeOutLoud? No, we're doing equities only, ETFs, of course, and stocks. So once you have the setups, the best setups, this is how you want to address it, right? You split it to 3 modules, A+, A, and B, okay? Now, this is how much you're risking per trade. So you had that daily loss, let's say you day trading, so you have that daily loss. Now you're breaking it to chunks. A+ setups are like textbook, right? The best one that you ever seen. All the parameters are working to your favor. Everything looks perfectly, just like in a book. You will risk out of that daily loss 30 to 40%, right? So we're going back to the same example, $10,000, $500 per day. Out of the $500, I will risk for the A+ setup 30 to 40%, let's say $200, right? 40% out of the 500. So I'm risking $200 per trade, the best setups possible, right? The A+. On an A setup, you know, a good setup, not all the parameters are there, maybe 4 out of 5, right? I will risk between 20 to 30% for that trade. So the same example, $150 to $150 per A setup. And the B, those are okay setups. I will risk between 10 to 20%. So again, in our case, between $50 to $100, 10 to 20% out of that $500 that we talked about. So this is, just do exactly as this. You know what you're risking per day or per week, like for swing trading. Now you know how much you're willing to risk per setup. Obviously, we want to take as much as we can the A+, but we don't have them all the time. You won't really see a lot of the time A+ setup, the perfect setups. So you will, from time to time, will take A setups and try not to take the B setups, but sometimes it just makes sense to take them. So once we did that, and I know that, let's say on the A+ setup that I'm risking for 40%, like $200, now I'm doing one more step in my risk parameters, and that is splitting it, the $200, let's say, to 3 to 5 chunks. And this is something that a lot of the traders, even seasonal traders, won't do, and this is a huge mistake, because if you're risking that $200 per trade, right, on the A+ setup, and you go all in with the 200, you don't really give yourself enough space, enough room to play around with it. And as you guys know, the chart in most cases won't go to your favor just like that. It will play just a little bit more, try to manipulate the price, hunt some stop losses, shakeouts, whatever it is that the market makers will try to do, or the algos, and they basically, once they hit those stop losses, then the price will go to your favor, right? So you don't want to give yourself that very tiny, narrow window for an error. You actually want to enlarge this window, and if you already found your setup, then you want to stay within that trade until it will work, or maybe not, but you give yourself a lot of the space you want to actually a lot of the space you want to actually have around this. So 3 to 5 chunks. So if I'm taking that $200, you're breaking it to 5, that will be, let's say, $40 per execution, or you can play like this. Look at that slide, and this is super important one as well. On an A+ setups, you start small and add big. On a B setups, you will start big and add small. And if you guys want, let me know in the chat what you think about that, because this is one of the most important things that I understood during the 2 weeks off that I took after I lost the 91K. I just obviously took that trade, analyzed it, braked it from all different angles, and then I came up with this state of mind, basically, that on the A+ setups, you don't want to start big, and this is one of the mistakes I did before. I started big, and added small. Instead of that, on the A+, the best setups that you can possibly find, you actually want to start small. And why is that? If you think about it, since it's an A+ setup, the idea, it makes sense that it should work, right? That's the best one that you can ever find. So that could be 60, 70% success rate in most cases. But like I mentioned before, it doesn't mean that because it's an A+ setup, it will work right from the get-go. It will play around, drop a little bit, and then maybe bounce up and to your favor, right? So on A+, you start small, and as it goes against you or to your favor, you add big, because then the price actually shifting and showing you that it's going to your favor, right? So instead of going on an A+ setup big and then head small, you wanna do the opposite. Start small, and if we're taking that example of the $200 per A+, you will start with $40 risk on that trade. First execution, you're risking $40. Another execution, you're risking another $40. And once you see that it goes to your favor or drop to another level where you can add more to your position, then you add the extra 160 to basically, or in that case, 120 to have the complete risk of $200, right? So this is it. The opposite will be on a B setup, right? You start big and add small. Why is that? The B setups in most cases won't work, but since in most cases it won't work, you actually want to start big. Again, big means that you're risking what you're willing to lose, right? You're not crossing the boundaries. If in our case we said $100, that means that I will start with $70 risk on a B setup and will add small $30 risk, right? In that case, I know I'm not giving a lot of the space to the trade to go against me or to my favor, but I'm basically going almost all in. I'm saying, okay, this is a B setup. In most cases, it might not work, but if it will, I want to hit it as hard as I can and fast as I can. Amazing, Jen. Perfect. Okay, so let's go to the charts. Let's look at some examples of trades that I did and some of our traders did, and we can learn a lot from it. So this is how it looks like in most cases when you are at the beginner level, right? You will find a setup, doesn't really matter, you know, a pullback, a breakout, whatever it is, but you will enter just in one execution, or maybe even if it's, as you can see here, few executions, they are at the same price range, right? So you basically go in, go out, simply as that. This is a beginner level. In most cases, a lot of the new traders, even up to 6 months, will do that. Just find a place, enter, and then exit. And obviously, I did also that many years, and it could be successful. You could become profitable when you do that, but it's with a ceiling. You're not really controlling and managing the risk and managing the trade. And you know, we as traders, or the market in general, the difference between a casino, for example, and what we do is that when you go to Vegas, you put on a roulette $100 on the red, and that's it, you're done. It's not within your control, right? You will lose the full 100 or you will make more. In our case, we can actually control the outcome in most cases. Obviously, the market will do whatever, but we can do something even after we put that $100 on that so-called roulette, right? We enter that trade, we can enter with chunks, we can risk some, we can take some off. We will see that in a second in the other trades. So this is a beginner level. Also an example for beginner level will be, this is a reversal, right? Pushing higher, a stock pushing higher, breaking through resistance, but cannot hold it, dropping down. In most cases, when it comes to beginner level, he or she will enter short here and then add more when it will break that support level. But you don't want to do that. You don't want to add to your position when you break in support, because it's support. In most cases, it will first, at least first, will hold that support. This is the idea of support, right? Support, resistance. On support, buyers will come, resistance, sellers will come. So you don't want to add when you break in support. This is a beginner level situation. And this is intermediate, right? On the same trade, the intermediate trader will actually add when it bouncing against him toward that resistance level, right? In most cases, like mental wise, a lot of the traders, and you can probably ask yourself if that's what you're doing, and you can share it with me in the chat if you feel okay with it. In most cases, when you go into a trade, most of the traders will look, how am I going to get out of that trade, right? Will think about, where do I close that trade? Where do I take my profit and close that trade? But experienced trader will actually think, where do I add more to my position in order to make more from that trade? This is a completely change of the mentality and the way you look at the chart and look at trading. You don't want to be offensive. You don't want to be, defensive. You want to attack the trade. So once you found already, you did your analysis, you did everything great, you have the right setup, you have the right risk management, now you want to attack the trade. You don't see LeBron James go to, in most cases, go to the court, go into the court, start playing the game and thinking how we will lose that trade or how we can protect. You go and attack the ring, right? The same idea here. And sometimes it will be hard to execute that, but your mentality, if you can shift it, if you can try to work and shift that from defensive, where do I exit the trade, to where do I add more to get more out of that trade, you will see a huge change in your trading. So once it bounces against, you want to actually add more. And this is intermediate. You can see it also here, another nice trade, but also intermediate. So shorting it at the top, again, reversal. As I told you, most of our profitable traders will usually trade reversals. So shorting from the top, adding more, adding more, adding more, and then covering the trade at the bottom, right? So the idea here is, once it drops, you start, this is an A+ setup, right? So you start small. Once it goes and shows the direction, in this case, to your favor, you add more big, add more, and then you cover. And in this situation, you actually give yourself enough space to play around with and let the trade goes against you or a little bit to your favor. And once it's pulling back, I'm not looking to cover that trade. I'm actually looking to add more to the position. If you shift your mind into that thinking, you will see amazing result comparing to what you experienced until this day. John, you're saying, I'm assuming it's a trending market. When you are not trending, you don't have, no. So even if you're not trending, you add to your position. You always want to add to your position, because you cannot really think that you can always find the exact moment to enter the trade and the exact setup, the exact stop loss to block that trade. You always want to add to your position against you or to your favor. This is also an intermediate level. look at this. Enter here. Again, doesn't really matter the setup, but it's a reversal pullback kind of. Buying here, not covering here because the first entry was a little bit smaller, right? Going all the way up, not looking to exit that trade when it dropped against you, but actually looking to add more to that trade because you already understand that the idea of that trade should work. Maybe not right now. Maybe it will jump, drop down, try to take liquidity, and only afterward it will work. So you always looking to add to that trade. And since you not started big right from the get-go, you give yourself so much time and space to add to the position, right? So you add more. Once it bounces, now you can cover the trade. Another intermediate, and then we will go to advanced mode. Adding or started to buy, just a classic pullback on NVIDIA, pushing higher, retracing. Most traders will look, first of all, wait until they'll see a break, right? A breakthrough of that first candle. You don't actually have to do that now that you know that you need to split it for few chunks. So you actually start small, add into the position. If it will go against you, that's fine. You still have that, going back to the example, $200 loss. So you're risking right now only 40 or 80 out of that 200. So that's fine. You can enter the trade. Imagine entering a trade anytime you want. You don't really need to be so accurate. You don't really need to find the exact moment to enter. You find the setup, the idea, the concept of what you're looking for, and you enter. That's it. It doesn't matter if you entered at 396.50 or 57 or 41. It doesn't really matter. You just click on the mouse key once you found that setup. Add into your position just a tiny bit more, covering, and then covering more afterwards. The reason it's intermediate level and not advanced, it's because that was a good, let me grab a pen. That was a, that was a good place to actually add to the position right here on a pullback. Right? The price dropping down to support level, So it makes sense to add to the position. Yeah, once in a while it won't work. That's totally fine. That's what we do. But risk-wise, you gotta add to your position once it's pulling back. Think it over. Try to shift your mind to think like that. Add to your position when it's pulling back, as long as what you saw from the get-go or even before you enter, you understand that it should continue to your favor or should go up, right? So when you have that, use that to your advantage. Don't think of let me just cover that trade and that's it. I'll take a tiny profit. This is not what we're looking to do here, right? You want to be a trader that actually perform well for a long time, consistency, and actually makes money. You want to add to your trade. You want to think, how do I attack that trade, and not where do I cover just to take some few bucks off. Super, super important, guys. So now that we're going ahead, we can see some advanced level, and then again, it will make, I guess, even more sense. So this is a bit tougher to handle, right? The trade is a bit tougher to handle, but what I'm trying to show you is what you can expect from yourself in a few months from now or a few years from now. Anyone, take it as you want. But this is the reason you want to do that and go toward that. So you buy here, you can see the small green triangle, right? Doesn't matter, again, the setup or reversal or whatever it is. Added more here. There's another one right here. Let me grab a pen. Right, so this is the first entry. This is the second one. Advanced, right? Add in small chunks. Drop down, added more. Another one, and this is where it gets super interesting. Once you're already in almost full, basically, you don't really need to wait in most cases for your stop loss to hit, and that's it. You can actually cover, and you can see here, realize some of the loss. So you don't really need to cover everything. You still want to be, as long as you're within that risk parameters, the dollar risk that you're willing to lose per trade, you still can basically cover some of the loss, realized it, and then you give yourself another chance, another space to add more to your position. And this is what I did here, basically. So you can see those tiny triangles. So I covered some of the loss, added more once I saw that it's going to my favor, and basically the setup, the idea was right. And then when it bounced up, I covered it and basically covered some of the loss and took some profit. And if you look closely, you can see that I added more here, right here on a pullback, right? This is exactly what we talked about. I'm trying to add more to my position, even if it's not trending, right? I'm trying to add more to get more, because in my understanding, maybe I wasn't right on that trade, right? But in my understanding, the stock should have gone up. So when it pulling back, I'm adding more to my position. When I saw that it didn't work, I basically closed the last part that I added. So the beautiful part here is that even if you're wrong, you can be wrong many, many times before you exit that trade. This is a great trade as well to learn from. And you know, I'm not trying to bring you like textbook. I'm not trying to show you the best possible setups and trades, because this is real life. What we do is trading every day. Some setups will be perfect, some setups will be nightmares, but at the end, this is what you can expect. And you know, it's great to learn from theory, but this is real, you know, real trading, real life. Look how many times I can be wrong. This is a trade I made, obviously in a loss. You can see this, the sell that I did right here at the end, after I bought many, many times before. But look how many times I can be wrong on the trade, right? And still give myself or that trade the chance to change the direction and go to my favorite. So I bought here, then added more here, then again added more on the drop, and again added more. In any of those cases where I added, I actually expected the price to jump up and actually pull up again and maybe reach those resistance level right here, but it didn't. But since I have those boundaries of X dollar that I'm willing to lose, and I'm buying in chunks, I can give myself that space to play around with and still be in that trade all the way when it's dropping down, even after I'm adding more and more. And in other cases, when it will go higher from here, I'll make my profit and it will be great. In this specific example, that trade, it didn't, and that's fine, obviously. But the idea is that you can give yourself so much space to play around with, then you don't really scared of taking that trade. So mentally, it will affect you on the positive side, because you know that you don't need to be super accurate and take the exact cent that you need in order to get in that trade. You can actually play around with as much as you want. You will see a huge change while you start using that system. This is also a great example of advanced trade. And again, a little bit more complicated especially for young traders, but you can understand the concept. Once you have it in your mind, you are aware of it, that it's possible to trade like this, and to be honest, this is how you should be trading when it comes to consistency and making real profits. Then you start moving toward that, even if you're doing it for like 3 months or 6 months. Buying it, adding more, cover some of the loss, realize some of the loss. You don't have to exit everything as long as you're within that boundaries of the risk that you have beforehand. Adding more to the position, and now you can take some profits out. While it's retracing or pulling back, adding more to the position. I'm not looking to exit that trade because my idea was to see it goes much higher. Obviously, like I said, not all the time I'll be right, but the idea is to add more to your position when it goes against you, so you can actually take advantage if you will be right on that idea, and eventually close that trade with a loss. So I give myself so many opportunities for it to work to my favor, and this is something you really want to pay attention to, and just start to give yourself that opportunity, because that, you know, the market could easily play around even 30 minutes or an hour and then go to your favor. So just give yourself that space. This is a beautiful example as well. Enter in here twice, and this is just a classic pullback, right? Popping up, retracing, pulling back, adding first to the position. It bounced up all the way to that wick, but I couldn't take some of the partials off because I just started small. When it dropped against me, you can still see we have great levels here and basically all that range, right? So it dropped to that level, adding more, dropped again, took some liquidity out from those, and that's it. From here, it's moving higher, taking the partials out. Basically, I should have added more even here when it pulled back. So this is something I can learn and work on in future. But as you can see it, even if it goes against you like crazy and you are wrong on the first entry, as long as you understand the setup, the concept that the price should go higher, then you can add more, again, when you keep it within those risk boundaries. If you're gonna go crazy and planning to risk $100, but at the end losing $300, then you will blow your account, and you will basically do the same idea that I did when I lost the 91K. You gotta stick within those $100 or whatever it is risk that you're willing to take. And this is the only negative side for that trade, for that example, basically. We can see it here as well, and this is also something nice to learn from. Shorting here all the way, even if it goes against you, you add more as long as you within that risk parameters. It dropped down, I covered some here with a profit, and then added more when it went against me, exactly like you saw in the other trades. Now, because I already had that profit here, I let it ride against me, and maybe a little bit too much, all the way up to here, and I covered. But this is because I had my profit, I took my profit before that, so I had enough room to play around with. I actually expected it to start shifting, but it didn't. Later on, started to short it here until I covered it here and here. So those ideas or those trades, I hope you're getting a lot from them, because just understanding that it's not about where you enter, it's actually how you manage the trade from where you entered. And this is something that a lot of the traders will miss, and it will usually takes time until you just get to that point when you understand you should do that. Mark, you asking about moving averages. I'm not using moving averages. I do use, you know what, let me correct myself. I do use one moving average. It's 200 EMA, but in most cases I will use, since I'm trading reversals, in most cases I will use the MACD, the MACD. So yeah, that's for that. Rob, is that
I'm here.
Okay, cool. Guys,
I'd like to ask anybody else with questions to email Mr. Katz or visit him at tradethepool.com. Thank you, Michael, for the great presentation. Building a bulletproof risk system is absolutely the key to success in trading. We really appreciate you taking the time out of your day from across the pond and joining us on Traders Corner. Ladies and gentlemen, Mr. Michael Katz, who is the CEO of Trade the Pool, the largest prop firm in Tel Aviv, where they do fund stock traders, not just futures traders. So if you'd like to trade stocks with OPM, other people's money, without risking any of your own capital, you can learn more about Michael's specific offer by clicking the link I put in the chat box, or you can find him at tradethepool.com. Thanks again, Mike. I hope you have a great everything.
Yeah.
And I do need to get in contact with you offline. I got a couple questions for you.
I'm here.
All right. Enjoy the rest of your, is it evening over there?
Yeah, evening, 8:30.
Be well, sir.
Yeah. Take care, guys.
Be well. I just want to take a minute to thank everybody that came. You know, we have hundreds of live attendees from all over the world, and we're very grateful to have you all here. Ladies and gentlemen, our staff at Traders Corner does sift through hundreds of pro traders to bring you the most credible and qualified to participate on our shows, and I hope everyone is listening closely, because our next presenter is here to deliver an opportunity to secure $1 million in trading capital. He's a hedge fund manager, author, and trading psychology coach. As a trading psychology coach, he enjoys helping traders discover and overcome the #1 obstacle keeping them from being consistently profitable or multiplying their returns. His challenges have helped hundreds of traders transform their trading psychology based on Nobel Prize winning research. Ladies and gentlemen, here to present how to secure $1 million in funded capital is Mr. Marcus Howard of Tradechology. Welcome back to Traders Corner, Mr. Marcus.
Rob, how are you, sir?
I am doing good. How are you?
Oh man, listen, I am about maybe just a week off of my honeymoon. I got married on May 28th.
Congratulations,
Thank
brother.
you, sir. Thank you so much, man. It is very good to have the opportunity to marry your best friend and to spend the rest of your life with them. So the vibes have been high for the last month. I'm feeling really good, excited to come and give this presentation for you today.
Hey man, congrats on so many levels. If you married your best friend, you did it right, and I wish you many, many years of happiness and success.
Thank you. So you can see my screen, all right? Yes.
Loud and clear and bright and clear.
Beautiful. Okay, so then I'm going to start my timer here just to make sure I can get my full 45 minutes in, because Lord knows I need all 45 minutes for my presentation. All right.
Run with it, brother.
I'm going to press start here and dive right in. So thank you everyone for being here today on this momentous day where we're going to be talking about how to use other people's money or how to secure $1 million in funded trading capital for yourself. So this is going to be a great presentation that we're going to do. I want to just start from the outset by saying that my mantra in life, one of the ones that I use, is that I will only pass this way once. So what does that mean? That means in this presentation, I'm going to do my best to not fill this with fluff, not to fill this with things that aren't actionable that you can't use. So because I'm giving everything that I can, I ask and I challenge you, Facebook, Instagram, TikTok, email, whatever it is that you may be doing that distracts you during presentations like these, because Lord knows I do it too. Okay, if you can just take a 45-minute break from all of that and just lock in for these next 45 minutes, I guarantee you, I will give you multiple golden nuggets that will change your trading forever. I do these presentations specifically to do that. I may never speak to you again. So I want to make sure that the information I give you today is genuinely going to help you. So let's talk about what we're going to be covering as we lock in today. We're first going to talk about how just 30 days of proper execution can change your trading career forever. That's not hyperbole. I will show it to you in this presentation, how if we can just have you focusing in for 30 days, you're going to be well beyond where you ever thought that you can be. I'm also going to share with you my $1 million funded account cheat sheet. I'm going to talk about the top 3 reasons that traders lose their funded account. So not just getting them, but keeping them for the long term. I want to show you why they lose them, and then how you can go ahead and keep them for the long term. So that's going to be my last thing, top tips to keep your funded account. So let's dive in. Oh, sorry, forgot. I added this one just recently. So in the end, I'm also going to talk to you about a new tool that makes passing combines the easiest it has ever been. I don't care what you do as a trader. Chances are you probably have not seen what I'm going to be introducing to you at the end. So stick around during this presentation. I think you're really going to enjoy what we have to cover. So first, let me get the risk disclosure out the way. We are not financial advisors or broker dealers. MLH Capital, which is the parent company of Tradechology, we are not broker dealers. Please, every example that I use here of a security is for example purposes only. Do not take what I'm saying. Go bid the maximum number of contracts in your funded account or in your brokerage account, get your account blown and say, well, Marcus told me to do this. I am not. I am just providing you examples. Investing carries risk. You can lose some, all, or more of your money. And no part of this presentation should be copied, recorded, or rebroadcast in any form without the consent of MLH Capital. But don't worry, we're more than likely going to send you the replay after this anyway. So sit back, relax, and let's really jump into how we can get $1 million in funding and use it to start hitting your income goals. So a little bit about me. I'm the guy in the middle with the Kool-Aid smile there. This was a interview that I did for Pix 11 New York a little while back. We talked about Roth IRAs, retirement accounts, NADEX, so many different things. It was actually a pretty cool and pretty fun interview, and we were able to help a lot of people. They got plenty of mail after that in terms of the things that we covered, which is cool. But for me, my full-time job is that I'm a hedge fund manager. So I run my own hedge fund. I'm also an author and founder of Tradechology, which is the coaching program that we use to help traders to secure $1 million in funding and fix their psychology-based issues. Now, a little bit about how I got consistent. So I started trading in 2017, and I did it with a $25,000 paper money account on NADEX. And if you're not familiar with NADEX, it's the North American Derivatives Exchange. It's actually about 6 blocks from where I live here in downtown Chicago. It's a binary options exchange. So at the most simplest level, let's say you're trading the S&P 500. If you think the S&P 500 is going to be above its current price, you buy an options contract. If you believe it's going to be lower, you're going to sell it. It was a very simplistic way to do options. It's more akin to a bucket shop. If you're a student of trading history, you know what bucket shops are. So it's more of a bucket shop. But in 18 months, I grew that account from 25,000 to just over 13 million. And then again, it was paper money. So I'm not saying that I became a millionaire from that. But what that did was teach me the things that I needed to do. And then I took $5,000 of my own money, and I went from $5,000 to now running a hedge fund just 3.5 years later. So there was something that I was able to pick up and put down. And it's great that I have a avenue that I can share it with, doing these presentations as well as in my coaching company. So I enjoy helping traders discover and overcome the number one obstacle that's keeping them from being consistently profitable or multiplying their returns. I do this so much, I'm actually pretty good at it now. Within about 5 or 10 minutes, I can identify what it is within you and then show you exactly how you can change it and provide you the tools. My courses and coaching have helped traders transform their trading psychology, and it's all based on Nobel Prize winning research. This isn't something I created in my basement. I am standing on the shoulders of giants. We are using things that have been proven to change people's behavior, but we are applying it to trading. So all of those issues that you may have had, over trading, revenge trading, those things that you didn't necessarily know how to stop, adding too many contracts, we have proven protocols to help so that they don't occur anymore. And even if you just fix those issues and did nothing else, that would help you so much more than trying to get the new shiny indicator or the new auto trading system or whatever the case is going to be, because the issues are with you internally. It's not with the tool that you're using. You can break any tool if you are broken on the inside. So we help to fix you with what we do. So just quickly, this is my book. I'm not saying it for you to go out and buy it. It's actually not written for adults. It's for college students anyway, but I just included it here because it was pretty cool that in that Pix 11 News interview, they did a shout out of my book. I saw a spike in sales in the book. And I wrote this book when I was 19 years old. I'm 37 now. So 18 years later, this book is still being put on the news, still being sold every day on Amazon. I just think it's really a blessing that the life that I've been able to lead so far and to help cool people like you guys. So let's talk about who this presentation will help most today. This will help you if you are struggling with passing your trading evaluation. So if you're trying to get a funded account and you haven't been able to get one, this presentation will help you out a lot. But if you have been getting accounts and you struggle with keeping them, please pay close attention to what's in this presentation, because this is going to immensely help you to keep these accounts for the long term. This will help you with if you struggle with sticking with or establishing high probability trading setups, if you struggle with discipline, over trading, and other trading issues. But even if you feel like some of these things don't apply to you, please stick around, lock in, get off of the distractions for this presentation. I guarantee you there are at least 2 to 3 golden nuggets that you will take that will apply directly to you And if you utilize them in your own trading, it will transform your trading. Okay. So I like to start with this slide in most of these presentations, which is going to give you some perspective on getting funded. So I got this information from a company who I still don't publicly have the permission to say what the name of the company was, but this was the actual stats that they have from 1 month of traders that tried to qualify and get a funded account with their company. So of the new accounts that they had, so that's 5,718 traders came in to take these exams to try to get funded. Okay. Of those 5,000 people, only 10% passed phase 1 of the exam. So instantly from 5,000 people to almost 572 people were able to pass. That's a 90% failure rate. But then this particular company that I'm talking about had 2 phases. So you have to pass this thing twice. Of the ones that passed phase 1, only 24% of them, or 137, got to phase 2, which means they actually got funded. Okay. Now, of these people that actually got funded, the 137 of them, how many do you think actually got to their first payout? 4. So out of 5,718 people that started this journey, only 4 people ever made money. That is 7 1,000ths of 1%. Okay. The reason why I'm showing you this is not to discourage you from wanting to use funded or the other people's money or to take some of these funded exams, but instead I want you to understand that getting and keeping a funded account is hard on purpose. Okay. They don't want to just give $10,000, $20,000, $50,000, $150,000 to people that are just going to simply lose it. So they make it hard on purpose, but I want to show you a process that's going to help to make all of this easier for you. That is my promise for you in this presentation. So we'll start with how 30 days of proper execution can genuinely change your trading career for the better. And this is why you should really lock in and pay attention, because what would your life be like if you had, let's say, an extra $20,000 to $40,000 30 days from now? That's what this presentation is going to show you. So I'll start here with Apex Trader Funding's new account rules have made it easier than ever to trade full time. You can receive 100% of the first $25,000 per account and then 90% beyond that. So you can qualify in as little as 7 trading days. So that's what, essentially like 2 weeks, you can qualify for one of these accounts or multiple accounts, and you get payouts in just 10 trading days. So if we round it up, we'll say 7 trading days to qualify, 10 trading days to actually get the money. If we round up to 20, because there's 20 trading days in a month, we're saying in 30 calendar days, okay, you have the ability to be able to get to your first payout. So if you're doing up to 20 accounts, which you can do, a lot of the folks that are in my trading program, they do 10 at a time, but you can go up to the max of 20 if you chose to do so. And for each payout, you get $2,000 as your first payout. So that means you can withdraw as much as $40,000, okay, in 30 days if you know how to use a trade copier, and you can just make $2,000 in your funded accounts. And what would $40,000, an extra $40,000 do for you in the next 30 days? I think it would cure a lot of sins, but more than just the financial sins, I feel like it would give a lot of people the motivation and encouragement to want to keep doing this, especially when you're losing so much money. And we're not talking about a few hundreds of dollars. Traders, they lose thousands, tens of thousands, sometimes hundreds of thousands of dollars I've talked to with traders. They're that far in the hole before they ever come and talk to me. And so it's a pleasure for me to be able to show them opportunities for them to be able to start, at the very least, digging their way out of the hole that $40,000 is simply not enough. But that's what you are capable of doing, and I want to show you how you can do that by sharing my $1 million funded account cheat sheet. So let's lock into what's here. So I'll go over the main pillars first. There are 4 main pillars, and I'm going to spend the rest of this presentation pretty much going over them in detail. So quickly, just hear what the 4 pillars are. It's not about how much money you make, but it's about how much you lose per trade that makes the difference. Pillar number 2, multiple funded accounts will always be better than one large funded account. Pillar number 3, the most popular instruments aren't always the most profitable, and this is a very important one. Futures trading is more than just NQ and ES, ladies and gentlemen, okay? And then the 4th one is that discipline and psychology is truly paramount. So if you just lock in and pay attention with me for these next 4 pillars, I think you're going to really learn a lot about how you can transform your trading. So let's talk about the first piece, which is it's not about how much money you make, but it's about how much you lose per trade that genuinely makes a difference. Trading exams are hard on purpose because the win-loss ratio is not always proportional. So what do I mean by this? In most cases, you can only lose about half as much as you need to make in order to be able to qualify for the accounts. So when you have those sorts of odds stacked against you, it becomes increasingly harder to be able to pass these exams unless you really put some things in place. So what I'm showing you here are the actual This is for Apex Trader Funding. So this is, and they may have changed it since I took the screenshot maybe a few weeks ago. But for the most part, these are the goals. These are the exam criteria that you have. So basically, if you're trying for a $50,000 account, you have to make 3,000 of it. You have to make 3,000 before you lose 2,500. If you go to a $100,000 account, you have to make 6,000 before you lose 3,000. Now notice the huge drop off there. Okay, it's not just that if you double the amount that you have to make, that they actually double the amount that you can lose. They actually increased how much you can lose just by $500. So if you're someone whose math is mathing right here, you recognize instantly that that doesn't make sense. Then you can go to the larger one still, $150,000 and $250,000, where you have to make sometimes as much as $15,000 before you lose $6,500. So I put a little, and it might be a little blurry. I'm on a 4K screen here, but I apologize. What I want to lock in on is just basically the percentages of how much money you need to make versus how much you can stand to lose per account. So if you're going for a $150,000 account, you have to make 6% before you lose 3% of it. So you can only lose half as much as you were supposed to be making. But if you did a 50K account, which is what I suggest that most traders do when they're taking the funded exams, you have to make the 6%, but you can lose as much as 5%. So 5% is going to be much better. It's going to be more money that you're able to risk per trade that'll be able to help you out a lot. So if nothing else, if you've been one of those traders that go for the $250,000 or the $300,000 accounts or whatever because you get more, you should probably stop that. Okay, the $50,000 one is the most advantageous one that you can get. It's usually the easiest one that you can qualify for, and it gives you the best possible odds. Okay, so that's my first lesson that I want to give you here is if you're going for other ones, go for the 50K accounts. So it's not about how much money you lose per trade, make per trade, but it's about how much money you lose, okay? And trailing drawdowns also eat away at your profits if you trail. I know there are many traders that talk about adding to your trades or taking one off and letting the other one run to be able to trail. What I found in my experience, and I work with thousands of traders now at this point, is that in order to pass these combines predictably and consistently, usually makes more sense to just go for a particular profit target. You shouldn't allow it to trail, because usually what happens is you give so much money back to the market before you exit the trade. And in most of these exams, it's based on the unrealized profit. So how much money you've made in total, whether or not you've closed the trade. So if you're in a trade and you give $300 back, even though you close the trade at a profit, because it goes off your highest point, you still lost $300. So a lot of traders find that they're failing these exams, not because they're not making money, but because they're not paying attention to their drawdown limit. So it's very important that if you have a profit target, just stick to that profit target and design your risk profile around the loss limit, okay, and not your profit goal. This is probably one of the most important things you can do. Design your risk profile around how much you can lose, not how much money you stand to make. Because if you can limit your losses, you can stay in the game a lot longer than if you're just trying to go after the money and then you don't really care how much you lose and then you just hit that goal at the end. So my hard and fast rule whenever I'm working with traders is don't risk more than 10% of your available drawdown on any single trade. So if you can only lose $3,000, every trade, the maximum amount of risk that you should have, no matter how many contracts you have on, is $300. That's usually going to keep you in the game a lot longer than trying to do anything else. Okay, so what I'll do is, if you want to, you can take a screenshot of this. I'm also going to drop this in the chat for you as my first gift to you. This is the exact risk profile that I use and that people in my coaching program are using to qualify for these 50K accounts consistently. Okay, so I don't have enough time to go through it. Usually this takes me about 30 minutes by itself to talk about the risk profile, but I want to give you this copy of it so that you can have it, so that you can use it, so that you can utilize it and take from it to be able to inform what it is that you're doing. But just briefly, I don't risk more than 3 contracts per trade. I usually don't take more than 5 discretionary trades. My stop loss is always going to be 10% of the available drawdown limit, which is $2,500. I usually don't give more than $150 back to the market. I stop trading if I lose the equivalent of 3 trades per day, which is $750, and I don't participate in the market more than 4 hours, okay? I'm not holding trades overnight, and I don't take discretionary trades during times of news or anything else. And so take this, use this, please utilize some of this that's in here that makes sense to you, and just this one slide alone, okay, is worth the entire time that you're gonna spend on this presentation, and I still got more to cover. So let's jump in. The second pillar is that multiple funded accounts is always going to be better than one large funded account. And so why is this? Multiple accounts allow you to multiply your earnings. If you understand the process of being able to utilize a trade copier, which means that you can take a trade on one account And those trades are copied to however many accounts you want. It can be 10 more, it can be 20 more, depending if you want to chain something together. But essentially, you'd make a trade on one account, it gets copied to other accounts. What this allows you to do is each winning trade can be multiplied. This is 10x because this is what I teach, but it can be up to 20 times if you have one of the trade copiers that allow you to copy up to 20 accounts. So you can get a 20x return on your investment simply by taking the same trades if you know what you're doing. But most importantly, what it does is multiple accounts allows you to spread the risk across the different accounts. So you're not putting all of the risk in one singular place. That's the number one mistake that most traders make, is that they try to make all of their money with their funded accounts in the one account that they have. It is so much harder to make $10,000 in one account than it is $1,000 across 10. Okay, so what I want to implore here, if you want a lesson or a nugget of what you can take that piece, that it's easier to make $1,000 per 10 accounts or across 10 accounts than it is to try to make $10,000 in one. Okay, so you want to be able to spread the risk across multiple accounts so that you're not putting any single account at risk, because the number one account killer is too much risk per trade per account, meaning that you're trying to get the $10,000 in one, so you're taking $10,000 worth of risk, as opposed to I'm trying to make $1,000 in one account that then gets multiplied to 10 accounts. And so my risk can be a lot smaller because I don't need to take huge risk on any single account to get the money that I want to. But you always want to be in a position where you can trade again tomorrow, okay? No mistake you want to make on any single day should be the thing that's going to stop you from being able to pick up with your same account and try again the next day, okay? So just keep your risk under control. All right, so the second thing that I want to show, let me exit here, will be the funded account calculator. This is going to be, and I'll get you guys the link right here. I'll drop this. This is going to be the second gift that I give to everyone in this presentation today. And it's going to be, if you utilize this calculator, and here I'm going to drop the link in the chat for everybody right now so you can have it. Okay, so the first thing, first and foremost, is you're going to want to make a copy of this. And the way that you do that is you want to go in and you want to go to File, and you want to go to Make a Copy so that you can put it on your own Google Drive. If you try to request access to mine or get access to mine and change it, I'm not going to do it. So just go to File, go to Make a Copy, and put this on your own Google Drive. Now, what this is showing you here is so there are two main tabs here. One is going to show you what you need to do in order to be able to qualify for a funded account. So I break down the different instruments into tiers. So tier 1 is any instrument that's $25 or above per tick. Tier 2 is anything $12.50 and above, so think ES. Actually, it's more $10 and above, so think ES, crude oil, gold, those types. And then tier 3 is just mainly the regular indices, so anything that's $5 or more a tick, so think NQ, think RTY, think YM, those sorts of places. So what this is showing you is just based on the tier, if you wanted to qualify, and if your profit target was, let's say, $3,000, which is what to qualify for a $50,000 account, it's showing you here how many net positive trades you need to make based on the number of contracts that you're doing. So if you're risking 2 contracts, actually, let me go here. So if you're risking, 2 contracts, so you're putting in about $250 per se in risk that you're doing, that means you need to be net positive 12 trades. So you need to win 12 more trades than you lose, and that's going to help you to qualify for accounts. I don't really speak in this many trades per day because the market never gives you winning trades every single day. So instead, if you're looking at over the course of a month or over the course of 2 weeks, how many net positive trades do I need to have in order to be able to qualify? So this is to qualify, but the cool part is once you get to the second sheet, and the second sheet is going to show you, okay, now once you have these, let's say 10 accounts per se, okay, so this is what this line A is. So we qualify for the 10 accounts we need. Now we're looking for somebody who's trying to make $10,000 a month. They're trying to replace their $100,000 a year income. Now this is showing you how many net positive trades you need if you had 10 accounts to get to, let's say, $10,000 per month, which is your goal. And notice just how much smaller these numbers are, okay? If you were trading ES today, and you were just basically risking 10 ticks, or you were going to make 10 ticks or lose 10 ticks. So we're not doing any sort of strange calculus on how we're doing our ATM system. It's just the basic one-to-one risk reward. You would just need to be net positive 4 trades per month in order to make 10,000. Okay, that is the power of being able to use multiple accounts versus just being able to use one. Okay, so if you just remember nothing else, go through, play with this spreadsheet, make a copy of your own so you can see just what it's going to take you to be able to get to your income goal. It may be 12,000, it may be 15,000, it may be 20. I'm not exactly sure what it is, but this will ultimately help you to be able to figure this out. Again, this spreadsheet, I can spend 20 minutes on alone, but I don't have that kind of time. So I want to give you that gift. I'm gonna let you play with it on your own, but let's go ahead and lock back in here, okay, for the rest of this presentation, because I've got some more good stuff that I want to share with you. So pillar number 3, which I think this is, numero tres, is popular instruments aren't always the most profitable. Futures is more than just NQ and ES, ladies and gentlemen. The most popular instruments in most instances are traded by high frequency trading bots, meaning that if you are a discretionary trader, meaning you're clicking the button yourself to get into one of these trades, you're already at a tremendous disadvantage, because by the time you even if it just takes you 5 seconds, by the time you have thought through what you need to do to be able to enter into a trade, in most cases, you're not getting the optimal price that it is anymore. So what we typically do is say that you want to use instruments that are still traded by humans because they move more predictably. So think more RTY, which is the one that I use that I made my first $100,000 with. But there are other ones like corn or wheat or crude oil to some degree, although that is bots. But there are other more predictable moving instruments and just the one that everybody talks about online. And what you may find is if you jump over to some of those other ones, and not to the ones that everybody teaches, that you can ultimately make more money. Usually the richest people do counterintuitive things, and I can tell you that one of the counterintuitive things that most successful traders do is not just focus on the major 2 indices. They focus on other instruments that help them out very much. So I'm gonna just show this briefly here. So this is just a video. Again, I want to put my money where my mouth is. I want to just show you receipts to show you that I'm not just full of hot air and BS, right? So I want to show you a video of me passing a combine using our RTY strategy, which has an automated strategy, by the way, which has a 70+% pass rate. So I'm going to just skip to the part where we actually pass the thing, and I'm not going to do more than that. But then what I'm going to do also, just because, again, I want to be able to provide receipts, is I'm going to drop this link in the chat to the full YouTube video. So if you want to go and look at the full video to see exactly what happened, feel free to do that. I just don't have enough time to do that in this presentation. So we go here. Again, all completely automated. I'm not pressing anything, and I'm doing this in a playback connection because that's just the fastest way to be able to get to hours worth of data all at, or do days or weeks worth of stuff all at once. Okay, but I can show you plenty of graphics of us doing this all the time with people that are in our group. So there we go. I had to make, this was a $100,000 one, so I had to make $6,000, and there I go. I just crossed the $6,000 mark. So we're able to do this completely automated without taking any discretionary trades, without any sort of intervention other than the rules that we put towards what we want our automated trading system to do. Okay, so then the next thing, let's go to this next one. So here's Adam. Okay, so Adam is one of the members that is in the million account funding coaching program. And this was Adam. He had been working with me for, and I don't remember if I put it in here, but I think it was like the first 30 days that we were working together. He was able to qualify for $10,000, $50,000 accounts. Okay, but before he came to us, he was a trader that didn't have a solid strategy. He was struggling with, the big thing was over trading for him. Okay, over trading and revenge trading were 2 huge issues. And so when we worked with him for, an extended period of time on fixing those issues first, because that's what we're about. It's not just here's a new trading system that's automated with the new bells and whistles, but instead we focus on the psychology of why you're doing what you're doing and show you exactly how to fix that. Because once we fix that, then everything else becomes so much easier for you to be successful at it. But if you're still trying to push a rock up the hill by dealing with all of the stuff that you never really took the time to pay attention to fix, to be able to get past, I mean, you're simply going to keep having issues. But when he worked with us to fix this stuff, within 30 days, okay, he was able to qualify for those 10 funded accounts and get $500,000 in trading capital, which I thought was very cool and very interesting. So these are all 10 of his certificates that he got at once. He was so excited to share these with me, and I was excited to see them because it just took him 30 days of working with us to be able to get here. But he's not the only one, okay? So these are results from our private Discord channel. I'll go through them briefly. I could show you 100 more, but I just pick the ones that were either recent or the ones that were pretty cool. So first day with Tick Trader, Chris went up $1,000. The one you see underneath this is Johnny, who was in our group. He passed 3 evaluations in 1 day using the automated systems that we're talking about. And then in the very next day, so he made $3,000 on the first day. And then the very next day when he actually got his accounts, he made another $912 on 2 and then $1,800 on the other one. So it's not just me. It's something that can be replicated by other traders, which is the most important thing. How many times have you talked to a guru who can show you results all day long, but you can't seem to do it on your computer no matter how hard you try, right? So I want to give you these examples of not just me doing it, but other traders that are doing it as well. Ro, who is a pilot and also works for the airlines. He's another trader that is a very strong trader in our group. He, again, net positive weeks. He works with 10, sometimes 20 accounts, sometimes more accounts than that at once. So he's had some pretty good days where he wins trades, makes multiple $1,000 days. Char is another one. Her real name is Charlotte, who's doing this with her funded accounts. So not just evaluations, but she's got her actual funded accounts with multiple companies where she's having days like this where across 9 accounts, 10 accounts. You see, this is 2 different days in a row. She's up $500 across all of her accounts on one, $800 the next day, or $900 the next day. Okay, so there are real traders in my group right now that are actually getting results with the things that we're talking about. I'm not blowing hot smoke up your butts. Okay, this stuff really, really does work. There are, again, there are more certificates than I can give, but there's just not enough space on the page to be able to do so. But just one of the things I want you to notice is that a lot of these traders have multiple evaluations passed. So it's not just the one, they're with multiple companies. They're doing this in many different ways. Like, you can't just do this one at a time. So we really are working on something that you can build upon as the true foundation. This isn't the latest indicator, okay? This is a fundamental shift in how you can really change your trading for the better over the long term by fixing you. We fix your trading too, but most importantly, we take the time to fix you, okay? So let's go into some of the things that we can fix, or the top 3 reasons that traders lose their funded accounts. So let's just go into number 1. The reason number 1, the primary reason that traders lose their funded accounts when they get them, is simply contract size. Large losses usually lead to a dangerous cycle of triggering the emotional desire to enter back into the market. How many times have you had this happen in your own life? You wake up in the morning, you're excited, you're out the shower, you eat a good breakfast, you get a cup of coffee, you're ready to attack the market today. You're like, okay, this is the day. I'm going to make the $1,000 or the $500 or whatever your daily goal is. When you start, the first trade you take is a loss. And then you're like, damn it. And so now, typically the next trade that you take, you're looking for a better trade, but you usually just take the next one that's available to you, which sometimes can help you out and win, sometimes can be a loser. In most cases, the second one is a loser. And so now, damn, I've lost 2 trades. Okay, so now I have to double the number of contracts that I'm putting on, because I got to get that money back that I lost in those 2 trades. And then, God forbid, you lose that 3rd trade, and now what happens? So there's this perpetual cycle that happens, but typically it's just coming strictly from contract sizes, that you're not having the discipline to stay within your risk profile for the contracts that you're supposed to be having. So reducing your contract size drastically reduces anxiety, analysis paralysis, and revenge trading. So rule number 1, for how to keep your accounts for the long term, please reduce your contract size. Number 2 is going to be systems confidence. So in terms of systems, what a lot of traders do is they think in terms of individual trade outcomes versus a series of trades. Now, let me slow down, and what do I mean by this? Because most traders don't have confidence in the trading system, the next trade that they take has to be the one that's going to get them their salvation, get them over the hump, fix whatever issue that they have. And because they don't know if the next trade that they're going to take after that one is going to be a winner, they put a lot of pressure on the next trade that they're taking. But if you talk to any successful trader that's been doing it for, let's say, 10 years or longer, and I mean have been making money 10 years or longer, you will find that almost none of them care about the next trade that they're going to take. They usually think in terms of over the next 50 trades, the next 100 trades, the next 250 trades, I should be at about this much money. So they don't know whether or not their next trade is going to work out, but it doesn't make a difference to them, because they've done enough testing and analysis to know that if they could just go through the motions and hit this many numbers of trades, that they should be somewhere within this ballpark. And that's where you should be too as a trader. It shouldn't be about this next trade is going to get me the 10 grand. But over the course of the next 100 trades, I know that I'm going to be up about $13,500 or somewhere in and around there, right? From being able to do the testing. So what usually happens when you think in terms of individual outcomes is you don't really completely have confidence in your trading system, which is one of the things that we want to help you to do. Your analysis feels right, but you've lost trades in the past that leave you questioning that analysis that you're taking. So you can look at the trade and be like, you know what, this looks like a buy right here, but then you don't take it because you've lost trades in the past, and then it ends up working out. Then you're like, well, man, okay. Then you see the next one, and you're like, okay, this one looks like a buy. I didn't take the last one, so I'm gonna take this one. You take that one, it ends up being a loser. How many times did that happen? And then you begin to spiral down into emotions, abandon your trade plan, yada, yada, yada. Like, we know this story because it's happened to us so many times before. It's definitely happened to me. So the third reason is that you go through an emotional trigger after a loss, which I've alluded to this before. So most traders, and this is a huge thing, that if you could just stop this one thing would help you out, is that they set an arbitrary amount of money that they're looking to make per day or per trade. If I can just make $500 per day, I'm going to be set. If I can just make $1,000 per day, I'm going to be set. The issue with that thinking is that the market does not provide profitable days every single day. So what happens if you have this goal of I'm going to make $500 today, and then your first trade ends up being a loser? So now you're working against the clock and against your profits to go, okay, well, now I have to do other things to compensate for that money that I just lost because I need to get myself to $500, okay? I see this happen most often when you lose the first trade of the day, and then this also happens very much if you're close to your profit target. So let's say we're taking an exam, you need to make $3,000, you're at $2,800. So essentially you're 1 or 2 trades away. Most traders will then do something, or they'll lose that next trade before, they need one more trade, they lose that trade, and so now they're doubling the number of contracts because they need to get the money that they lost back, plus get back to the point where they're trying to go. So again, they're adding more contracts, they're doing things outside of discipline in order to make that money back. That leads to them spiraling out of control. It's happened to me, and I can tell you more times than you would want to know how many traders, when I have a coaching session with them, they tell me that that's what they do. They're 1 trade away from passing their evaluation. They lose that next trade, and then all of a sudden they lost their account, which means they lost $2,500 from an emotional trigger from a $100 loss. So what we want to do is make sure that we mitigate against those things, because it's going to be great in order to be able to do that, okay? So traders, and this is true, routinely abandon their trading plan after they just lose 2 trades in a row, okay? So it's not I've lost 10 trades in a row and now I need to go back to the drawing board. Just 2 losing trades is enough to get people to abandon their trading plan altogether and just now try to do it discretionarily or haphazardly. So we want to make sure that we give you a little bit more discipline in that. And I want to show you how you can ultimately be able to keep your funded accounts for the long term. So that's how you lose them. How do you keep them? Number 1, please, please, please reduce your contract size. If you do nothing else but just half the number of contracts that you have now, you will do a lot more to keep you in the game for the long term. Another thing is stop trading for the day if you lose 3 trades in a row, or you lose the equivalent money of 3 trades in a row. Listen, it's okay for it not to be your day, okay? It happens to most traders, but it's not okay that when it's been demonstrated that it isn't your day, that you keep trading despite what the reality is telling you on the ground, okay? So my hard and fast rule for myself and our traders is if you lose the equivalent of 3 trades in a row, just stop trading. Go take a walk, go do something else for the rest of the day. The market will be here when you get back, but more importantly, your account will be there when you get back too, because you're not overreacting to what's going on. You want to set up an automated loss limit in your brokerage accounts. That means at the rhythmic level, if you understand rhythmic, if you use these funded accounts, okay, set a loss limit there that if you lose, let's say $750 or $1,000 on the day, rhythmic will stop you from trading before you hit the loss limit set by an Apex or a Lilu or whoever is the person that's doing those exams. So just you having something that thwarts you from getting past where you should be losing money in the first place will do a lot to help you to keep those accounts for the long term. Because typically if you go down $1,000 on a day, your emotions are taking over anyway and you're not making the best decisions. Using trading psychology exercises to reduce anxiety and install more natural discipline, this will do more for you than any new indicator will ever do. I promise you, if you just fix the things that are going on with you, and that's what we spend most of our time doing. And I just want to put this here twice because it is so important. The number 1 thing that you can do to save your funded accounts is please reduce your contract size. Okay, this will save you over the long term. But for those people, and this is the part of the series I got maybe just about, actually I'm just at 10 minutes left. So I might be able to get through this today, Rob. I'm pretty proud of myself. So I want to talk about the new tool that here at Tradechology we have that's in private beta. You can't get access to it unless you get access to it from our beta list that helps you to pass combines the easiest that it's ever been, okay? And it's a tool that we call Trade Copier Pro. So what's Trade Copier Pro? It is in most instances a traditional trade copier. So if you're familiar with Replicanto or Apex, they have their own trade copier. If you're in the Forex space, they have their own copiers where you can take, again, one trade on one account and it gets copied to other accounts. But what ours has that I don't see for most people in the futures industry is the reverse functionality. So if you take a trade, it has the ability to be able to, over how many accounts you choose, to take the opposite side of the trade. So why is this important, okay? This one tool allows you to enable you to turn any losing strategy that you have into a winning one. And so you wouldn't, how do I want to say it? Most traders, and this is not me poking fun at any particular person, it's just the truth, okay? 90% of traders lose money. So when I'm talking to traders in my one-on-one sessions or people that are interested in joining my coaching program, it's safe for me to assume that there are some issues that have you to lose money. One of the things that you can do if you have a system that you just can't seem to pass these combines for whatever reason, just have this thing take the opposite side of your trades, okay? So all the times that you've been losing, now they turn into winners. I want to talk about a couple of different case studies in which this will make the most sense in terms of how traders can use this. Number one is to reverse your normal trading strategy. So if you come to me with the strategy that just you can't seem to pass these combines, you can't seem to be making money consistently, you may make some money, but eventually you give it all back plus some, no problem. Just turn on this button, trade in your sim account the way you normally would, but then have this thing taking the opposite side of your trades in those other accounts. And so all those times when you would lose and then give that money back plus some, you'll be able to make it. So that's case study number one. Case study number two is to reverse your least profitable timeframes. And this is probably the more powerful one than just completely changing your entire strategy, is using a tool like even inside a Ninja Trader, which I know most of these funded accounts they use. They tell you the times of day in which you make the most money or you're losing the most money. Where if you can just locate that hour, that 2 hour, that 3 hour window when you're losing the most money and just simply turn on TradeCopy Pro during those times, in those times when you've been losing, now those will become winners for you. In times where it's been demonstrated that you've been winning, just continue to trade the normal way. So this allows you to get the most bang out of your buck. You don't have to try to tweak your mind to try to figure out, okay, well, during this time, I'm just going to take the opposite side. Just press a button and it'll do it for you. Just keep trading the way you're normally going to trade and you'll be fine. Now, use case number three, which is a very cool one. It's the one that we've been using since the beginning. It's just to create custom strategies designed to lose. I can tell you from experience and with the analysts that work with us, it is so much easier, okay, to create a strategy that doesn't make money than it does that does. So for every one strategy that makes consistent money for us, we usually throw about 12 or 13 away that don't. But now with TradeCopy Pro, we don't have to throw those away, because if they are losing money consistently, we can just go and have a tool that's taking the opposite side of the trade, and so we're able to make the money. So TradeCopy Pro is only available to funded account program clients, so people that are in my coaching program, and it's currently in private beta. We do have a plan to release it later in the year, but as of right now, it's just for that group of people, and it's really been helping a lot of traders. So again, I could show multiple examples of these, but I thought it was more powerful to show 3 different examples of one person that's been using the TradeCopy Pro, where you'll notice that there's a large negative day or a large negative account, which is the sim account, and then the one beneath it is their Bulletproof account or their funded account. So what they're doing is they're taking trades designed to lose in their sim account, and then in their Bulletproof account, they're taking the opposite side of it. So they're losing $2,500, but they actually make $3,700 because our tool is taking the opposite side of the trade. Same thing here, they were down $1,275, they made $2,300. This isn't an anomaly, okay? There are multiple traders, there are dozens of traders that are using this, that are utilizing this to qualify for a funded account, sometimes in a single day, okay, if you want to be able to do so. So we try to look outside the box. We don't just simply go, okay, well, what's the next thing that we can do? But what are some things that we can genuinely do to help to really make a lasting difference in how you trade? And it may not be, oh, become a better trader, okay? Most people, they're trying. I'm not saying you aren't trying to become a better trader. Of course you are. But there may be so many different things that may be holding you back from being able to do that, from whether it's a skill gap, a knowledge gap, a psychological gap, or any sort of gap in between. So one of the reasons that we released TradeCopy Pro is for those people who just can't seem to figure it out the traditional way. Just take the opposite side of your trade and you'll be doing just fine. And we've been able to get results in that sort of way. So again, I just want to end on this last slide. I got 5 minutes left now, and then I'll talk about, if you are interested in learning more, how you can work with us. But I just want to finish on this slide because it's so important. 30 days of proper execution can genuinely change your trading career for the better, okay? Apex has made it easier than ever. You can qualify in as little as 7 trading days. In 10 trading days, you can get your first payout. So let's just say in 30 calendar days, if you were trading 20 accounts, you can take home nearly as much as $500,000, okay, before Apex Investing says that they want to start taking 10% from their profit split. So before we're talking about $40,000 in a month, but what would an extra $500,000 do for you? How many more cents would that forgive? How much more confidence would that give you if you're able to do that? A lot of what I've shared in this presentation can genuinely help you to get there. But if you're someone who's looking for a little bit more help, let me talk about how, what would be the main difference if you want to do this yourself versus do this with Tradechology. And I can do this in 4 minutes. Okay, so when you work with Tradechology, the number one thing that you get is your $1 million funded account guarantee. Okay, so that means that we'll work with you to secure the funded account that you need, and work with you to get your first payout. We'll work with you to fix your trading issues, to master your trading psychology and your emotions, and to establish discipline to stick to your profit and your stop loss. We'll also help you to establish discipline to stick to your A+ setups. And if you don't have A+ setups, we have them, okay? So we will give you the setups that we know that are used on a consistent basis to help people to qualify for these exams. So we really help to do everything that we can. We don't leave anything to chance. And also you get Trade Copier Pro, which is in private beta. Our full satisfaction guarantee is if you haven't secured $1 million in funded trading accounts and made it to your first payout by the end of our formal program, which lasts 12 weeks, then we will continue to work with you for free until the goal is hit. Because for us, it's going to be about getting you to the goal. It's not the arbitrary amount of time. So we want to make sure that we get you across the finish line if you trust us to help you to get there. So by now on the screen, and I'll also drop it in the chat for you. Rob has already done so as well. Thank you so much, Rob. Is if you want to get involved, okay, and you want to learn how Tradechology can help you, you can just go to tradechology.co/Traders Corner and sign up for a time to talk. I've got 2.5 minutes left, so let me talk about what's included in the program. First and foremost, you get a $1 million funded account roadmap. So everything that you need to do, you need to know in order to be able to get yourself to $1 million in funding. Establish a combine optimized risk profile, so one that works specifically for combines and not just willy-nilly. We'll show you how to back test and optimize a quantifiable edge with the tools you actually use. We'll give you a proven combine strategy with a 70+% pass rate. We'll give you behavior change protocols based on Nobel Prize winning research. We'll also give you our trading psychology mastery course and our course on how to stop over trading and revenge trading for good. So all of that is included in our $1 million funded account roadmap. But then you also get a dedicated trading coach. And in most instances, it's going to be me, where you get access to me via office hours as well as one-on-one coaching calls, where I can help you with your trading psychology. I do a full trading system audit. So I look at everything that you're doing. What are your entries? What are your exits? What tools are you using? What indicators? And we're going to go ahead and fix it at a core level just to make sure that you have everything that you need to be successful. We'll diagnose and fix specific trading issues, and we'll show you and we'll help you to be accountable and systematically measure your progress. On top of that, we do group workshops. So every Monday, Wednesday, and Friday at 4 p.m. Eastern Standard Time, we meet as a group and we talk about all things related to trading. So on Monday, we do trading psychology. On Wednesday, we do trading systems. So that's auto trader, entries, exits, all the things that you need to be consistently profitable. And then on Friday, our resident psychologist, Dr. Sandra, comes in and she gives a group therapy session specifically for traders. As much as I try, that's everyone's favorite session. 1 minute and 15 seconds left. So you get lifetime access to the following. You get the automated trading system and our proven combine passing strategy and algorithm. You get our $1 million funded account training and setups, our private Discord channel, our full library of behavior change protocols. So all of that is included lifetime. Okay, so the proprietary trading system you get, you keep it for lifetime. Discord channel, you keep it for lifetime. All the videos, you keep all that for lifetime. You don't have to keep paying. So if you want to get started, just go to the link below, fill out the application. Then you meet with me one-on-one because I want to make sure that we pass the vibe check. Okay, I don't just accept everybody into my program. I want to make sure that you're a good fit and that we're a good fit for you. And then because you're on this call or you register through this link, I'll give you a 20% discount on enrollment as well, which folks seem to like very much. So as a special bonus, each trader that signs up for the funded account program will get access to Trade Copier Pro. So you'll get this tool that's helping traders every single day to be able to qualify for exams, taking the opposite side of their trades. Every trader that also joins our program, I will share my RTY and silver trading strategy that's been proven to pass combines at a 70+% success rate. And our coaching program is full. We usually have a wait list that we've activated. And so what I want to do just for people that are in this particular call at the Investor Summit is I'm going to say that I'm going to make 5 spots available for people that want to join our coaching program, and you're able to do so simply by using this link. So with that said, Rob, I was able to do it in 45 minutes. That is my presentation for today. Hopefully I was able to provide value to people today that you can utilize some information here to really start to use other people's money to grow your funded trading accounts.
Hey, Marcus, every time I listen to your presentation, I learn something new and find something else I love about you. The information you give is just incredible. Ladies and gentlemen, Marcus Howard is the real deal. If you're interested in securing $1 million in funded trading capital and have a professional step-by-step guide you to overcoming the emotional roadblocks in your trading and helping managing your finances by a hedge fund manager, then look no further. You can learn more by clicking on the link in the chat box, and you can find Mr. Marcus Howard at tradechology.com for more information. Marcus, thank you so much for making our audience such an incredible offer, and thank you so much for being here today. Happy 4th to you, sir.
You're most welcome. Happy 4th to you, Rob.
Be well, Marcus. Ladies and gentlemen, that'll bring us to our next presenter, who's been involved in the market since 1997 and is the founder of Technical Traders. He is an internationally recognized technical analyst and trader who has authored the book Technical Trading Mastery, 7 Steps to Win with Logic. His mission is to help his clients boost their trading performance while reducing market exposure and portfolio volatility. Ladies and gentlemen, here to present Traditional Investing Method is Killing Your Future, Stop Holding Losers, is Mr. Chris Vermeulen, founder of TechnicalTraders.com. Welcome to Traders Corner, Chris.
Hey, thanks for having me, Rob. Can you hear me loud and clear?
Hear you loud and clear, see you bright and clear.
All right, so you can see my full screen there. Traditional trading methods are killing your account growth.
Oh, I will not ignore this because I'm tired of suffering.
Right on. All right, thanks for the intro. Welcome everybody. Thanks for sticking around. And I'm going to really switch gears up. Marcus had a great presentation. I used to trade futures. I know exactly where he's coming from, and I trade systems. And he brought up some really good points that emotions are the killer. And we're going to touch on that here because it's one of the major problems we all have as active traders, active investors. And yeah, we'll go through all that stuff. So today I want to talk about how kind of the traditional trading methods that most people are using are killing our accounts. Whether you are an active trader or a passive investor, you're going to see that the two extremes are very dangerous. And as Marcus mentioned, 90% of traders lose money. So the more you trade, generally, the more danger you're in and the harder it is to make money. So I want to try and skirt around that whole problem. And I've got a very different and unique way to do that. So this presentation really is for self-directed traders and investors who want higher annual growth with minimal risk, but you struggle with your emotions getting in the way, which is one of the biggest things. And of course, if you keep switching strategies, you're not cutting losses. All of these things are major problems, and they all tie back to a good part of emotions. And I think a lot of people don't realize that you can preserve and protect your capital, especially large amounts of capital, with a very low risk strategy that can generate returns of 10 to 15% a year and not have to risk a lot. And you can actually find a way here to generate more money, become wealthier when you reach that financial level of success, when you're retired, to be actually wealthier and get wealthier every year than kind of eating through your money and getting poor every year. So I'm going to touch on that. It's a very different style of investing, switching it up from active trading to a different approach. So let me just jump through the disclaimer real quick here. Access to this webinar is for educational and informational purposes only. We provide educational services that are meant to teach you the risks and reward of trading and are not implying or guaranteeing any profits. Past results are not necessarily indicative of future performance. Trading securities and options involves risks, so do not trade with money that you cannot afford to lose, and consult a licensed broker or a financial advisor before placing any trade to ensure it's suitable for your circumstances. Now, these disclaimers, we've got to put out there. The SEC is hot on the trot, but I find the financial industry pretty funny. That last line, we have to, run it by a financial advisor before placing any trades to make sure it's suitable for our circumstances. The financial industry is completely backwards, in my opinion, where everyone is generally funneled into one strategy, one size fits all, which is the buy and hope strategy. And there's no downside protection. And that's what the average investor has to suffer through. And that's why we're all here. We're self-directed traders and investors. We want to protect our money and we want to grow it substantially. And we want to do that every year. And we know a typical advisor, the financial industry, cannot do that. They believe in passive methods that literally just bring money into the market. They park it forever. And it is a roller coaster ride. So I'm going to show you a difference between active, passive, and something that's in between that really not a lot of people kind of do. So let's go through some stats first, because we kind of you need to realize the threat that we all have here. So there was a research report by the Employee Benefit Research Institute. They came out with a report saying 40% of households in North America are expected to run out of money in retirement. And it's interesting, there was another company came out with a report as well, and they focused on individuals, and their results came out with 81% of individuals are going to run out of money in retirement. Now that's a scary number, and it makes sense. There's just over 2 people per household, so the numbers work out pretty well. They're very similar, but you got to think 80% of running out of money. That's the worst thing. None of us want that. We get to retirement, and I know this, I know a lot of people in retirement, and as soon as they retire and quit their job, they're literally already pinching pennies. They're worried that trip is gonna eat into their money, and they can't do this, they can't go out for dinner. I mean, that is not retirement. That is like permanent jail almost, knowing every day you're becoming poorer and poorer, and if you have too much fun, you're gonna go broke. And I'm going to show you how you can completely buck that trend and actually become wealthier every year in retirement, and probably not even be able to spend the amount of interest you earn on your retirement money. It's literally just money you can have fun with, burn, go on trips, take people, spoil people. That is my goal. And I don't believe active trading and sitting in front of a computer and risking all that is the way to do it. And I don't think passive investing is an option either if you want to fast track it. So 2 main reasons people are going to run out of money. Inflation eats into it if they don't invest well. We have high inflation rates right now, but the biggest one is people don't protect their retirement accounts. They don't protect their capital. And there's a few big mistakes. I'm going to bring some of them to light so you can see a lot of people don't realize these things. And they're a little more catered towards a longer term view. They're not day trading or anything like that. But if you don't understand these, and most people don't, they don't want to think about these things. If you don't grasp them at some point and take control of them, you're always going to suffer. You're just going to be doing the trading game forever. It's a daily battle. Once you get active trading every day, your emotions are with the markets. The market is constantly trying to take your money. You're fighting your emotions. The odds of winning are really, really poor when you get into short-term strategies. So that is what I want to crack everybody out of and get people moving towards. So I'm going to cover these challenges that we have as investors, as active traders, and we all have pretty much these same things. We all want higher returns with lower risk. We want to reach our financial goals much faster. Who doesn't want to be retired? Who doesn't want to have endless capital so they can go do whatever they want? And of course, everybody is worried about running out of money in retirement. So I'm going to touch on these. And the reality is that things are slowing down behind the scenes. Sure, everybody says the stock market's great, the economy's still booming, but if you look behind the scenes, things are weakening, and it's about to get a whole lot worse, I think. And I think after this presentation, hopefully the insight I give you, you're going to walk away feeling really excited about things, because you're going to know no matter what happens in the market, if it crashes or skyrockets, you're part of it. You're going to have security. What I'm showing you is consistent, that you can forecast 10 years out into the future, and you'd be like, I know where I'm going to be roughly, and I have no concerns financially. And that is the key. I don't want to battle every day, every week, every year to make money. I want to know I'm just going to chug along. Life is good, and I don't have to work really hard for it, and I don't have to fight myself, my emotions, and millions of other traders every day. So that is what I want to kind of share with you. So at the end of this webinar, if you stay through to the end, I'm going to share with you this infographic that you'll be able to download. And then you can also get access to this asset revesting quarterly newsletter. So if you want to learn more and get into what I'm going to show you here today, make sure you stick around to the end so that you can get part of this research. So a little bit about me really quick here. Born in Canada, I got a wife, 2 kids. I'm an entrepreneur. I'm an inventor. I'm a technical analyst. I've been involved in the market since 1997. I live and breathe this. I started when I was 16, more or less, in high school, and it became my game, became my sport, my passion, my business, my lifestyle, everything. You name it, I live and breathe the markets. It's all I do. This to me is heaven. I love the markets. I love investing. I love investing in all kinds of stuff, inventing things real estate, new businesses, movies, you name it. Investing is amazing. It's not just strapped down to the stock market. So a little bit about my background, because the background is where all this comes from, and where the power, where my insight, I think, can really help you. I've got some bad stories. I've got some good things. Both of them, you need to realize they come into play. They're very important. And if you can see why I do what I do, that might just, help you see the light in terms of there is a different way to make money from the stock market, not the typical chasing stocks and newsletters and lots of trading and all that stuff. There is a much different way. So a long story short, my parents were entrepreneurs. I've seen them work, 60, 80 hours a week. My sister and I used to help them do stuff. I know how hard it is to run a good business, make lots of money. They became very financially well off. In fact, my parents had over like 1,500 real estate units when I was younger. Amazing. We had a great lifestyle. A few bad things eventually happened, and they lost everything. They had to go for bankruptcy, and we went from the top of the food chain to the very bottom. Nothing left but our clothes and furniture. And I'll tell you, it was unpleasant. It was depressing. It was dangerous. In fact, my dad almost died. He ended up getting epilepsy seizures because of the lack of sleep and stress. So a dramatic life change for the worse, and losing a lot of money is very dangerous, not even for your health. I mean, it's across the board. So I don't want that to happen to anybody. And that was a real eye-opening experience. And that is the reason why I'm here today, because I think we're coming into a time where investors, people who are close to retirement, who have a lot of capital, or who are already retired, need to know what is potentially happening and how to protect it and how to profit from all future movements going forward without risking very much at all. So that is kind of my whole goal here today. So without trying to brag, that's the last thing I want to do, but I want to just share with you, when I was 27, I was able to semi-retire. I built my dream home on the water. We've got a pool, we got boats, we got a cabana, we travel, we do all the fun stuff, because I was very focused. I started investing and trading when I was 16 years old. 27, I reached my first wave of financial gold, my dream board that I made in high school. I reached that, and that is what focus can do and drive. And, the whole point now here is to just enjoy life, stay healthy, keep the family happy. My daughter here, Mirabelle, and Leo, and Kristen, my wife, and my son, Ben, our ski club is 4 minutes behind us. My daughter has a horse and competes. I mean, this is what we're all here for. We're all here to stay healthy, to have a happy life, a good family. And so money is not an issue. And that's what I want to try to show you can do without risking and going through the drudgery of the financial markets and doing it the hard way. So let's jump into challenge number 1 here, which is higher returns, less stress, lower risk. If we could get those things, that would be absolutely amazing. And I'm going to show you how I do it and how I'm teaching thousands of others around the world. But let me give you a little background, a little story about how I became so focused on risk, because risk is probably the most important thing. If you can control risk, you're going to override your emotions, you're going to override all the other issues, and everything goes from a dark storm and frustration and losses to blue skies, free time, and lots of money. That's literally how it can be if you actually just manage positions. So long story short, when I was 14, I started to take my pilot's license. When I was 16, I ended up getting my pilot's license, and I did my solo flight. And I was pretty darn nervous on my first solo flight. I could literally fly a plane around the world, and I couldn't even drive a car yet. I wasn't allowed to drive a car yet. So here I am on my solo flight going up for my first circuit, and I am on the borderline of laughing with excitement, crying in fear, like shaking in panic. And here I am singing literally like kids songs out loud in the plane. I was so nervous. This was like a life-defying moment. And the only thing that kept me together was on my leg was my checklist. If you're a pilot, or if you've ever seen a pilot, you know there is a checklist for absolutely everything. Before you get in the plane, you got to do your walk-around checklist. Before you start the plane, you got to do a pre-start checklist. You got to do a taxi checklist, a pre-takeoff, a circuit checklist, a landing checklist, you name it, there's a checklist. And I learned at a very young age that, hey, if you have a checklist and systems in place, then you can make it through anything. So my emotions were flying high, more or less out of control, but all I had to do was put my finger on my leg on the checklist, check off each little task, and before I know it, I came down from that crazy high and landed on the ground safe and sound, all because I followed some rules that were proven to work. And that is what creates consistency, success, and everything builds on top of that. So that was when I was at the age of 16. A few years later, my parents ended up going bankrupt and we lost everything. And that was when I had another wake up call. Oh my gosh, you can have everything, health, happiness, money, and then it can be all taken away with a couple bad events that can be out of your control. And that was when I realized, okay, if I don't protect my money, if I don't protect my lifestyle and my mindset, I can lose it all in a flash. And so that was the second thing. And those two really merged together to be like, okay, I'm going to create a checklist to make sure I don't lose money. I'm going to do this to stay positive. I'm going to make sure everybody's happy. And then a few years later, we work into the 2001 bear market, the tech bubble. And I was trading stocks, doing very well. I made a lot of money right off the hop earlier in the late 90s. The bear market takes place, and of course, I'm buying stocks that have strong earnings. And the stock market's going down, and so are my stocks. And my stocks come out with even better earnings, and the business is booming, yet the share price gets cut in half again. And I lost a ton of money trading on fundamentals and people saying buy and hold is the strategy. And that was my straw. I was like, oh my gosh, I just lost all this money for absolutely no reason on something that doesn't even work. So I ended up gravitating to technical analysis, which is very straightforward. If price is moving up, make sure you're long, you own it. If it's going down, make sure you're standing on the sidelines or profiting from the collapse. If it's chopping sideways, is really noisy, go find a different asset to trade. It's really breaks it down to those kind of core rules and philosophies that I follow. And so that all that comes together to generate the strategy that I'm going to show you here, and you're going to see how it can really benefit your emotions, the lifestyle, and all those things. So what you need to know, these are kind of basic points here, but you need to stop being emotional, and systems will help you do that. You'll still always be emotional, but if you have rules to follow, it makes it a whole lot easier. You need to find a different way to trade. Buy and hold, most of us probably aren't doing that. It's garbage. Super active day trading and systems and scanners and all that stuff. I've done it all. I mean, I've been doing this for over 25 years. That's a job, and it's a battle every day you're fighting, and it's just as fun as it is, it's not for me, put it that way. So let's jump into the first major problem, FOMO, fear of missing out. This gets everybody on both sides. The stock market rallies. If you're not in it or you don't own the fastest, biggest, flashy, shiny stock, you get FOMO. I'm missing out on the move. Everybody's got it. You jump in. We all know how that ends. And then, of course, it starts to fall. Well, you don't want to get out of it. What happens if it rallies again? You're going to be the idiot who sold it down near the lows. So you hold on to it. And then eventually it falls so much, now you're like, I can't sell it. It's way too big of a loss. And you don't want to prove yourself wrong, that you were wrong and you lost money. You will book the loss, even though it's still a loss if your account is down. It's a waste of time and money to have trades locked up, losing trades with your money when it can do other things. The other thing people get stuck with is they want really big returns every year. And I mean, if you think about it, the reality we all know deep down, it's not about, you can't make huge returns every year from the markets. If you do, you're swinging for the fences, you're day trading, what comes with big returns, also big losses. And that's not the game that I'm looking for. I'm looking for people who have a great lifestyle and a lot of capital, who want to protect it and keep growing it, but without all the stress. And that's what it's all about, is maintaining a lifestyle, improving the lifestyle, and moving forward. So I kind of already touched on these, but there's two dangerous high-risk strategies: active, aggressive trading and passive, diversified buy and hold. Both extremes are super dangerous. Active trading, stocks, options, futures, all those things, you're fighting your emotions. It's just super high risk, 90+% of traders lose money. So the more you trade, the more you're likely to lose. And then you flip the page to the other way, just sitting on your hands, turning a blind eye, being told everything will be fine with the buy and hold. You're guaranteed to have a volatile, stressful life and have no control over your returns and when you can retire. So there's a lot of things that fall into both of those that are silent killers. We'll touch on down the road here, but you know, those are the two extremes. And then what I'm going to show you here today is a very different style. It's a mix. It's between both of those, and it's where, you know, if people aren't doing it, there's usually a lot of money to be made in there. And I've been doing this strategy since 2001. I've been refining it and refining it. I trade it with my own money. It is honestly the best strategy I have ever seen. If you have any amount of capital, if you're nervous about swinging big money around, this strategy has got that comfort because it's slower moving and you can trade endless amounts of money. We only trade the most liquid ETFs and assets, and we're only in one position at a time. So we'll get into all this stuff, but this strategy is way slower than what probably most of you want as a trader. Traders, I get it. It's who doesn't? I still day trade occasionally futures when there's a perfect setup for an end of day short squeeze. I'll jump in with a few ES mini contracts. I love to just literally squeeze a little money out of the markets on short squeeze type of days. But the reality is, you know, you're probably not naturally going to gravitate towards this strategy because I'm not feeding you trades. It doesn't have a lot of trades. And then you might be worried, well, if I move to a strategy like this, I'm not going to become that trader that I want to be, and I'm not going to get that trading rush and trading fast stuff and in the groove with the news. And I mean, that's fine. I'm just showing you guys a different way to go about things where you can do better over the long run, most likely, and have a lot of available time and be able to, you know, be consistent, which is the key. So, I mean, I had a subscriber this week. He said, I've been using Chris's system for 2 years, and I have learned a huge amount, sufficient to also know that I need the simplicity of this trading style. And I mean, a lot of these traders and investors who are using this strategy, there's some of them are still day traders, but they are all very aggressive traders, very big swinging for the fences, massive losses. The stories are painful, and they see the light and they realize, oh, only I saw this, you know, like 10 years ago. So that is what I want to try and show you, is something in between that you've seen a million times everywhere else. Now, the last thing you need to understand here, the next key part is your personality type. Knowing your personality is critical when it comes to trading. If you know the Myers-Briggs personalities, there's 16 of them. Out of the 16, 13 do not bode well for financial success. It's not the right mindset. Your brain just doesn't tick properly to be highly successful from a financial standpoint on its own. And crazy enough, 13 divided by 16 personality types is 81%. It's a total fluke. When I ran the numbers, I couldn't believe it. So the personalities alone confirm the earlier results that I talked about from another company saying 81% of people are going to run out of money. Well, 81% of the personalities don't bode well for this. Now, that's not a problem. In fact, those personalities are very good personalities. The key is you just need to know what your personality type is, what style of trading and investing suits that style, and what kind of help you need to hammer it home and do exceptionally well. And I share this, again, if you join my free newsletter at the end of this presentation, once you're on the list, you'll have access to this blog post that I've done and the test you can take, find out who you really are and what kind of help you might need to really become a successful, highly successful trader. Now, putting it all together, I mean, all we need to do, which sounds so simple, is control our emotions, and you need to change. If what you're doing now isn't working, you've got to change your trading style. And then, of course, you need to understand your personality style type. And once you put all these things together, that is how you're going to generate higher consistent returns. You're going to have much lower risk and stress. And trading and investing becomes an enjoyable experience, and it becomes very, very part-time. I'd much rather do hobbies and sports and activities than sit in front of a screen chasing charts around and waiting for news to hit and things like that. So let's jump on to challenge number 2. Challenge number 2, reaching your financial goals faster. We all want that. It really comes down to understanding the markets, how the markets move, and there's market structure. Once you understand the market structure, the clouds kind of part. You can see, through the fog, you can see where the markets are going. And I like to apply technical analysis. And then, of course, we use that to manage our risk. And then we apply that with our strategy called asset revesting, which is a different way to actively trade these markets. So let's jump right into market structure. Market structure, Stan Weinstein came out with a book eons ago talking about how there's 4 stages. I loved it. I base my market structure around what he talks about. Stage 1 is a basing stage. It's shaded red because it's dead money. It's choppy. It's hard to trade. You're way better to move your money to an asset that's rising or falling and take advantage of the trends. Stage 2 is a bull market. Stage 3 is a topping phase. Stage 4 is a massive decline, a financial reset. And you'll notice the bull market and the major bear markets are both green. That's because they're big trends. It doesn't matter if price is rising or falling, we can profit from both substantially. And that is the key, is to not hold through these. Even if this is an intraday chart, these exact patterns play out on the 1-minute chart, on the tick charts. Understanding the market structure is fractal. It works on any time frame. So you just need to understand how to identify these things. So let's take it to a more granular level. Let's look at it from the investor's point of view. The average Joe investor, or average Jane, whatever, as the market is starting to rally again, people have disbelief because they just literally went through a nightmare over here, which we'll get to, and they can't believe it's actually starting to go up now. And then eventually starts to go up enough where they believe, they're like, oh, it might be starting to go up. I might actually get back into the market. Then it's finally on the roll and they believe it's going, they have the thrill, they start thinking they're superheroes, they're going to be rich, they're amazing traders. There's a lot of traders in this phase right here, this thrill euphoric phase. Right now in the markets, money is piling into the ARK ETFs, the growth stocks, the AI, but we'll touch on that probably later. And then eventually the market cracks and moves down. This chart is almost identical to the ARK K ETF. If you were to zoom back, this is 2021 February, it crashed down and it's completely flatlined. But where we are right now in the market is this stage 3 topping phase. People have complacency. They think 2022 was the bear market. They're all starting to pile in. They're all getting aggressive. The put call ratio is getting low. Everybody's leveraging up to the long side. Eventually, when it breaks, if it breaks to the downside, they're just going to have anxiety. They're going to go, I can't, there's no way it's breaking down again. We just had a bear market in 2022, last year. And then it goes even further and they can't believe it. They're like a doe in the headlights. What the heck is going on? What do I do? They start to panic. They capitulate out of the market. They eventually have anger, depression. This stage here in 2008, 2009, there was 6,500 suicides directly linked to falling stock prices. What we're going into is deadly on a lot of fronts. And I got a taste of that when my parents went bankrupt and lost a lot of money, how dangerous it can be. So what is really cool, what I'm showing you is this nightmare becomes an absolute dream for technical traders, people who understand. So for example, this complacency stage, people starting to get bullish. For us, that is like the optimism phase. We're like, oh my gosh, a new massive collapse is coming. This is going to be exciting. And then as people get anxiety and they're like, no way it's happening, we'll be like, oh my gosh, I'm starting to believe the big breakdown is taking place. People can't believe it. They're freaking out. We're like rock and roll. We're crushing it. The markets, everybody's panicking out. We're like in the thrill euphoric phase. So we get this exciting time twice through this cycle where the average investor gets it short-lived and then gets taken out behind the woodshed and beat up real bad by the markets. So that is what I want to show you. I won't go through the stages, the cycles at this point. We don't have enough time here, so we'll just kind of keep moving with the technicals. More or less technical analysis, position management. This is where a lot of it really comes in. You have to manage, follow the markets, follow price, and then manage those positions. So this here is my strategy. Keep it super simple. Red, green, doesn't get a whole lot easier than that. Simple is the easiest. When it's green, we're naturally long the markets. When it's red, we're out of the markets, and we're usually trading another asset that's rising as the stock market is falling. And of course, we move our protective stops up. We hit targets along the way, and we just manage those positions. You have to manage positions. And you never know when this market is going to roll over. When we get technical breakdowns and signs, we move to cash or a different asset until we're reconfirmed, and we kind of go about things that way. 2022, crystal clear. You can tell when the market is in an uptrend, when it finally confirms new downtrends. If you knew this stuff, you avoided a massive beating in 2022. There was no point to be holding through any of that. And so the strategy I'm going to show you, called asset revesting, this is like giving the power back to you, the trader, the investor, to take control of your emotions, take control of your assets, and reinvest them into different assets that are rising. There's no more holding assets going down. If something starts to roll over, you get out. And then we go and look at the next asset, which is, we do that through an asset hierarchy. And it's pretty straightforward. The top asset, now anyone can create their own hierarchy with any assets they like. I'm just doing ones that I like because they're super liquid, slow moving. They've worked exceptionally well for me for a long time. It's what I use with my own money. But you know, the top of the hierarchy is the most volatile and the most opportunity for gains. As we go down the list, things have less volatility. We got bonds, the US dollar, the inverse US dollar, and then like an interest-bearing kind of ETF, or it's like a cash position. And you can see over here, the volatility over the past 20 days, showing us the SP 500 can swing 14% from the extreme high to the extreme low. So it's got a lot of volatility, good potential. Bonds, you know, just over half of that. So it's decreasing in volatility. The dollar is half of bonds, and then cash is just a little bit because we earn a little bit of interest, and it just creates a little bit of movement and growth in our account. So as the markets have chaos, we start to move down this list away from volatility and look for assets going up. So during the COVID crash, this is a chart of the SPY. We ended up getting a sell signal on the market, and at that point, bonds were actually still in a very strong uptrend. We had an entry signal, and we caught a 9-day move in bonds, rallied 19%, gapping above our 15% target, giving us a killer fill at 19%. And we literally got out at bonds on the highest day. And that's just because we followed technicals, we're following trends. And once we got out of bonds, we moved into cash, where we just collect the interest in our brokerage account or in a bill, ETF, and wait until everybody, the markets figure out what's going on. Eventually, the stock market gave a new buy signal. We were able to buy in at the stock market 13% lower than where we exited. We rode it up for another 18% for that next move. And that is how we navigate this market. We rotate through this hierarchy, and believe it or not, about 30 to 40% of the time of the year, we're sitting in cash. Sounds crazy, but I'll tell you, it is way better sitting in cash when the markets are chopping around, not giving any clear signals, earning a little bit of interest, than it is to be out there bashing on the keyboard, fighting for your money and losing money and struggling and wasting a lot of time. This is a very passive strategy, just active enough to navigate these markets. There's only about 5 to 12 trades a year, so completely opposite of active trading, but it's way off from just buy and hold. It's kind of in that sweet spot. And that is the real key here, is to realize there's times to be in certain assets, there's times to be in cash, and cash is king quite often. And it's not about always being in a trade thinking you have to make big returns or anything like that. So if we just jump in, we're going to run out of time here real soon. There's so much good stuff I want to share, but let's just keep going. So the key here is to understand the market movements, identify the trends and manage those positions, and then of course only hold assets rising. As soon as they start to break down and roll over, we're out, move on to the next one. Challenge number 3, not running out of money in retirement. Some of these slides are pretty impressive and probably eye-opening to some extent. Now there's 2 silent killers that I need to touch on really quick, and Most people don't realize there's two drawdowns. And I can't believe how many people don't even know what a drawdown is. We've got so many users that have been investing their own money for years, and I ask them what a drawdown is, and they don't know, which boggles my mind because it's how you can tell how much risk is in a strategy. I go and I look at other people's strategies. They're like 25, 35, 50%. I'm like, there's no way I'm risking 50% of my money on this strategy. And so let's touch on these two drawdowns. The first one, if you know what it is, the first one is most likely a value drawdown. The highest level your asset had, your account had, and how much it had a drawdown in value to the low. And this is the 60-40 portfolio, this thin blue line here. And this is 2022. So investors saw their money, their accounts drop almost 25%. And here we are with the second drawdown, the time drawdown. Everybody's just wasted 17 months, hoping of missed opportunity, missed growth, completely opposite than if you were to just hold assets going up. You can see this thick blue line. This is my CGS strategy, which stands for consistent growth strategy. It just slowly, every 3 or 4 months, we hit an all-time high. It's just inching out the markets. Doesn't matter if the markets are crashing or rising. We have a way to just generate consistent returns and pound out, consistent growth year after year. And of course, our max loss, our max drawdown is less than 6% versus the buy and hold. And I know a lot of traders are holding individual stocks that are down over 50, 60%. So to be able to have your entire portfolio growing every quarter, going up almost with less than 6% fluctuation is pretty ridiculous. It is tough to beat, and it is a very different ride. A lot of subscribers, they're like, it's like paint drying. It's so slow. There's no trades. It feels like I'm not doing anything. They can't believe it, and that's where the power is. The power is in you can do stuff. You can generate great returns. There's no massive crashes. One of the big things here with drawdowns, you end up with sequence of returns risk. And that means you're withdrawing money while it's down in value to live off of in retirement. This is one of the biggest reasons people run out of money way faster than they ever thought possible. And here's an example. Here's a couple interesting angles. So there's two different traders here. There's Mike, he had $1 million, and John, $1 million. Mike is aggressive. He's got big swings in the market. He generated on average 8% return a year. He's got some losing years. He's got some big years, a few really big years. He's withdrawing 50 grand a year. He's retired. And after 10 years, he's got about 818 grand left. Well, here's the crazy thing. You go to a consistent investor, somebody who doesn't have big losses, but just is always almost generating positive returns. You can make less money and make way more, have a much better lifestyle and grow. This person here, John, made $370,000 more than Mike, earning a smaller percentage because he wasn't withdrawing money when it was down 25%. And that's what gets a lot of people caught. A few more bad years in here, 2023, if it turns negative by the end of the year, or 2024, I mean, this poor guy is going to lose a huge chunk of his account, and he'll be devastated. So if you were to look at, if you compare, say, the buy and hold, this is the last 10 years on the buy and hold strategy, averaging about 5.78%, $1 million with withdrawing capital every year, ends up, you'd still have about $1 million, which is not bad. You're holding your ground, although inflation is definitely going to eat away at that, versus the exact same consistent growth strategy, and you've tripled your account. And because you don't have the drawdowns and the losses, you are making a lot more money. And so this is what people, you can experience if you manage the risk. Imagine becoming wealthier, 3 times wealthier in retirement versus running out of money and worried to go on trips and spoil grandkids and all of those things. So that is what I want to kind of cover here in this presentation. This is the consistent growth strategy versus the SP 500, the 60-40 portfolio. And, this is all about trading ETFs, being very consistent and just getting in the market when there's a safe asset to get into and stepping aside when there isn't. Sounds boring. It is kind of boring, but boring means you have a system in place. It means you know what you're doing. There's no surprises. And There's nothing wrong with being boring. You know, you can do other stuff if you're bored, fun stuff, not gambling money in the markets, because the more active you are, the more likely you are to just keep turning your account and never really growing it and spending money, and the stress that comes with it just isn't worth it. So more or less, let me just touch on a couple of things. So if you want to learn a little bit more about asset reinvesting, what I showed you today, you can go to Amazon. You can get my book. I published it last month, Asset Reinvesting. This will walk you through everything in a lot more detail than what I explained here. And this is a totally different way. This cracks trading wide open from buy and hold is one way, active trading is another. And then there's this strategy right in the middle that is reinvesting capital only in assets going up. It's giving the power back to you. And really we're trying to get rid of the financial system from having their claws in us as aggressive traders and the emotions just pulling us in versus, you know, the buy and hold and just sitting there and riding that painful roller coaster. So that is what this is all about. And what I have here is our strategy. So if you want my ETF signals, you can follow those. They're end of day, which is even easier. So when we get a confirmed buy signal at the end of a day, again, there's only a few of them a year, you put the order in, your broker enters it at the opening bell. We provide the stops, the profit targets, allocations for each of those trades. And even if you don't want to follow them, we have auto trading at no additional cost. You can just have it traded and have your account managed for you in your brokerage account, which is pretty awesome. Now, if you're an aggressive trader and you want more action and you want to learn more, we have a 7-hour technical analysis course on all the stuff that we use. We have live mentoring sessions twice a month, and we provide the band trader, which is the best asset now, hot sector trading signals, which is absolutely amazing during a raging bull market. We have not been in one since early 2021. So if you're going to trade hot stocks and all that stuff, you need to wait for a full-on raging bull market before you want to get into those. But if you just want to grow your money and know where you're going to be and have a lot of free time and no stress, CGS is all you need. You do not need to get active and push and trade and dive into indicators and follow the intraday charts. It's a very different beast. So I'm about done here. I'll hand it back to Rob here in just a sec. So the last thing, again, let me just go back to this slide. If you want to join and get this offer where you're going to save, this is about $5,750 per year you'll save with all of this access to learn, to follow the signals, get auto trading, everything, whatever you want there. $5,700 savings. You go to thetechnicaltraders.com/exclusive, and you can get access to that. Also, for attending, you can go to this website here, enter your name and email address. You'll be able to download the infographic. You'll be on our quarterly newsletter to learn more about what the markets are doing, all kinds of markets, not just the indexes, but bonds, precious metals, energy. I mean, you name it, we kind of go through a whole lot. So Rob, I'll hand it back to you, and I appreciate everybody. I know I flew through that and I was trying to be as slow and clear as possible, but it's hard to get excited, and there's so much more I want to share. But I hope you guys found that interesting and hopefully educational in some way.
Thank you so much, Chris. If you don't mind me adding 2 things, there is nothing boring about making or just breaking even while everyone else is losing their money. Totally. And your graphic there about the aggressive versus the consistent trader really does put the principle of the 8th wonder of the world into reality. You know what that is, right?
What is that?
Compounding interest. Oh, the fact that there was a gain the first year and interest on the interest moving forward, man, does that illustrate it beautifully.
Oh man, if you can make less with less risk, but actually make more money, like it's people just don't understand. Once you get older and you have a lot of money, numbers change. No, it's not about being aggressive.
What hurts are the withdrawals while you're down from your initial balance, because then you really have to make a higher percentage to make up for it. But let me not go on and be courteous enough to our next presenter.
All right.
Great information, ladies and gentlemen. If you're over 50 years of age, you don't have time for wild movements in the stock market that could delay or even destroy your retirement. No one wants to run out of money, and we all want to live the lifestyle we envision. Mr. Chris Vermeulen has a solution for you. It's called the Consistent Growth Strategy, and I can assure you, Chris does not hold on to losers. You can learn more by clicking on the link in the chat box. Chris, thank you again for joining us. I hope you have, are you in Canada? I can still wish you happy 4th, can I?
Yeah, happy Canada Day too.
Happy Canada Day. Thank you for being here with us on Traders Corner. Have a
Take
great
care, everybody.
That brings us to our next presenter, who's become interested in day trading in college and has pursued various entrepreneurial paths. He started using NinjaTrader out of curiosity, and to test his ideas, now has over 14 years of experience with programming on the NinjaTrader platform. He's actively day trading futures, focused primarily on the NQ. Joel is most passionate about futures trading, but remains committed to building and developing the best tools for day trading. He enjoys connecting with his customers and is building a tremendous community of successful traders. Ladies and gentlemen, here to present Futures Trading Plan, How to Reduce Stress, it is my pleasure to introduce Mr. Joel Wyse of Affordable Indicators. Welcome back to Traders Corner, Joel.
Thank you so much, Rob. How do I sound, and can you see my screen?
You sound great. I can see your screen just fine. You got it down today, bud.
All right, excellent. Well, I am excited for today and to get to follow up on so many good presenters. Thank you, Chris, for that and for reminding us about emotions and personality tests. I've got several of those in my bookshelf at home, and I'm thinking about needing to go finally read those and take a look. So I'm going to jump right into it here. If you do not have any experience with me, well, this is my website, affordableindicators.com. Here is the team page where you can see a picture and see some more info about me, or you can even, I would recommend this with all the presenters, you can do a Google search and find out a lot about who I am. But I'm going to get right into it here, and we're going to jump straight to some charts. And so my history is primarily as a software developer. I just want to be upfront about that. So everything that you've seen here, I wrote it, I designed it, and I manage it, I support it, I sell it, and stuff like that. And so, but I also have futures trading goals, have traded futures ups and downs, and most recently my preferred instrument is the NASDAQ. So what I'm not here today for is to show you exactly how to trade, when to enter, when to exit, but I do think that I have some incredible tools that are going to help you, and then I think everyone that's here today can find at least one thing that you could add to your toolbox that's going to truly reduce the stress involved in trading. And so specifically with tools on the NinjaTrader platform. So the first product that I want to show you guys today is my product called Duplicate Account Actions. And I say here that I don't call it a trade copier, and that's on purpose. I'm calling it Duplicate Account Actions because I'm saying it's the one solution for keeping your accounts in sync. And so I designed this actually like a month ago because I was finally starting to get into the funded trading world along with my dad. And as a developer, I want to have full control of what's going on. I do get and have gotten a lot of my clients reaching out with complaints about other trade copier solutions. And so I thought I want to design my own. And so the first thing I want to do is show you guys this, and you might think, well, how does this reduce stress? Well, the last thing you should be concerned about as a trader is making sure your accounts are in sync. And if you're trading like Marcus Howard was saying, or as other presenters have said, where you are wanting to copy your trades into multiple accounts, then you need to have a reliable trade copier. And so one more thing I want to say here too, guys, is as I'm presenting, I want this to be interactive. I mean, I have until 3:45. I'm watching that closely, but if you guys have a question, I'm watching them in real time. So just hit me up with that question, and I'll do my best to address it in the moment. So this trade copier, I'm just going to go through it very quickly. I have a more detailed video that you can look at on the website to go through all the features. But here I'm connected to NinjaTrader, so you can see my NinjaTrader account at the very top. my live account, followed by 3 Apex accounts, and then 5 sim accounts. And so how you're going to set a account as a leader account or a master account by just double clicking on this dash. So for this example, I'm going to do Sim 101 as my lead account. And then I can also set, then you would set follower accounts by clicking on the account name. So you can see the accounts that turn gray are the follower accounts. So at this time, I'm going to have 102, 103, and 104 as the follower accounts and 101 as the master account. And you also have 3 columns to determine how the follower accounts are functioning. So in this first column, you can fade, just like Marcus was saying in his trade copy here. And I do want to reach out to him and discuss a partnership. So I think I've got something great that he could benefit from here as well. But you can actually fade the accounts just by setting that up in this column right here. You can also set the number of contracts multiplied. So if you click on this, for instance, I'm going to set Sim 102 to 2 lots, and we'll just do Sim 104 to 4 lots for this example, okay? We'll leave Sim 103 at 1 lot or 1x. And lastly, you can choose the type of contract. So what I'll do actually is set this to 8 contracts, but make it micros. And so then we'll just I'll just run one test trade to show you guys. And what I love about this too is you can see the total for all your accounts. You can also hide your sim accounts. You can see your total across all your accounts right here as well, which makes it really convenient for totaling up all those evaluation accounts or those PA accounts with Apex. So take an example trade. We're up here. I would say we're bouncing off the 20, so I'm going to go long right here in Sim 101. And you can see over here in my trade copier, it's actually showing the positions in real time right here where we're at in all these trades. So in here I've got 8 micros, 2 minis. Here I've got 4 minis on Sim 104 and so on and so forth. Now, what's different about this is it's not actually duplicating orders. It's functioning off of execution events. So how this functions is when I'm filled on this profit target, which I'm about to do right here, when this profit target gets filled, I'm gonna move it down just so we can see this happen. It's gonna submit a market order for the same number, for the correct number of contracts on the slave accounts. So now we're not having to be concerned about moving multiple targets around the chart, right? Or you're not concerned about the targets not staying synced up, or the buy or sell limit entry orders. Like so for instance, like when I sell limit right here on this chart, this order is not replicated to all of these accounts because it doesn't have to be. What happens is if this sell limit order is filled on my master account, then it's going to submit a sell market order on the follower accounts. So I hope this makes sense. It's hard to go into all the details today, but I think, and this has been for me, a super reliable solution where I'm not having to be concerned about if I move this order, then you'd have to move it across all the follower accounts. Change the quantity, you'd have to change the quantity on all the follower accounts. So there's a lot more to keep track of, whereas just boiling it down to execution events, you're still able to keep the accounts in sync, but you're only submitting market orders on the follower accounts. So I think this has a lot of potential to, again, like I said, reducing your stress, reducing the things you have to follow, because you know your follower accounts are always going to be in sync. You don't have to worry about that anymore. And so I want to show a few more things, and then we'll move into the chart trader products. But right here, you can actually hide these columns. For instance, I'm not going to fade my accounts because I think, or at least I hope, I'm going to make the right trades. There's no reason to fade an account. So we can just turn off the fade account. So we eliminate that fade account right here with this button at the bottom immediately by just clicking that. Now I want to show you guys too, you could also show or hide these multiplier accounts. Again, if it's off, even though those numbers are 2, 8, and 4, it's not going to function. Same thing with here, the type account. So now let's say I'm replicating them equally with those columns off, then I'll just get long again by market. And now I do have one lot because those columns are off, they're not functioning, right? So now I just have one lot in all of my accounts. Okay, and then if I hit close all the other accounts are closed, the sim accounts. So lastly, I'll just show you here, you can reset all the accounts. So like if I want to just reset all these settings, now I'm back to a completely blank screen with no accounts selected. Here you can actually show all of your live accounts only, sim accounts only, or all accounts. So there you're filtering out unnecessary clutter in the accounts that are being displayed. So that, and you can see here I've made a few trades today in my live account and in one of my Apex followers account, down slightly. So that is pretty much a complete summary of this as far as I can tell. Again, you can see your commissions, everything else. So that's the trade copier. I'm gonna have an offer at the end. This is available for the first time today at a great price, comparable to all the other trade copiers on the NinjaTrader platform. I think if you use a trade copier at all on NinjaTrader, this should be the one that you need today. So moving on, the second thing, so first I wanted to talk about the trade copier. The second thing I'm going to talk about today is reducing stress through your entries. Then lastly, we'll talk about exits. So entries, this is my chart trader, okay? And it's possible, I can't possibly go through all the features today, but what you see here is available today for $95. This is completely reconfigured compared to Ninjas. You can separate your P&L by instrument or all instruments. There's just tons of different features, but a few things I'm going to show you related to entries is the attachment feature. And so here I can place my entries like I do, limit orders, using the buy click button. And again, versus the right clicking, I think this buy and sell click is a great way to place your orders. As you're placing this, you can also select a plot. So you can see as I'm hovering my mouse over these plots, you're able to see what's going on. This is the 5-minute 50 EMA. This is the VWAP. Here we've got the 200 EMA on a 1-minute chart. So let's say I want to sell the 200. I'm just going to click right here and immediately my sell limit is now attached. You can see the A to the 200 EMA. Okay, so again, you can see where if you're entering this way, I don't even like to use the word stress, right? But you're reducing complexity because I don't want to think about the word stress, but you're reducing the complexity of your entries right away. Like if you don't have good trade execution, you're going to have problems. So that's one way that you're reducing the complexity of your entries. I mean, imagine having to, probably as you have, like as you're trying to go long on the 20 here, right? You're continually moving your order. Every bar that closes, you're having to move your order up rather than just say, hey, I'm going to set it on the 20 and the order is automatically going to trail until I'm filled. This was the trade that we took in Sim earlier when I was demonstrating the trade copier long off the 20 EMA here. So continuing on, the basic tools, also, buy and sell click, attaching orders to plots. So I'll just move on to some more advanced stuff now. These limit buttons, just like in Ninja, except you can really configure these. So I've got this configured now to buy 8 ticks below the bid. So if I click this, immediately I get an order 8 ticks below the bid. That's a lot for ES, but just an example. Or I'm sell limit at the ask +8. So these buttons are way more configurable than the ones that come with Ninja. So that's the basic chart trader tools with some entry examples. Now continuing through these tabs, your entry with position sizing. So like we heard from the first presenter today, and kudos if you guys made it through all these presentations, that's really impressive. That I think it's Anka discussed position sizing from TradeOutLoud. And so I wanted to show this because I think it's like one of the best position sizing tools, if not, I haven't seen anything better on the platform. So if I'm using position sizing, let's say I want to risk $1,000 on the NASDAQ, and I'm going to sell up here. Okay, as I move this around, so size is off, I have to turn size on and then restart this process. So as I click this order, and then right here I'm planning my trade, right? So let's sell down here because that's a more practical sell as we're busting down. We want to sell back into resistance. I can adjust my profit target before the trade is even began. So this is more exits, but I'm just getting into it because we're doing position sizing right now. With entries right here, you can see as I move this down, I have a smaller stop loss. While the stop loss gets smaller, the amount of contracts can go up because it's staying in sync at $1,000 risk. So moving this around, there's 6, 5 contracts, 4 contracts. Now watch as I click, say I want to put it above this bar right here. The amount of contracts on this sell limit order is immediately adjusted to 5. Let's say I change my mind and I want to put my risk up here at the top. Now it changed to 2 contracts because my plan has changed to 2. And you're exactly right, John. Thank you. It's a dynamic ATM. So if I open my ATM right now, stop loss is 84 ticks, profits 40. So that's exactly, profit should be more than 40. But anyways, that's exactly what you're saying is that this, as you adjust these, it's actually moving the ATM strategy around. So when you're filled on this, you're going to have this exact plan. And actually the reason why I wouldn't change this window here is because it's actually changing the ATM that's attached to this physical order. So watch here as I'm filled. I'm just going to move it down because we need to keep moving. So there's my 2-lot trade with the exact profit target and stop loss that I pre-configured before the trade. All right, so this here now is the essential chart trader tools. Position sizing, not something I personally do yet, so I won't spend a lot of time on this, but the essential chart trader tools does include position sizing, also includes like the ability to close targets. So I'll just show you this real quick. Let's say that I have a 3-target, 4-target trade and I sell. Now I can actually close target 1 with the click of a button. So if you see this right here, if I hit close T1, target 1 gets closed. Target 2 closed. Target 3 closed. So again, this is more exits than entry, but you can see how having this in your tool set potentially, depending on how you trade, could be a huge benefit. Thank you so much, John. Yeah, John's talking about using micros and then using this position sizing to trade micros. John, I hope you'll reach out if you have any questions, more questions, just email me. So I'm going to look at some more entries because this is the most powerful stuff right here. This is what I've developed recently and I absolutely love it. So I'm assuming some of you guys in here trade Renko, right? So I've developed this tool right here that can get you into Renko trades. So let's say I want to sell the next red Renko bar. All I have to do is hit this button and now my order is live right in place where that Renko bar is set to close to trigger me into the trade. This Renko bar this order is also going to trail. So if we do get a bar up here, what's going to happen is you're going to see this order continue to trail to stay in sync with, there you go. So we got that bar to close. Now here's the new place where if we get a red bar, we're going to be filled on this trade with literally no slippage. One of the things I hear about all the time with Renko is moves too fast. I can't get into the trade. I get in when the bar closes and I have slippage. There's literally should be no slippage on this because your sell stop order is waiting to be filled as the next red bar closes. Okay, and I won't go through any more of this, but same goes for the buy, etc. You see the preview before you even click the button. And this is also compatible with the ATM planning. Even though you don't see it now, you should be able to see your target and stop in advance as well. Range bars, what about range bars, guys? Let's say I want to sell the next red range bar, same thing. The only difference here is as the range bar moves higher, my order is going to move higher, right? Because range bars are closing based on a certain amount of range completed in the bar. So if this bar moves higher, my order is going to immediately, there you just saw it move. It's going to immediately move up to be in line with the known close of this range bar. We know that if this range bar closes down, it's going to be right down here, one tick above this order, so that when it closes, you're filled in the trade. So again, this is entry on range bar and Renko bar, sort of entering on the bar close, but again, your orders are resting before the bar closes, which gives you an advantage over someone who's trying to enter on the bar close. Less slippage that way. And also regarding entries, so we've covered like attaching orders or plots, we've covered placing stop orders, stop entry orders on Renko and range bars. Let's move on to close bar. So this is the classic one as well that I've developed 1 or 2 years ago. The other ones are more recent, but this is just going to enter on the bar close, right? So this I can configure. Let's say if it closes red, I want to get short. So that would be this configuration right here. You can see the countdown as well on my chart. So I don't know why that countdown doesn't seem to be working, but it's kind of locked at 48 seconds. But anyways, you're going to see that if this bar closes red, we're going to go short. If it's a down bar. So you can also configure this to any bar, right? So let's say that I want to get short. I don't care what direction it closes, and I make this button white. You can see it says any bar, down bar, up bar, any bar. So we'll label it on any bar. So we can see when this bar closes, we're going to get a limit order, one tick behind the bid. So let's watch this. Bar close, which it should any moment. It's been like a minute. We're going to get a sell order right there at the bar close. So now our sell order is waiting, hasn't been filled again because we had a conservative entry, right? So here you can select market as well. So just get in at market when the bar closes. So you can pick the direction of the trade. You can pick the direction of the bar that is going to trigger the trade. So I want to buy on any bar, or I want to buy if it's a down bar. Okay. And then you can pick the type of the order. So I want a market order, I want a limit order, stop limit. In the settings, you can also determine where do you want the order to be placed, such as based on the close or based on the high or the low. So that is on bar close entry. 15 minutes remaining, Rob. I love this. This is just, yeah, it's so fun what I get to do and get to interact with so many customers that say like how much easier their trading has been because of the ability to use these tools.
Joel,
yeah.
Everybody ran over. Feel free to go 5 or so.
Oh, thanks, Rob. I'm trying to wrap, let's say by 3:50 this way or before. This way you can be close to being on schedule, man.
Wonderful.
So, all right. So signals, you guys, is going to be almost like the next level, let's say advanced compared to close, right? Because now you are able to enter on the bar close, but in conjunction with the signal. So like a lot of the stuff I'm showing you guys today, this works with anything. I think even like Dr. Keith Wade today, talking about Heikin-Ashi, like entering on the close of one of his trade signals, when he gets his green dot, right? Why would you not have that set up to automatically enter the trade when he gets the green bar? Or vice versa to exit, which I can do as well with this panel, where you exit on a red bar if you're long. And so the idea of what I'm building here is that it integrates with what you're already doing, ideally, and can just, yeah, simplify and reduce stress, or as I've said before already, reduce complexity. So with this, you got the same thing. You're just going to hit signal. You can see how it highlights all the long signals. This is just my stochastics indicator, which is buying as it goes into overbought, or selling as it goes into oversold. We're not here to get into the signals, right? But those are the signals configured. So if I turn this on, we're going to literally be pending with a buy at market. So market order buy the next time we get a signal bar. And this can integrate with something that any custom indicator I could write for you guys, or any other indicator, most indicators from other third-party providers that have like an output of signals or arrow plotted on the chart. This can integrate with anything. And what it's going to allow you to do is get filled when the bar closes with the signal. And same thing, you can choose your order type. You can enter at the close. You can enter, say you want to enter above the high of the bar, like on this blue bar. You may want to configure any of these signals to enter a stop order at the high. Totally possible, right? Bar closes, buy stop order goes in, you're filled, off to the races. In the case of like this signal back here, you guys can hopefully see my crosshair. You'd never be filled with that plan because you're entering on a stop order above the bar. It never went above that bar. So that's signal entry orders. The last entry type that I'm going to cover today is the bracket. And I also have iceberg and time sliced, which are like to put in high quantity orders. You guys can look at that on the website. But yeah, bracket and bracket close. So bracket is just going to be simple, right? If I hit this button, I get a buy and a sell, right? So a lot of this, the reason to use this is around news events or when you're expecting a big move in either direction, right? So here, the countdown is working now. This really bothers me when that wasn't. But yeah, you got 30 seconds left in this bar, 28 seconds. All right, so you can click to immediately place this bracket, adjust the offset, adjust the stop, the type of order. But let's jump to this one quickly because this one's based on a timer. So let's say you did have a news event coming out at 3:35, which it's about to be 3:35. Now I can get this bracket in automatically. Watch here, 2 seconds before the bar closes, market moves, right? So John, thank you. I don't see your last name. I wish I could identify you completely, but yeah, FOMC bracket orders, great time to use that. The housing reports in the morning, great time to use this. Again, now what's key about this is you're simplifying your trading. So now I don't have to click this button, right? I don't have to click this button to initiate the orders. Instead, even over here, it's even more simple. I just click the button and I can configure, you can set the number of seconds, right? I have it set to 2. You can do 3 seconds, 4 seconds, but I know that 2 seconds before the news event happens, my orders are going to be in and I'm ready to go. And I have an ATM strategy configured with my profit target and my stop loss, just like we're used to, right? So there the orders are in 2 seconds before the bar closed, as an example. So that's bracket entry. So that I would say today, it's not a complete overview, but it wraps up what I'm going to have time to talk about today for entries. So let's again talk about exits. So with exits here, this is the advanced exit orders module of my chart trader. So this chart trader, again, just kind of summarizing this, all of these are options that you can buy for the chart trader. Okay, so closed bar entry is an option, signal entry orders is an option, bracket entry orders is an option. These Renko and range, I call it price-based entry orders because it's literally based on price. Like what's happening with price alone is determining your entry. And then the essential chart trader tools, which is like the position sizing, and you can quickly change your ATM strategies on the click of a button up here. So this chart trader has a ton of different features just kind of based on what you need. I've split it up into different modules. So back to exits, okay. Here you have trailing stops. So again, this can actually be configured. I'm not going to configure these today, but I believe it's already configured from before. But what you can do here is you can put any indicator on the chart. So like right here, it says parabolic SAR. So if I turn this on and I sell market, did you see how the stop loss jumped to the parabolic SAR? And you can select different trailing stop types like high low. Now I'm trailing at the previous bar's high, or I can go back to the parabolic SAR. So you can configure your trailing stop based on any indicator. Select any indicator plot to set up a trailing stop. Now, do you think this is easier than manually continually moving your stop as the trade progresses? You know, if you're scaling in like Michael Katz was saying, and you start getting this move up over here, trailing on this PSAR or trailing on this blue dots, which is like a 2-bar trail, I believe, the blue dots. Setting that up to automatically trail is going to let you focus on maybe what the next trade is, or maybe like other things that you could be doing to prepare yourself for the exit. You could maybe exit in advance, whatever, but you're not having to worry about moving this stop loss order as the trade progresses. The other thing I want to show you with advanced exit orders or exiting trades is exit on close. So this is currently, it's over here on the left side, but you can configure an exit on close for the next bar. So what this is going to do is if you turn this on, now the chart's highlighted and saying exit on close is ready next bar. So that's allowing you just to exit as soon as this current bar closes automatically. So you're not having to hit the close button. It's just going to do it for you when the bar closes. And let's see, the last thing I want to show you here is actually in conjunction with the ATM strategy planning. So you can see as I hover these market buttons, I do have the ability to plan my exits, right? So this is a big advantage over, like, if I'm trying to go short here, I may want to tighten a stop above this high, but I'm going to want to keep my target down here for a retest of this low. Or for example, if I'm going long here, looking like a bullish flag, I could adjust my stop to right below this low, and my target would be at the VWAP. So you can pre-adjust these. So again, reducing complexity, right? After you're filled, you're not going to have to adjust these because you've done it before the trade ever happens. Over here, you can also set these up based on the ATR, which is how I trade. If you go look at that, I'll show you a video here in a moment that you can go watch where I've talked about this concept of basing your profit target and your stop loss on the ATR. So if you look down here, the ATR is 6.25 points on NASDAQ. So right now I have this configured. I turn this on, it's going to be 2 times the ATR. That's why you have 12.5 target and a 12.5 stop right there. So again, you're able to vary. Let's take a look here. You're able to vary your targets and your stops based on how much the market is moving. The ATR, you can see in the mornings, obviously, is about 15 points a bar. Then begins to decline around 11 o'clock. Does this every day. Continues to decline, sometimes comes up, but today we've been slow all the way through the end of the day. Stretch this out. Kind of been, yeah, declining. So the ATR, so yeah, you can automatically set up your exits to be dynamic based on the ATR, and you do that right here as well. And again, that's adjusting the actual ATM. If I go in here, I can see a 50 point or 50 tick stop, 50 tick profit, which is 12.5 points. Hit the red X, it resets it. Now I'm back to 80-80, which was my default setting for this particular ATM strategy, or 20 points. So that covers what I'm going to talk about with the exits. So now I'm just going to transition back to my website and take a look at any questions you guys might have. And I hope you guys, I really do believe everyone in here can find something in this that's going to simplify your trading and reduce your stress and reduce complexity. Pulling up the website right now. So this page right here is the professional chart trader tools. This would include everything that I've showed you today, and today I'm doing 40% off on this, so the total will be $23.95. This is the most expensive product, but the reason I pull up this page is because I want to show you here. I've laid out all the module options right here, from the essential chart trader tools to the close bar, signal, all that. You can go through every single option, order flow entry, which I didn't even talk about today. You can go through every single option that I've had in this. Somebody asked what platform, Lawrence. I'm sorry for missing that. This is NinjaTrader. And so I would encourage you to check it out if you haven't heard of it. But also, yeah, I have not built these products for anything else. What's cool about NinjaTrader, if you guys don't know, is just the ability to customize things much more than you can with any other platform. So you can, okay, so how do you get to this page? You can see all my products right here. Click on all products underneath this menu. I've also got like a support resistance product that I didn't even talk about today as well in here. So you click on this and then you can click on professional chart trader tools. But the page that I want everyone to go to right now, and this is for you, Rob, I'll put it in the chat and you can send it off in the chat to everybody, is this page right here. So this is my offer page for today, affordableindicators.com/traders corner. Rob's going to be putting it in the chat for you guys. This is where I've laid out everything, hopefully clearly, as far as how you guys get started with my software. This top portion right here is where you can go watch a presentation I did on my trade setups and my futures trading plan. So if you click on that, it's going to take you to YouTube. And moving down here, we talked about duplicate account actions at the beginning of this presentation. Lowest price I've ever had it available at $195 using the coupon code right here. I've sold it at $495. I've sold it at $295. I've even sold a few at $995. And so just trying to figure out what the best pricing is. I think I have something great here compared to other trade copier options. But today I want to make it available for you guys at $195. The basic chart trader tools, $95, essential chart trader tools, where I showed you guys the position sizing options, the ATM strategy planning, pre-planning options, $495. You can choose any module. So we did mention closed bar entry today, signal entry. We talked about range and Renko bars on price-based entry, bracket entry. I showed that as part of the last part there. Advanced exit. Anyways, any of these are $295 each, okay? And some of you are gonna like what you see and you just wanna grab the whole thing, because I know people that invest upwards of $5,000, $6,000, $8,000, $10,000 for education, whereas sometimes I wonder, what is the value of education? I think we all need to educate ourselves. I like to say YouTube University is the best place for that, as I call it. But I think this is a great price for a tool set that comes with a ton of value. And if you're going to call yourself a professional trader, you want professional tools, right? So, and I know I can tend to treat it like gambling, but I want to be a professional, right? I want to treat this as a business. Sorry, someone's calling me. I want to treat this as a business, right? And so I want to have good tools. And so I hope you guys would think the same way. Here you go. This is the offer for today. And I'm actually going to throw in my key levels indicator with this purchase price. So it's 40% off on the professional chart trader tools, which includes this whole list of options. And I'll show you the key levels real quick with the few minutes that we have left. I'm also looking for questions. Any questions, put them in there, you guys, or reach out to me. The key levels confluence indicator is right here. So let's just look at the NASDAQ today. So the NASDAQ today did top out at the 5-minute 200 EMA with the pivot point from yesterday. So I'll just straighten this out. Okay, we did initially break down, formed support, came back up into this resistance right here. When we did come back up, and even this morning, it topped out at the pivot point. So easy to point out after the fact, but I think the key levels indicator here is one of my best tools as far as getting a roadmap for the levels that are going to matter for today. Whole numbers, pivot points, high, low, open, close. You can see here it's combining the high of 3 days ago with the high of 12 days ago at the close of yesterday. Let's take a look at the ES. I haven't looked at the ES yet today, so bear with me. I'm just going to zoom out here. Key levels caught the low down here. We had a whole slew of things from a whole number at 44.10, low, middle, and open. The pivot point was, I can see a low here, low here. The pivot point from yesterday was influential. And if you guys haven't used the VWAP, you need to add that to your charts like now, because it's one of the best things. I see reactions every day off the VWAP in these markets, specifically right off the open here in the NASDAQ. So wrapping it up, I'm going to jump back. So that key levels indicator I am including with the professional chart trader tools for free. That is normally $9.95, sometimes $4.95 in a promotion, but today it would be for free if you go all in with me in the professional chart trader tools. So that wraps it up, guys. I'm looking at my notes. I don't see anything else and don't see any questions. So I just want to thank you for the time here. It's a huge honor to be full-time in entrepreneurship and just building the software for you guys, and it affords me the opportunity to continue trading, to continue like building my own trading plan and believing that one day I'm gonna cross the threshold into more consistent trading, right? Because yeah, I would love to just be trading full time and not even presenting today in some ways. But I also love connecting with my customers. So I think no matter how it goes with trading, like I'm going to be in this for a long time, building software, connecting with people. And yeah, that's what it looks like for me. So hopefully you guys enjoyed the presentation. Thanks, Rob.
Hey, thank you, Joel. And there was a point you made, the VWAP. If anybody doesn't have it, trading off the VWAP is one of the most powerful things you can do. He's not lying. But after listening to your presentation, I see why you've been so successful.
I appreciate it, man. And Lobster, it is Ninja Trader only. So yeah, thanks for that question. Thank you, Rob. Appreciate you, man.
Hey, thank you. I love the family values you bring to the table. And I did have a chance to check out your tools on the site, and I was captivated by your enhanced chart trader and the automated chart trading tools, order flow systems, just everything was really impressive. Your online reviews are phenomenal. Ladies and gentlemen, if you want an edge trading the markets, Joel has a solution for you. You can learn more about Joel Wyse and gain instant access to a special offer by clicking the link in the chat box. Thanks again for being here, Joel. Please come back and see us, and happy 4th to you, sir.
All right, man. Thanks, Rob.
Well, ladies and gentlemen, I mentioned at the top of the show that we had a great lineup, and I hope everyone is listening closely because our next trader has been trading the financial markets for the last 15 years and is a graduate of Syracuse University. He wears almost every hat over at Right Line Trading. He's a trading coach, assists with the optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the Right Line Trading community. Here to present AI Auto Trader, powered by Next Gen Intelligence, is Mr. Rory Powers of Right Line Trading. Welcome back to Trader's Corner, Rory. Check your mute button, Rory.
Thank you, Rob. Thank you.
You're very welcome.
I appreciate that introduction. And I just want to make sure that you could see my slide.
Loud and clear, clear and bright.
Okay, okay. Yeah, everybody might want to take a stretch for a minute or two. That's wow, that was a lot of information and some really great information. Phenomenal from start to finish. I had the pleasure of watching the entire event.
Hey, if you don't know, we handpick our traders, and you're among the elite.
Thank you, sir. Thank you.
You're welcome.
And I tell you, it's been a common theme throughout the entire presentation. We all want it to be simple. We need to keep our emotions under check. And there's a good chance that we might have a personality that's one out of those 16 that doesn't lend well to be a trader. I know I'm probably in that category. So I I know I've got a solution for you. I've got something that fits the bill, and it really lends into our, main theme of today is to keep it simple and try not to make those emotional errors. I'm going to be showing you today the AI Auto Trader, and it's wow, is this an exciting system? It's based on mathematical modeling combined with artificial intelligence. And so let's keep the ball rolling. And I just want to, get the CFTC out of the way. Let me mute someone's mic here. Give me just a moment. Okay. So listen, it's very important to know that there's a substantial amount of risk when you take a trade and you're trading the financial markets. You could lose your entire account. Who knows? They might even come looking for you for even more than that. It's a good idea to talk to a licensed financial advisor, which I am not. I am not a licensed financial advisor, and this is for educational purposes only. With that being said, I just wanted to briefly introduce you to the team here at Right Line Trading. I think we've got a team of all-stars, and I'm very proud to be a member of it. Rob did a great introduction, a beautiful introduction to start. And I also want to introduce you very briefly to the rest of the team. I think it's important that if you're going to take the next step and you're going to come aboard and join our trading family, and that's what what we consider you when you come aboard as part of our trading family. We're in a journey together. It's kind of David versus Goliath. We're the Davids. The big institutions are the Goliath, or the market itself is the Goliath, and we're all gonna collaborate with one another as a community of traders. So you become part of our trading family, and I wanted to briefly introduce you to the members of the Right Line Trading team. First, I'm going to start with our two newcomers, who is Jacob Thomas, who's our trading coach. He has a solid foundation in customer service, a deep interest in technology, and his formal education is in cybersecurity and computer science. He happens to be very gifted at AI as well, and he works together with Sergio and Brock and Charles to develop our trading system. So he does utilize his expertise to assist the company in a number of different arenas. The second newcomer to our team is Brock Miller. Brock Miller has several years of experience in customer service. He's also working towards his degree in computer science. He's also really good with AI, and him and Jacob kind of work as a tandem as a team. Next up we have Mr. Charles Sider, who has a very impressive resume. He graduated UCLA. He has a bachelor's degree in computer science and engineering. He has an extensive history of over 30 years of providing global client support and service. He's a trader of the market for the last 25 years, and he helped develop custom strategies and indicators. He has a real passion for helping people. If you ever have the good fortune of spending some time with him, he really takes his time and will customize your entire workspace according to your wants and needs. Now, the next member I want to introduce you to is Mr. Sergio Rodriguez. Sergio's been with Right Line Trading for almost a decade now, and he's our lead developer. And a lot like Joel Wyse, he can make the computer sing and dance. I mean, we saw with Joel the presentation before me. I mean, I was just in awe of seeing what he was able to accomplish. I mean, that's talent. That was very impressive. And I think Sergio is just as good. And Sergio can, like Joel, if you have it in your mind and you have an idea that you want to be brought to life, Sergio can make it happen. He has his master's degree in computer science, and he's a very valuable member of the team. And then I want to get to our traders, and I think that's what sets us apart. Listen, I have the good fortune of talking to traders over the last 10 years, probably 5, if not 6 days, sometimes 7 days a week. And listen, I feel your pain. This is not a simple journey that we're on. It can be a very frustrating journey. And I think what sets us apart is that we're actually on the right edge of the chart every morning in a live market, trading our system in a live trading room. I'm bombarded, absolutely bombarded by marketing emails of Monday morning quarterback who made a fortune in the market in hindsight. Okay, which really is not as impressive, is letting us know before the trades happen, right? And that's exactly what our traders do, is they call out the trades before they happen. Okay. So we use our software, and as software developers, our number one goal is not only to define risk, but to predict the future direction of price. We want to know which way is the market going to go. And we have a number of different ways that we leverage that information. On my top right is Mr. David Kushner. David Kushner is our prop trading pro. He trades 6 funded prop accounts, and he uses a trade copier, just like Joel was showing previous to my presentation. But he trades our system on the right edge of the charts, every morning. There goes the bell. And he does an exceptionally good job at it. He's a true professional. He journals all his trades. He has a track record that he keeps, like I had said, a journal. So going back years, he could tell you each day of the week and each month of the year exactly what his P&L is. Our second room that I wanted to mention is our options live trading room. Listen, most traders that I talk to, the 2 main revenue streams that we cater to are the futures and stocks and options. I know there's a lot of Forex traders, and we do develop software for Forex traders, but I think the overwhelming majority are trading stocks and options in the futures market. Okay, so David Wyse, bottom right, he is our options trading guru, and he's a true professional. Let me tell you, he is part of the Reddit community of traders, which is about 40,000 deep. And he's a verified trader. If you ever go into Reddit, it's a tremendous community. And they've built a community of traders who collaborate and support one another. And they label their most experienced traders as verified traders, where they verify their experience, they verify their performance. And if they get that prestigious verified trader stamp, you know that they're for real. Well, that's what David is. He's a verified trader with the Reddit community. And let me tell you, his result, I don't know of anybody that can trade options like him. His win rate is about 90%. He is 100% technical analysis. He doesn't trade on emotion or gut feelings or biases. He waits for those indicators, just like Kushner. He waits for the indicators on the right edge of the chart to line up. And until they do, he's going to sit on his hands and wait. And I think that that's the type of discipline that's not easy. I'm one of those 16 personalities that just can't do it. And let me tell you, David happens to be in that group of 3. out of 16 personalities that can trade this market. He's a good trader. And last but certainly not least of our live traders is Mr. Craig Emery. Craig Emery has been trading for about 20 or 25 years now. And like so many people, including myself, he, you know, he bought a number of trading systems and indicators that just didn't work. He couldn't find a consistency in any of the trading systems that he had purchased in the past. He found Right Line Trading. He purchased our trading system. Must be 3 years now, 3.5 years. And his performance has been so great and so consistent that he trades the futures. His primary focus is the NASDAQ and the ES and another one of our futures live trading room. And we're very proud to have him as part of the team. And last but certainly not least, I just want to briefly mention Mr. Mark Sachs, Dr. Mark Sachs, who happens to be the founder of Right Line Trading. He has a PhD. He's a graduate of a very prestigious school, Pennsylvania University. He's, listen, I know Mark for, a long time now, and he's just, let me tell you, he's a walking encyclopedia. The guy's incredibly smart. He was in the Phi Beta Kappa Honor Society at the University of Pennsylvania. He has a doctorate degree. He's still a contributor for developing our software, and he continues to run our biotech and options alert newsletters, our alert services. So he's a very valuable contributor to our team, and he recently sold the company to Mr. Mark Miller. And Mark Miller, a personal friend of mine, is a U.S. Army veteran, and he brings to the table those core values of transparency, integrity, honesty. He brings them to the team, and it kind of flows downhill, and it's found its way into really every department of our team. And he's a Cal State MBA graduate, and he's also an active trader. If you decide to join us and trade the AI Auto Trader, you'll find him in the Discord chat group every day. Okay, I've been a part of other Discord groups and a member in other communities. I don't think company make him available. Listen, I don't live in an ivory tower up on the hill. Well, talk to him. You can instant him, and he's exactly what he's trading, what his reasons are, and that's just the family that that we want you to become a part of today. So, with that being said, I always like during these presentations to show a couple of personal pictures, and just recently, and today's no exception, I'm going to do the same. Just recently, and if you saw my last presentation, you might have seen these pictures, but I don't think I showed you these. And I'm going to stick to my 45 minutes. Don't worry. So anyway, the story is like this. About 2 or 3 weeks ago, maybe a month ago, Mark Miller was kind enough to invite the team on a fishing trip down in Marathon Key. Marathon Key is really the southern tip of, it's beyond the southern tip of mainland Florida. Then you get down to the Keys. Well, Marathon is halfway to Key West. Okay. And we all we're going to take a fishing trip. And on the way down, I was talking to them about their fishing experience, which was minimal. And listen, I've been fishing down here in South Florida my whole life. So I thought it was a good time to inform them of the custom of starting a trading pool, kind of a little bit of a gambling pool, a bet on who's going to catch the biggest fish. Because I figured with their experience, I was probably a shoo-in. So we all threw $50 into the pot, and at the end of the trip, whoever caught this fish would get the $150. Okay. So I'm going to show you now the second prize winner. In second place was Mr. Sergio Luque Rodriguez. And you can see him here. He pulled up a nice tile fish in about 650 feet of water down in the Marathon Keys. And in first place, the winner by kind of a long shot was Mark Miller. Mark caught about a 20-pound grouper, also in 650 feet of water. And that was the prize-winning fish, and man, did it taste good. Now, you're probably wondering what happened to me. Well, what happened to me was it's kind of like, you know, the old fishing story goes. It was the big one that got away. He was on there, and my pole went in half. And I think the captain had his drag a little too tight on my fishing reel. And lo and behold, the fish got away. So Mark Miller did win the contest. Okay, enough about the fishing trip. So let's keep moving. Oops. Sorry about that. So I think we all share in, you know, a painful journey with trading. Listen, I think the traders that all went before me really laid it out, and I'm not going to harp on it. Listen, chances are, you know, you've blown out a trading account in the past. I know I sure have. In fact, I'll use myself as an example. I've blown out several accounts. Trading is not easy, and for anybody who says it is, they must be the 5 or 10% that are natural, that can trade, that having thousands of dollars on the line and making split-second decisions and having to calculate a number of different calculations all together at once, can do that consistently. God bless them. They're in the minority, though. Most of us suffer from making impulsive decisions, revenge trading, over trading. We use indicators that just don't work. Like I mentioned earlier, there's in this niche, unfortunately, the industry's full of indicators that just don't work. So it's all led to the same frustrating conclusion, is a trading account. Well, it's been our commitment to bring this to an end. When Mark Miller took over the reins, the AI Auto Trader became his #1 mission. And let me tell you, we've got a seasoned team of professionals that are optimizing this system on a daily basis. The trouble being, and this lends to where we started, as software developers, our #1 goal is to help determine the future direction of price. When our live traders, when that opening bell rings, all of that static of those bars moving in just a random formations, to have an indicator or to have an idea of which way the future direction is going to go, let's face it, that would be a moneymaker, a tremendous moneymaker. And that's been our commitment, is to put together a trading system that not only defines risk, but also can do it automatically, that can wait for all of the indicators to line up just perfect, where you don't have to make those calculations, and enter the trade when risk is defined at its lowest point, based on our software system. So we want to take all of those emotional errors, all of those mistakes, all of those things that we do to sabotage our own trading. And good Lord, do I sabotage mine. Listen, just a quick example. It just happened again this past week. I was in a trade, and you know, And it's a combination of things I've come to realize. It's not just emotions. It's also, what Joel Wise mentioned. He said, listen, I want to make your trading easier. See, I'm finding that let me tell you this story. I took a trade on Thinkorswim, and it was an options position. I had like 3 positions on Royal Caribbean. Now, had I known how to set a trailing stop, or maybe to configure the trade where it would manage itself a little more optimally, this mistake wouldn't have happened. But listen, I don't know exactly how these platforms, all of the features and all of the things that go into maximizing the tool set that I have, especially trading a new platform. Okay, so I wasn't familiar with Thinkorswim. I didn't know how to set a trailing stop or whatever. But to make a long story short, I exited the trade only to see it continue up and up and up and up. And that's part of the problem, is not being able to take advantage of the tools. Let me ask a quick question. How many people here that are attending now, how many of you use NinjaTrader 8? I know a few of the people that preceded me were talking in depth about NinjaTrader 8. How many of you trade futures? And do you trade futures? If you trade futures, type futures in the chat box. If you use NinjaTrader 8, type NinjaTrader 8 or NT8. I just want to get just a little feel. Let me open up my questions box. Futures NT8. Oh, okay. So there's a lot of you. Okay, great. Okay, wonderful. So I see a lot of you trade futures, TradeStation, Larry, futures on both. Frank is futures. James, Joe, Sanders, futures, futures, futures. Ron. Okay, so I have a lot of futures traders. Wonderful. So the system I'm going to show you here today it runs on NinjaTrader 8. And listen, NinjaTrader 8, they've just come out with a brand new platform. NinjaTrader 8, I'm not going to say is a simple platform, okay? What I can say is it's a powerful platform and it's free, okay? We've kind of pre-formatted templates and simplified everything. So all you have to do basically is check a box, and more about that in just a minute. But the most important thing is that this system does not require you to purchase a trading platform or learn all of the intricacies. Some of you probably like to look under the hood and get your hands dirty, and this will also appeal to you as well. But I want you to know that right out of the box, what we're offering here today has all of the pre-formatted templates, has the pre-formatted workspace, comes with white glove installation. So if you know absolutely nothing about NinjaTrader 8, that's not a problem. That's not going to prevent you from taking advantage of this offer today and being a successful trader with it. So with that being said, let's keep the ball rolling. Now, why do we feel? First, let me make this statement. This is by far the most advanced auto trader that we've ever developed. And I say that because in the past we've developed other strategies, and we've kind of evolved like any other trading system does over a number of years, where we continue to optimize and make improvements. Today we have the most advanced and powerful system that I'm going to show you here today. What makes it the best? Well, the performance, the backtesting capabilities, the proprietary indicators that help predict the future direction of price. And when I get to that, I'd like to show you a trading chart. And that's what I'm going to do here in just a moment, is I'm going to show you the secret sauce that runs this system. It's a fully automated system, okay? When you check off that box, to enable your strategy. It's completely hands-free. Okay, you don't have to worry about nothing. All you got to do is stay out of its way, like I do. All right. So making it completely automated, what we've done is we've kind of eliminated all of those problems that every presenter before me did such an incredible job uh, of outlining. The emotional problems, the stress, the simplicity, the complications, the speed of the market, the randomness, all of that, okay, gets kind of pushed to the side. And this system is doing all of the work for you. It's doing all of the heavy lifting. So there's no more cutting winners short like I did on that Royal Caribbean trade. You can't mismanage these. The stops are all preset. The profit targets are in place. Everything has been predetermined for you, and it's all done on a proprietary trading indicators that I'm going to go over here in just a moment. So what I'd like to do here is just bring up my chart, and I'm going to escape out of this for just a moment. And I'm going to bring up the Russell chart. Today, the Russell had a really nice day. And I'd like to just go over very briefly the indicators that come with this system. Let me see if I can do this and go back into my presenter. Sorry, I won't start over, don't worry. Okay, so, I think a lot of people a lot of strategies that I've purchased in the past, they've kind of been black box strategies. They, you enable it and you kind of cross your fingers and toes. You don't know exactly what it's looking at or how it works, but you just hope to God that it does good. And you rely on that technology kind of without knowing exactly how it runs. Well, that's not the case here because I'm going to real briefly break it down for you. And if you do decide to come aboard today, not only do we have an incredibly discounted offer, but we have a ton of resources that goes into depth about everything that I'm going to briefly outline today. This is kind of the short version. However, we do offer a lot more resources that go into everything. So I just want to start with the indicators of what causes our system to take a trade, the calculations that are being looked at behind the scenes. We have an indicator. It's called our signal indicator, and you probably see it. Well, you do see it on the chart now. It's the cross that comes up on my chart when all the parameters have been met in order for a trade to be fired off. The cross that I'm referring to is right here, this cross. And that cross, what that is that's telling you that all of the parameters, all of the conditions that are required for the system to execute a trade have been met. So if you have your strategy enabled under your control center, it will automatically enter the trade at that moment. If you do not have your strategy enabled, it's also an indicator signal that shows up on your chart or an entry signal that's telling you that this is our software system right now is defining risk at its lowest point, and all of the conditions for the most highest probability of becoming a winning trade are met. So you have two ways to get into that trade. Number one is you could have your strategy enabled. Number two, you could click on the buy on your chart trader, and that system will and your system will it'll execute the trade. And we do share with you our proprietary ATM strategy. So if you click buy, your stop and profit targets would be in place. So what the conditions the system is looking at are, number one, the market internals. It's really our secret sauce. The market internals, what that is, it's kind of like having your finger right on the pulse of the market. It's looking at 16 different indexes, uptick versus downtick, on all of the cash market. It's also looking at a few declining ratios. So when there's a large disparity of uptick versus downtick, then it's going to fire off one of those triangles that you see on my chart. Those triangles that you see are telling me that, hey, right now, institutional money is driving the price of the Russell up. Okay? They're driving, there's a large disparity of uptick versus downtick. Now, we also have to have, now that's not the only calculation that needs to be met. There's a couple of conditions that all need to be met. We also have to have background bias. What background bias is the multi-time frame assessment of trend. Prior to the bias indicator that we developed, if you wanted to see what was going on a higher time frame, if you were trading a 5-minute, you might want to look at a 1-hour chart or a 4-hour chart, just to make sure that you weren't entering into a counter trend trade. You wanted to see the overall trend of the market. Well, that's what these background colors are showing you all on your trading chart. It's telling you on 2 higher time frames that you're in alignment on the trend. Okay, so we need the market internals, we need the trend, and another key component is market structure. I mentioned it earlier. We want to be in structurally in a market that's, before we enter a long trade, that our moving averages are also moving up. What I mean by that is the system includes a 50 EMA of an EMA and a 15 EMA of an EMA. These are moving averages that are smoothed out. That really, the 15 EMA is a great assessment. Well, they both are, but the 15 EMA with the time frame that we're trading is a great assessment of momentum. And we use that 15 EMA for our proprietary trailing stop as well. But structurally, we want, for a long trade, we always want our 15 EMA to be above our 50 EMA. We also want our 15 to be green and sloping up, and our 50 to be green and sloping up. So those are also conditions that we have to have met. We never trade into areas of support and resistance. Our software does an excellent job of displaying exactly where these areas are. Joe mentioned the VWAP. We have a VWAP on the chart. We have our volume zones, and we have our pivots. And we have programmed into our strategy that we cannot trade into these areas of support and resistance. So this system, once that strategy is enabled, and listen, we have strategies running simultaneously on the Russell, on the E-mini, on the NASDAQ. We're getting ready to release a couple of brand new ones. We have a new strategy coming out that we call the Golden Goose. The Golden Goose, it runs on a 2-minute chart on gold. And man, has this strategy been crushing it. In fact, one of our new members who has a lot of experience, I spent quite a few hours, a couple hours with them over the weekend, and the two of us kind of brainstormed and put together this strategy. It's called the Golden Goose, and it's been crushing it. So what I was getting at is it can simultaneously trade all of these instruments and wait for everything to line up perfectly and enter the trades for you where you don't have to do a thing. You can't mess it up, okay? And I'm going to show you a video of this system in action in just a couple of minutes because you really have to see it to believe it. It's an extremely powerful and fun system to watch because it can run up the score very quickly. So I'm going to show you a video here in just a couple of minutes. So I just want to stop for a moment and just see if anybody has any questions about any of the indicators that I've gone over so far, or any questions about the NinjaTrader 8 or how a strategy runs, any of the basic questions. Well, I see a lot of you are experienced, and I see a lot of you out there. I've talked to a number of you on the phone before, and we've known each other over the years. And I do thank you for giving me an hour or 45 minutes of your time today. So let's keep moving, because I do want to show you the video. Before we get to the backtest results, I just want to let you know NinjaTrader has an extremely powerful tool. It's called the Strategy Analyzer. However, it is not the end-all be-all. It's not 100%. We've found that sometimes it can be really accurate within a tick or two, and other times it's off. So, I think the most accurate testing that we could do is forward testing, and we test the number of variations on market replay data, which is a little more time consuming. And at times the back testing does have value, because it does give us a clear direction of which settings are better than the others. So I'd like to show you some of the backtest results, and some of the live performance results that we've been getting here using the AI Auto Trader. So let me just bring over. First, let's start with the NASDAQ on a 15-minute. The NASDAQ on a 15-minute is a really neat strategy. It doesn't overtrade, that's for sure. And you've got to be in a confirmed trend for this to execute a trade. It doesn't get faked out with static, like a 1-minute chart might. A 15-minute, and these are results over a period of May 1st to June 16th. So about a month and a half, 45 days. And you can see that it won about 50% of its trade. Okay, so the win rate is not something that's, I wouldn't say it's something to write home about or brag about. What makes it a winning strategy? It makes it a winning strategy because our average winning trade on this is $428, and our average losing trade is $186. Okay, that's what makes this such a profitable strategy. And man, do I wish it would take more trade. But it's a beautiful strategy. It doesn't trade often, but when it does, it's really money in the bank. You could see here on my equity curve, it's been really doing well lately. From in the month of June, the markets had some nice movement. We had a little rally there for a few weeks, and it really took advantage of those big moves up. So that's the equity graph of our 15-minute strategy. And what we do is we run this strategy together with 5-minute time frames, with 2-minute, 1-minute, on a variety of different instruments. We do believe in diversifying our strategies, not only with the instruments, but also with time frame. We don't want to put all our eggs in one basket. We wouldn't want to put all of the golden goose eggs in one basket. We would want a number of different strategies to run, just in case the golden goose doesn't perform well one day. We have some backup in the background running to pull us out of a bind. So that 15-minute can definitely pull you out of a bind. Next is the 1-minute. The 1-minute takes a lot more trade, and you'll see here from the result. Our 1-minute, we're running this strategy over a course of about 3 months, from April 1st to July 29th. All right. So you can see here on my analysis, just a nice smooth equity curve that goes up nicely. And you could see on my parameters of the strategy, when I loaded in the strategy analyzer, you could see all of the templates that we share with you come with all of the input. Those indicators that I briefly went over earlier, they all have inputs to them that we share with you. Okay. A common theme was we want something simple. We don't want our emotions getting in the way. This is as easy as loading up a template and clicking the enable button. All of these pre-formatted settings come in. We can control exactly what hours of the day we want the system to trade. If we only want to trade when the stock market is open between 9:30 and 4 p.m. Eastern time, we could set that as our start and end time. If we want to trade market, if we do where the world, you could trade for this world. You could trade this system today, and you could set exactly when you'd like it to start and stop. We also have settings where you can configure. Thank you, Tim. Let me give it just a minute here. I think I might have lost my connection. Let me know if my audio comes back.
You were choppy for a couple seconds, but you're good.
Okay, thank you. All right, so let me keep moving. And Rob did mention to me that he might need to go pick up his son, and which is fine, Rob. But if I go a few minutes over, I'll end it for you. So let me keep moving. The loss and profit target can be set, which is great for prop traders. We have a number of prop traders on our team, and we're running this system in several prop accounts. And what we're doing is creating a path that we want to share with you to follow to help our prop traders out. Okay, so we know about the rules, we know the daily drawdowns, and we know the guidelines that we need to follow for each size evaluation account. So having this loss target and profit target will keep us within those ranges that we can risk each day. Also, if you're trading a live account, listen, if you're having a bad day and you lose $300 or $400 and that's what your risk tolerance is, and that's about where I set mine, then just shut it off and call it a day, and live to fight another day. And the next day come back and you probably hit your profit target of 1,000. This system can potentially run up the score very quickly, and you'll see in the video that I'm going to show you. So you can set your profit loss, your loss target, and your profit target in the strategy parameters. The others are the conditions that I kind of went through very briefly with you. If you hover your mouse over each one of them, it kind of gives you an indication of what they stand for. In our Discord chat group, we have a resources channel that also has a PDF of all of these inputs. And we also share all of the settings, all of the inputs that go with all the templates. We have a built-in ATM strategy that we've coded directly into the strategy parameters that does have trailing stops, where you can actually enable exit on a line change. And what that'll do is very interesting, is it will keep you in a trade on that second profit target until your 15 EMA changes colors. So if you're in this trade and you wanted to put your second profit target, say at 100, but it goes 40 or 50 ticks, well, you don't want to come all the way back to break even. So you can enable that exit on a line change. So when that 15 changes colors like it did right here, it'll automatically exit you from the trade without giving back all of your profit. So we have a couple of different trailing stop features that are part of this strategy as well. One of the most, I'll tell you, one of my favorite strategies I'd like to show you next. So that was our 1 minute on the NASDAQ. It does take a lot of trades. You could see it took almost 700 trades in a span of 3 months. Those trades, I would say it's 350 executions of 2 contracts. Okay. So on the average number of trades, our average winning trade was 207. Our average losing trade was 177. And we win about 55% of our trade with our 1 minute strategy. Okay. But I'm going to show you a strategy that I'm really excited about. And listen, I don't know why, but people always ask me, they say, hey, do you have something for the ES? People love the ES. For us, it doesn't matter if it's the ES or lean hogs or silver. We just want one that makes money. Mark always said, listen, don't be dogmatic about which instrument you trade. Just make sure you're trading one that makes money. And I've always, that's always stuck with me. So real briefly, because I want to show you the video, I want to show you the, well, before we get to the 5 minute, here's a 30 minute. That's also a brand new one coming out. The 30-minute strategy, very exciting strategy. It has a first profit target of 40, a second profit target of 200. Okay. This one we may want to trade on the micros because there's a lot of risk. With 2 contracts, we have 120 ticks of risk. So, put it on 2 or 3 micros, 3 or 4 micros. This one will only take trades that are in a confirmed trend. It's not going to take many trades, but when it does, it's money in the bank. You could see over the course of 4 months, it has taken, over the course of 4 months, 130 trades. Okay, 130 trades. And if we look at our equity curve, let's see the average winner on this one, 376. Our average loser is 295. So again, our risk to reward is very good. And that's really what's keeping our head above water. And you can see the equity curve. And last but certainly not least, I want to show you the ES on a 5 minute, which is really an exciting strategy to watch. It's kind of like, the personality, if humans have 16 different personalities, well, the market has 16 personalities too. The ES, is like the polar opposite of what the NASDAQ is. The ES is very slow and deliberate. And this month in June, let me tell you, this 5 minute template on the ES has been doing outstanding. You can see from June 1st to June 29th, it's up about just over $4,000. It only wins half of its trades, but when it wins 255. When it loses, it only loses 187. And again, our win rate is, the percent profitable is about 50%. So, and that's also our strategy. I think if we had all in and all out strategies on the first contract, that number would probably be higher. Because if the second target doesn't get hit, it comes back to break even, and that second target, they don't consider a winning trade. So I think this number is a little lower than what you would experience. But if we look at the analysis on this is the ES. You can see in June, it really had a stellar month. It just took off right out of the gate. From June 1st, it had a little bit of a drawdown, that first week of June, but then it just went on fire. And we posted several YouTube videos that I'm going to show you right now. And I'm running out of time. So let's get real quick. I want to show you the chart. The trades that this ES 5 minute take are, and these are trades that evolve. This is a 5 minute candle, and this is a trade that you're in for a good 40 or 45 minutes. It's not, I wouldn't categorize that as a scalp. So they're really fun to watch and they're really exciting. especially when you have a day like that day when the market was really trending to the upside. So with that being said, those are what the numbers look like. That's what the charts look like. So let me show you very quickly a 2-minute video, and then we are going to go to the offer. And if you have any questions, please post those in the chat box, and I'll do my best to answer any questions at the very end. If I don't have time, if you put your name and your number in the chat box, either myself or Jacob will give you a call back. So what I wanted to show you, I think this is the one I wanted to show you. Start here real quickly because this kind of shows. I think this one shows the ES trade real quick, and I'll push it forward some. It's not a long video, but you can see here on my chart that the market internals, those green triangles, all lined up to the upside. Okay, we're running a 5-minute, a 15-minute, and an ES on a 5-minute. And we're running them all simultaneously. And right now, the premise of our system is to follow in the footsteps of big institutional money. And you can see when those green triangles start coming out and that background color of the chart starts turning green, we know that the game is on. And this system is going to start taking trades on a variety of different time frames. We found that the ES and the NASDAQ, they correlate with one another. And which is a primary reason why we're adding gold and crude, because some of those are correlate, but in the opposite direction. So this was a video that I believe ran from 12 in the afternoon to about 2 or 3 in the afternoon. And you'll see that very consistently, it keeps firing off trades. Now you can see on the bottom, my ES strategy just executed the trade. And my 5 and 15-minute both scored really nicely. So while this is running, let me just see if I can answer any questions, if you have a question. Okay, I'm glad my audio came back. Hey, Hadid. I think I just went over the win rate. Yeah, I mean, listen, what kills us as future traders is our risk to reward. I mean, we could do great. We could win 2 or 3 in a row and then get one loser and it blows out, 3 winners. What makes this such a great strategy is we can win 50 or 60% of our trades. And with our proprietary trailing stop and our trade management tools, we could turn that into a winning day. And Tim mentioned that he really enjoyed the grouper picture. Thank you. Yeah, Tim, that was a great fish, man. I tell you. Yes. Okay. Yes, this is recorded. Paul asked if we're going to have a silver strategy. Listen, I mentioned the golden goose. We will have a silver strategy as soon as we find the inputs, the parameters that work best. Let me exit this. So I think you guys get an idea of how the system works and how it runs. It's very exciting to watch. Let me turn the volume off in this. Let's go back to the special offer. I don't want to keep everybody. I respect your time. I know this has been a long event, and I do want to take a minute to go over my offer. Listen, we always like to do something special when we come on Trader's Corner. Oh gee, I apologize. Don't worry, I won't go through the whole thing again. And what we're going to offer here today, we're going to do something very special. We're going to do our 2-for-1 special, being that it's Trader's Corner. It's 4th of July, Independence Day. I guess in Canada, I learned today it's Canadian Day. However, we're going to run a 2-for-1 special offer. Okay. What I mean by 2-for-1, we're going to include not only all of the strategy template that I've gone over here today, which are the automated strategy template, but we're also going to include all of the discretionary chart template. So if you want to take trades on a discretionary basis, if you want to learn trading, if you're new to trading, if you pull up a chart and you run the strategy at the same time and you see where the system took a trade, man, this is a great system for newbies. You'll see exactly where to take your entries and when to sit on your hands. So both the discretionary and the automated systems will be included with this special offer. You'll also be part of our Discord chat group. And our Discord chat group, I'm going to show you in just a second. You'll also have access to that. If you come aboard now, you're going to receive all the additional market. We're going to discontinue that very shortly, but you will be grandfathered in to receiving all additional markets, like we're getting ready to release gold and a few others. You will receive them all. What I like the best is the white glove installation. If you sign up and order today, and Rob is going to be kind enough to put my link in the chat box, and I'm also going to put the coupon codes in there. If you sign up today, you're not going to have to wait and hope to God that you receive something in the mail or the email. It's going to roll over and it's going to instantly give you access to the trading system, licensing instructions, and access to our Discord chat group. Now, your subscription's not going to start. If you come aboard today, we're not going to start your time until after the July 4th holiday. Okay, we're going to give you extra time to get set up, to get licensed, to kind of get comfortable behind the driver's seat a little bit, get your bearings about you, and then come after the 4th of July weekend. That's when the clock will start, and we're all going to be off and running. And just like in the month of June, our trading performance for the month of June, trading the strategies that I've mentioned to you today, you would have made just under $10,000. Well, we want to do a repeat for July. We know which templates are working well, and we're going to share those with you. So come aboard today, use discount code SAVE $100, and that's going to drop your subscription to $2.99 a month. If you use discount code SAVE $500, that's going to drop it down to $19.97 a year. Now, obviously, $19.97 for the year is your best value. $300 a month is about $3,600 a year. So for $19.97, or I guess about about $175 a month, you'll be with us for the entire year. You'll be with us in the Discord chat group for the entire year. You'll have all of our strategies. And listen, we want you to become part of our trading family. So that's really the best value. The coupon code is SAVE $500. And I'm going to go ahead and just make sure that Rob put my link in, which he didn't. So let me put it in now. Here's my link. I put the discount codes and the link to come aboard. Just about out of time. I'm going to show the Discord as we close up. And listen, if you have any questions, if I didn't get a chance to answer your question today, it's been a long day. And listen, I know you're probably exhausted. But if we didn't get to your question today and you have one, if what we showed you sounds like something that you might be interested in, but you just need more information. You can put your name and your number in the questions box, okay? And we're going to hold this price for you, and we're going to get your questions answered. I also put my number, and Jacob's number is right below mine. The code, the discount code and link is in the chat box. So last but certainly not least, I just want to end by thanking you and showing you the Discord chat group, because I really think it's awesome. It really keeps you in touch, in constant communication with everybody on our team. We have our general chat channel. We have the resources and strategy channel, where we have tutorial videos. We have a PDF of all the indicators, all of the auto trader indicators, the introduction. We also have a master. Look at this. I've never seen this, and this is something great. Mark posted in here a master template list where you can click on the link, and it will give you all of the inputs for any one of our templates. So you're never in the dark. The daily results, all of our members post their daily results there. Our prop trading room. So we have a great Discord chat group that you're going to become a member of. If you have any technical issues, our team is always available to jump on your screen and give you a hand. So I just wanted to show you everything that was included should you come aboard today. So again, I want to thank everybody for their time. Thank you, Traders Corner, for having me as part of your presentation today. Really, it's been my pleasure, and God bless everybody. I hope you have a great 4th of July. Love this country, and this is my favorite holiday of the year. I hope everybody sees some great fireworks this year. Happy 4th of July, everybody. Happy holidays. God bless you all.